family affected by the...
It's an area that is...
Yeah. Oh, that's good.
You don't need a minister to start.
Oh, well, I'd prefer to have a minister to start.
Senator Birmingham's, as I understand it, and here he is.
Oh, okay.
Come through.
You right, mate? I'll just kick off and do the statement. Yep. I declare open this meeting of the Senate Economics Legislation Committee. The Senate has referred to the committee the particulars of proposed expenditure for 2022-23 and related documents for the Treasury portfolio, the Industry, Science, Energy and Resources portfolio, and elements of the Infrastructure, Transport, Regional Development and Communications portfolio. The committee may also examine the annual reports of the departments and agencies appearing before it. The committee has set 14 April 2022 as the date by which senators are to submit written questions on notice, and 27 May 2022 as the date for the return of answers to questions taken on notice. Upon understanding Order 26, the committee must take all evidence in public session. This includes answers to questions on notice. I remind all witnesses that in giving evidence to the committee, they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as a contempt. It is also a contempt to give false or misleading evidence to a committee. The Senate, by resolution in 1999, endorsed the following test of relevance of questions at estimates hearings. And I quote, "Any questions going to the operations or financial positions of the departments and agencies which are seeking funds in the estimates are relevant questions for the purpose of estimates hearings," end quote. I remind officers that the Senate has resolved that there are no areas in connection with the expenditure of public funds where any person has the discretion to withhold details or explanations from the Parliament or its committees, unless the Parliament has expressly provided otherwise. The Senate has resolved also that an officer of a department of the Commonwealth shall not be asked to give opinions on matters of policy and shall be given reasonable opportunity to refer questions asked of the officer to superior officers or to a minister. This resolution prohibits only questions asking for opinions on matters of policy and does not preclude questions asking for explanations of policies or factual questions about when and how policies were adopted. In particular, I draw the attention of witnesses to an order of the Senate of 13 May 2009 specifying the process by which a claim of public interest immunity should be raised and which I now incorporate in Hansard. Witnesses are specifically reminded that a statement that information or a document is confidential or consists of advice to government is not a statement that meets the requirements of the 2009 order. Instead, witnesses are required to provide some specific indication of the harm to the public interest that could result from the disclosure of the information or the document. An officer called upon for the first time to answer a question should state their full name and position for the Hansard record, and witnesses should speak clearly into the microphone. Please make sure all mobile phones are switched off or turned to silent. I remind senators and witnesses in the hearing room that microphones remain live unless I instruct otherwise, for example, at suspension or adjournment. For witnesses participating via video conference, please mute your microphone as the default and unmute your microphone when speaking. I ask members of the media to follow the established media guidelines and the instructions of the committee secretariat. As set out in the guidelines, senators and witnesses' laptops, mobile phones, other devices and personal papers are not to be filmed or photographed. I remind everyone in the gallery that they are not permitted to speak or interfere with the proceedings or with witnesses at any point during the hearing. Security is present and they will be asked to remove anyone who does not follow these instructions. Witnesses and senators who are seeking to table documents during the committee's hearing were requested to provide an electronic copy of those documents the day prior to the hearing so that the documents could be circulated electronically during the hearing. Please liaise with the Secretariat if you need assistance. Senators, departments and agencies have been provided with advice on the arrangements in place to ensure The Budget Estimates 2022-23 hearings are conducted in a safe environment. The committee appreciates the cooperation of all attendees in adhering to these arrangements. The committee's proceedings today will commence with the Treasury portfolio, beginning with the Treasury's corporate and macroeconomic group. The hearing will then follow the order as set out in the circulated program. I now welcome Senator the Honourable Simon Birmingham, Minister for Finance. I also welcome the Secretary of the Department of the Treasury, Dr Stephen Kennedy, and officers from the Treasury after a big week. Minister, Secretary or officers, would you like to make an opening statement? Minister?
Good morning, Chair. Good morning, Senators. It's good to be with you to talk about our economic plans and how they're working, but I shall leave that for proceedings. I know Dr Kennedy has, as is customary, an opening statement, though.
Thank you. Dr Kennedy.
Thanks, Chair. I do have an opening statement. The Australian economy has proved itself resilient to the ongoing effects of the pandemic and other shocks. Throughout each successive wave, the recovery has been stronger than expected, and Australians have adapted quickly to living with COVID-19. Key to this is that Australia has avoided the labour market scarring feared early in the pandemic. In February, the unemployment rate was at 4% and the participation rate at a record high of 66.4%. While the surges in cases associated with the Omicron outbreak in January and February caused significant disruption in some industries, the effects on aggregate activity have been relatively muted. We expect that future waves of COVID will occur, and this remains a risk to the outlook. But given our high vaccination rates and increased immunity in the community, our ability to live with COVID has improved, and the impact of future waves is expected to be modest unless a significantly more virulent strain emerges. Two new shocks and sources of uncertainty have arisen: the floods and Russia's invasion of Ukraine. The floods in Queensland and New South Wales have generated severe hardship for affected communities. Individuals and communities affected by the floods face destruction of their home or place of work, temporary displacement, loss of incomes, and a long road to recovery. The direct economic cost of the floods is expected to generate a drag on real GDP growth of around 0.5 percentage point in the March quarter. The impact will be felt through reduced activity, mainly in the local agricultural, mining, retail trade, accommodation, and food and services and construction industries. Trade will be affected, with coal exports to be relatively subdued in the quarter, although this will be to a lesser extent than in previous severe weather events, such as during and following Cyclone Yasi, when coal exports dropped by 7% because coal mines had already been operating at reduced levels. Local agricultural businesses have experienced loss of livestock and output, but at the aggregate level, exports are unlikely to be significantly affected. Over coming years, the direct and immediate costs will be partially offset by increased investment to replace and rebuild damaged housing, infrastructure, inventories, and household goods. The additional demand may place further upward pressure on the supply of materials and labour in the construction industry. Russia's invasion of Ukraine and the spillover effects are creating significant headwinds for the global recovery. The invasion is having a devastating social and economic impacts in Ukraine, and sanctions are causing a sharp economic contraction in Russia. For other countries, the risks include sharply higher energy and agricultural prices, further strains on global supply chains, and likely further impacts on confidence after what have been a tumultuous couple of years. At this stage, global growth is expected to be around 0.75 percentage point lower in 2022, and global inflation around 1.5 percentage points higher, primarily through higher oil, gas and wheat prices. The full effect will depend on the duration and severity of the conflict and the extent of energy, commodity and trade disruptions. Australia is better placed than many countries to absorb these impacts, being a net energy and commodity exporter and having little direct trade with Russia. Australia will benefit from higher export earnings. However, higher fuel and other prices will negatively affect household confidence and consumption and lead to higher inflation. Despite this uncertainty, the outlook for the Australian economy is for strong growth and sustained low unemployment. Real GDP is forecast to grow at 4.25% in 21-22, stronger than expected consumer spending and employment outcomes have led to an upgrade to growth relative to MyEFO. The latest data indicates strong underlying demand. Consumer spending and employment in the December quarter both exceeded expectations relative to MyEFO. Total tax receipts in the 3 months to February are running $12.6 billion stronger than expected at MyEFO. Income tax withholding receipts are $4.4 billion higher than the MyEFO profile, which is consistent with recent strength in employment and broader measures of wage growth. As pandemic-related support continues to taper, private sector activity is expected to become the main driver of growth. Real GDP growth is forecast to grow by 3.5% in 22-23 and 2.5% in 23-24. The unemployment rate is forecast to fall to 3.75% in the second half of 2022 and remain low. Strong household balance sheets, low unemployment and increasing wages growth put households in a strong position to increase consumption and rebalance their demand away from goods and back towards services. Investment will be supported by strong business balance sheets, temporary business tax incentives and increasing capacity utilisation. Record prices for bulk commodities will also boost incomes and support growth in the near term. While underlying demand remains strong, there are substantial risks, both domestic and international. Our forecasts assume that further waves of COVID-19 and new variants will emerge from time to time, but that future waves do not have the same repercussions for absenteeism seen in January. Yet there remains a great deal of uncertainty around the health repercussions of new variants. If a new, more virulent variant emerges so that absenteeism reaches levels similar to the peak in January 22, annual GDP growth could be around 0.5 percentage point lower than forecast, with unemployment up to 0.25 percentage point higher. COVID-19 remains a downside risk to the global outlook. Recent COVID-19 outbreaks in China's port cities and manufacturing regions, including lockdowns in Shanghai over the past week, demonstrate the continued risks the pandemic poses to supply chains. Economic activity in China could well be more affected by the pandemic in 22 than it was in 21, as China has not yet transitioned to living with the virus. The potential for an extended conflict in the Ukraine to generate more significant disruptions is a second downside risk for the global economy. Russia is an important global commodity supplier, producing 18% of the world's gas and 12% of the world's oil. Russia and Ukraine together supply almost 25% of the world's wheat. The invasion has increased the risks of supply disruptions, pushing up and increasing volatility in energy, agricultural and metal prices. While Australia is relatively well positioned to weather these disruptions, other economies with greater reliance on energy and food imports will experience greater economic impacts. A prolonged conflict will increase the risks associated with the negative terms of trade and confidence shocks for these countries. Current events are expected to exacerbate existing supply chain difficulties and to drive a further increase in the already high levels of global inflation. Currently, inflation stands at 7.9% in the US and 6.2% in the UK and is expected to increase further. In Australia, inflation pressures have also picked up, but by a lesser amount. Our central forecast is for inflation to pick up to 4.25% through the year in the March quarter and June quarters of this year. Of this, around 1 percentage point is due to the direct effect of higher oil prices on fuel. Without the reduced excise, inflation would have been forecast to rise to 4.5% in the June quarter. Broader global energy price and supply chain pressures will also put pressure on prices for other consumer goods in the near term. Our forecasts assume oil prices will reduce from the recent peak above $125 per barrel, but remain elevated throughout the forecast period. A more prolonged period of higher oil prices could add a further 0.25 percentage point to annual inflation in mid-22. The assumed fall in oil prices and an easing of supply chain pressures is expected to steadily reduce global inflationary pressures. However, the tight domestic labour market and strengthening of wages growth will see headline inflation remain at the upper end of the Reserve Bank's target band for some time, 2.75% to June 24 and to June 25. Our current expectation is for wage growth to continue to increase. While wages have picked up in occupations with particularly tight labour supply, aggregate wage pressure has been slower to emerge. Nonetheless, there are signs that firms are increasing remuneration to attract workers in a competitive market, for example through the payment of bonuses or higher wages to new hires. The wage price index increased to 2.3% through the year to the December quarter of 21 and is forecast to rise to 2.75% by mid-22 and 3.25% over 2023 and 2024. AENA on an hourly basis, a measure of a worker's earnings in the national accounts, has grown faster than the WPI at 3.5% through the year to the December quarter 21. AENA per hour is forecast to grow by 5% by mid-22 before settling back to around 3.5% to 3.75% over the next 2 years. At budget, Treasury reduced our assumption of the NAIRU, the level of unemployment below which inflation would be expected to accelerate, to 4.25% from 4.75%. Treasury has taken this stance as spare capacity has reduced more rapidly than expected, while wage growth has increased more slowly than is consistent with the NAIRU being at 4.75%. Further, we have not seen the labour market scarring that was feared at the start of the pandemic. In contrast, the observed strength in employment means that more people in the labour force have gained and retained skills that increase their employability, favouring a lower estimate of the NAIRU. As I have noted previously, there is considerable uncertainty around the estimates of the NAIRU. In the budget, we illustrate how wages might vary with different assumptions. Inflationary pressures in Australia are moderate relative to comparable countries. However, the balance of risks to inflation are to the upside, both in Australia and overseas. The stronger and more uncertain outlook for global inflation is raising the risk that inflation expectations in major countries may drift up, making it more difficult for central banks in containing inflation without a policy-induced hard landing. An orderly normalisation of both fiscal and monetary policy settings to support sustained low unemployment and stable inflation will be a key challenge for policymakers over coming years. The central message from the outlook is that the domestic economy is in a strong position. We face the substantial risks that confront the global economy from this position of strength. There is an opportunity to harness the strong underlying momentum in the economy to sustain full employment and see Australians prosper through prolonged engagement with the workforce and stronger incomes. There is an opportunity for monetary policy to normalise following a prolonged period of accommodative policy. Australia, as a net energy exporter, is well placed to manage the risks associated with high commodity prices as a result of Russia's invasion of Ukraine. And finally, high vaccination rates and the adaptability of Australian households and businesses see the economy well placed to weather future waves of Omicron or new variants. Chair, thank you for the opportunity to provide this opening statement. If you wouldn't mind, normally in this session or immediately following, the Foreign Investment Division group attends, and you will have possibly heard that the chair of the Foreign Investment Review passed away yesterday. If you wouldn't mind, I'd have a few remarks to make.
Please, Dr. Kennedy. I think it's entirely appropriate.
Thank you. At Treasury, we were very saddened to hear of the passing of David Irvine, the chair of the Foreign Investment Review Board. David was one of Australia's most respected public servants and a trusted advisor. Prior to joining FIRB, David served as Australia's High Commissioner of Papua New Guinea, Australia's Ambassador to China, Director General of the Australian Secret Intelligence Service and Director General of the Australian Security Intelligence Organisation, ASIO. After leaving ASIO, David was appointed to the FIRB in 2015 before serving as its chair from 2017 until now. David has led the FIRB through a period of significant change in the global foreign investment landscape amid geopolitical developments and technological change. His insights were critical in helping foreign investors and business leaders understand these challenges and the need for the government to respond. We greatly appreciated David's insights and expertise on national security matters to help, frankly, myself and the department more broadly navigate these issues, particularly in relation to foreign investment. He will be greatly missed. Thank you, Chair.
Thank you, Dr Kennedy. Now, senators will be proceeding in 15-minute blocks. So, Deputy Chair, who's seeking the call? Senator Gallagher.
Thank you, Chair, and thank you very much, Dr Kennedy and your team, for coming today on a Friday, and Minister, of course. And I'd like to associate ourselves with the remarks you made about David Irvine. We were similarly saddened to hear of his passing yesterday. Right, to the budget, 15-minute blocks. So maybe if I start with cost of living and I think your comments on inflation. Can you, and a lot of what you said is contained in budget paper 1 in your economic outlook, so, you know, drawn heavily from that. But in terms of, can you explain to me why, I guess why you're so optimistic that Australia won't face the same or won't see the same pressures that we're seeing, say, in the US and the UK in terms of inflation? And also, you mentioned fuel as being, you know, a significant contributor to the inflation figures. What are the other main contributors?
Okay, I might start, Senator, at the end and then move back in. Beyond fuel, certainly what we saw in December were also some higher housing costs coming through the CPI. Some of those, and they reflect really 2 factors in broad terms. The supply constraints I spoke about, so a really large increase in the costs of some of the materials going in to housing, and then secondly, just a stronger demand in that area. Underlying inflation, from memory, Luke, grew at 2.6% through the year, so that was stronger too. That was stronger underlying inflation, so more broadly based price pressures in the Australian economy than we had seen for some time. So there were these specific effects affecting headline inflation, but it's fair to say there was a broadening of the upward increases in prices. What sees us quite distinctly different from Europe and the US at the moment, a factor that's common and one factor that's a little more different to the US. The factor that's common is that energy prices more broadly have risen very dramatically in the US and Europe. So while we have faced higher petrol prices, we have not faced domestically higher gas prices particularly, and other energy prices to the same extent. They've really, they're very much adding to their price pressures in Europe, and that will add further, particularly gas prices in Europe. The second factor that's stronger in the US than it is in Australia is they have got broader wage pressures coming through. So stronger aggregate demand driving through their economy, leading to also, you know, very high prices in demand for cars, for example. Second-hand vehicle prices have gone up very significantly. They have another difference between us. There's another key difference between us and the US. They have not recovered their participation rates or the proportion or the proportion of people employed. So they, like us, they are facing a tighter labour market. But we have been very successful in not only getting people who are unemployed back into employment, but also seeing people come in from outside the workforce. So that's why we're hitting a record participation rate. So we've, now obviously that's influenced by the fact that migration has been at very low levels as well. But we've seen a greater supply response to this increased demand driven by government policy for labour than they have in the US, and so they've seen wider wage pressures, and hence their inflation is significantly higher than ours. In some ways, we've been a little bit behind these countries in the way the aggregate demand pressures are flowing through. And I know there's no doubt we'll talk about it today, a considerable debate about what might happen to wages, but we do expect wages to strengthen in the light of this very strong aggregate demand and these low unemployment rates and now high participation rates. And it's the extent to how I think they'll strengthen. The extent to how quickly they strengthen, we've got our best estimate in the forecast, but they could easily strengthen more quickly. But we'll wait and see. And yes, I hope that's helpful.
Yeah, no, it is. So, and when so in your forecast you have inflation at 4.25 for 21-22, and then at 3, and then declining again in 22-23, and then declining again marginally in 23-24, 24-25. So, what is it? Is it this view that I think it's fuel? Is that the difference? The pressure around fuel prices, is that the 1% there between 4.25 and 3, or are there other things that you think will ease?
So we're hoping, expecting an easing in some of those other supply constraints, and partly and the other issue is partly a rebalancing of the demand. So what Omicron has led to, this is particularly the case again in the US, but it's also hit true in Australia, is that people increase their demand for goods and reduce their demand for services because we couldn't go out and participate more broadly. And this has really rapidly driven that demand for goods, and it's contributed to inflation in those areas. And then, of course, you will have heard of these the shipping constraints and the cost of shipping and moving international goods around, not from the petrol prices, but just because so many goods are being moved around and so much is passing through ports. What we have expected, if the pandemic unfolds in the way we hope, is that substitution away from goods towards services will see some of that demand come out of goods and some of those price pressures alleviate. Some of those supply side constraints are not actually less goods getting through. They're not keeping up with the demand, this extra demand for goods that people have had, because they've demanded more goods than the normal services, going to sport or going out for meals, etc. So that's the second part. And maybe if I just extend a bit further, as you spoke about the inflation beyond that period, really you can think of our inflation forecasts in 2 phases. The first is the alleviation of these shorter term impacts, which is this 4.25 down to 3. But the second is some building of broader inflationary pressures, because we've assumed the unemployment rate at 3.75 is actually below the longer term sustainable unemployment rate at 4.25, and that should build price pressures through wage pressures. Now that's an assumption, and one we may well have been wrong about in the past, where we assumed it was 4.75, and it's why we've put in the budget a version of that sustainable unemployment rate at 4.25, one at 3.75, and one at our older number at 4.75, because we will frankly see different wage and price pressures emerge as we sort of unfold just exactly what is the sustainable full employment level, really, if you like, over time. But given that we chose 4.25 to be internally consistent, you expect, and if you're at 3.25, you expect pressures to emerge. And in the last year of the forecast, we actually have the unemployment rate rising to 4. Frankly, it's a technical assumption because we're taking it back to that 4.25. We're stabilising the economy, and forecasting 4 years out is pretty hard forecasting 6 months at the moment. Forecasting 4 years out is pretty fraught. We wanted to be very clear to everyone how those assumptions, might affect where we could settle. But as I mentioned in a previous appearance, I think from a policy perspective, it's important for governments to test how low we can sustain this unemployment rate without those wage pressures rising, because of the great value of sustaining a very low unemployment rate. And in the years preceding COVID, where the unemployment rate was more in the low 5s, we saw very little wage pressure. Wages were quite subdued. Hence this judgment that we've taken, and in effect it's policy advice to all governments to to test this unemployment rate at a lower level. We feel very confident if we had that wrong that the macroeconomic policy settings would be flexible enough to adjust.
Chair, how long do I have?
15 minutes?
Yeah, no.
Oh, sorry.
Because I've got a few issues.
I'll shorten my
I want no, it's fine. It's just I've got a lot of questions on wages, so I might stay.
So 9:35,
Okay.
another 6 minutes, is
All
that
right.
okay?
We'll come back on wages, I think, because I have a longer discussion. I think in your budget papers and in your statement you say that the risks around inflation are, what's your language, are on the upside?
That's
or yeah, are on the upside, the balance of risks. Could you maybe explain that a little bit, what you mean there? What are the risks that you see? I mean, you do go to it a little bit, I think, but
Yeah.
just in terms of the balance of risks and how you make some of those decisions.
Well, one thing that feeds into our assessment there is it's good to acknowledge where things have turned out to be different than what you expected, both here and overseas. And here and overseas, inflation has come in stronger than anticipated. And so, in some ways, acknowledging the risk of the upside is acknowledging that the assessment in the past has missed, and inflation has been stronger and, frankly, globally, considerably stronger than expected. I don't think, not many would have expected the inflation rates that are currently being experienced overseas. Secondly, we make assumptions about, for example, the decline in the oil price back to around $100 a barrel, and as I pointed out in the speech, if that doesn't happen, well, that we don't get the sort of disinflationary effect of petrol prices falling. They stay at the level. They don't continue to contribute to inflation because they have to keep growing to keep contributing to inflation, but they don't detract from inflation.
Yeah.
So that higher price level stays in the system, and the economy can still adjust to that. But in order to adjust to those higher prices, you'll see an adjustment in wages, profits. It has, it's a supply side shock to the economy. It has to flow through. What's effectively happening is there's less income available to all when less of a good is available and its supply is constrained. So we're acknowledging that the uncertainty, I suppose, around some of those things, the fact that inflation has been higher than anticipated, and probably the last impact is the sheer strength of the recovery in the US, but here as well, has surprised us, which means there's more aggregate demand out there, which may well flow through to either demand for goods driving up prices, and then we presented some unemployment rate forecasts of the past and what we did in this budget, and at every single update, we have revised down the unemployment rate trajectory. So the labour market has been tighter at every single update. And job vacancies per unemployed person, for example, at the moment, are at record highs.
Yeah.
So when you get to these levels, you can get a little surprised by just how quickly these pressures flow through. But they represent our best judgment, but in some ways you might ask, well, why didn't you make it a bit higher and make them balanced? They are our best judgment, but we can just see more factors that could drive higher prices than factors that could drive lower prices.
And just, I'm conscious. Okay, so just for my information, when you settle on your economic parameters, as you say, you could, there is a level of uncertainty in that. How do you actually resolve that? Do you have sort of scenarios, and do you discuss that with government? I mean, are these Treasury's view, these economic parameters, after some discussion amongst all of the experts in the room, and you make that final decision, or is it something that you settle across government and with government?
Well, so the budget is the government's document, and so they are the government's forecasts. But the way the process works is we come up actually with a set of the scenarios that are presented in the budget are ones that we came up with.
Yeah.
And then we go to government and or to the Treasurer and say, well, here are our forecasts, and we, recommend, I suppose, that you put some scenarios in. Not only, normally we have the iron ore scenario. This year we wanted to put in a scenario for higher commodity prices for the next 6 months, because we're hitting another record terms of trade in these forecasts. If commodity prices were to stay where they were for another 6 months, it generates a very significant increase in national income and revenue, and so we wanted to illustrate, have the government illustrate, frankly for transparency, how much those revenue forecasts could move if that conservative assumption in the way we decline commodity prices down over 2 quarters to the end of September. In that decision itself, we sit around and discuss what do we think is the prudent assumption to present to government, and we present it to government. And it's been my experience over a long period of time. There's obviously we'll get asked questions about everything, of course, but that's what we present to government is what you see in the budget.
Yeah, okay. So it's not, you don't present a range of it. Could be, say for CPI, it could be 4, it could be 4 1/4, it could be 4 1/2, and
No.
then you go to government with a set of numbers that you've kind
A
of
lot
resolved.
of things, yes.
Yeah. Okay.
Yeah, but we do. Of course, we discuss them in detail.
Sure.
And frankly, we do try and bring out to them where there are risks and where there are. We were having a bit of trouble, frankly, settling what these commodity price assumptions would look like because they were moving around so dramatically in the run-up to budget. Oil prices, when we first settled our oil price assumption, literally a couple of weeks later, they were at $140 a barrel. So, so it's a bit movable through that period.
Yeah, sure. Chair, I'm sorry, we've gone over time, so I'm happy to,
That's okay.
and then
Thank
we'll
you,
come back to
Senator Gallagher.
Thank you.
And Dr. Kennedy, it's not just oil prices, is it? The iron ore price has exceeded the previous budget assumptions, and the coal price, thermal, met coal, and that has an impact on the budget as well, doesn't it?
Well, particularly the coal prices, actually, in these forecasts. The iron ore price is at very high levels as well, starting off at around $134, Luke, I think, with our assumption declining to around 54 to 55 by the end of September. But metallurgical and thermal coal are at prices well above, or were at prices well above their records. They have fallen back in more recent times. Today, metallurgical coal is sitting a little bit above where we forecast prices to begin to come down, and thermal coal a little below, but still at very high levels. So, and the impact on that for Australia is that it boosts income, of course, and that income will flow through the economy, but it also has implications for the exchange rate. If they stay higher for longer, you'd expect the exchange rate to be higher. So,
and also tax revenues.
It certainly flows through to tax revenues, as we indicated in the budget. Was it 29 billion?
29.5.
We'd see a 29.5 billion upgrade, we think, to company tax revenues if these commodity prices stayed at roughly their same levels for
That's quite extraordinary.
for 6 months.
29.5.
That's 6 months alone, and then drop to those longer term levels immediately. So that is a estimate based on sort of all other things given, if you like. So if commodity prices stayed at that very high level for a long time, we may see other adjustments, such as a higher exchange rate, for example, which would moderate other influences.
Yep.
But we wanted to be through the government, the public, a broader indication of just how significant these influences are.
I'd like to ask some questions about the employment numbers, which I think are just extraordinary. If we go back 2 years when the COVID pandemic started and we look at where we are at in terms of employment, you made the comment, Dr. Kennedy, that there was a fear of scarring in the employment market when the pandemic hit. The fact that that scarring has not occurred, and I'll delve into that a bit further, that's an indication, isn't it, that the policies implemented by the government to make sure labour force participation continued and could bounce back actually worked in practice.
Our judgment is that policy measures such as a JobKeeper, for example, were very effective in leaving in people staying attached to their job, even if they were stood down at 0 hours, for example. And what I think has gone on in those countries where the measures to support the economy were less focused on those types of wage subsidies and more focused, for example, on just support through welfare payments, is that people were stood off or were let go permanently, and then there is quite a disruption in how they rejoin the workforce. So I think this is one of the issues that the US is facing at this time, and it's the reason their participation rate and their proportion of people who are employed, as a proportion of the population, is not back at the levels that we've seen ours recover quite so quickly, because they left their jobs, Chair, and now they find a new job. And it may well be one of the reasons they're seeing a little bit more wage pressure, because as they find a new job, they're actually seeking a higher wage, and we know turnover tends to be attached with higher wages. So I do think the composition of the policy measures has assisted, and I do think in reducing that scarring, and I do think you can see that compared to other countries. Having said that, other countries also, similar to Australia, put enormous amounts of support into the economy, all learning the same lesson that of past recessions, that if one doesn't, frankly, even slightly overcompensate potentially for that downturn, and the downturn gets ahead of you, you can spend a very long time trying to catch back up and drive back down the unemployment rate. So on both the size and composition of the response, I think have both been important to effectively seeing little or no, frankly, labour market scarring.
And in fact, on the one hand, talking about scarring, but on the other hand, there are record participation rate figures, or near record participation rate figures. Could you go into that in some detail, especially with respect to young people? And I think many of us were concerned that if there were labour market scarring, it would hurt young people in particular, and that is maybe a lesson of previous recessions, and also workforce participation amongst women.
So so firstly, starting with young people, it's nearly always the case that young people will suffer the labour market effects of a downturn more adversely than any other workers, because they are looking to get their first job. So if they're delayed in getting their job, in some ways it delays their opportunity to get on the jobs ladder subsequently in an ongoing basis. And, Chair, we had seen prior to COVID since the GFC, the labour market outcomes for younger people, from my perspective, hadn't been all I hoped they would be. But you are correct that in coming out of COVID, we are seeing very pleasing outcomes for young people. We're seeing very high participation rates, lower unemployment rates, somewhat related, much lower underemployment rate.
I was going to ask you about that. That underemployment figure is really positive, isn't it? I saw unemployment rate has also fallen 2.2% down in terms of relevant comparative periods. Is that correct? That's
right, and that's. I mean, it goes. There has been a debate around whether that unemployment rate, that Nauru conversation I was talking about earlier, where that unemployment rate was fully reflecting the strength or otherwise of the labour market, because we had carried higher underemployment rates for a while pre-COVID, post-GFC, but they are also down, as you just mentioned, significantly following COVID. So Yeah, they're frankly very good outcomes. Just finally, you asked about the outcomes for women. The female unemployment rate is at very low levels we haven't seen since the 70s from memory, and participation at record highs. So obviously there's still a gap between male and female participation, but it's very pleasing to see these very strong labour market outcomes for women.
And in terms of looking forward, Dr Kennedy, one of the figures in the budget which stood out to me was the rate or number of unemployed people per vacancy.
Yes.
Is also very low, 1.6, which suggests that there are a lot of jobs still available.
There are.
And the number of unemployed people available to fill those jobs is relatively low. How's that 1.6 figure compared to other times or other periods?
I'll just confirm with yeah.
So that,
You better tell them.
yes.
Tell us who you are.
Chair, Luke Yeaman, Deputy Secretary, Macroeconomic Group. That's absolutely right. The levels of vacancies we're seeing against the number of unemployed people is at a record level. So we are still expecting
How
very
long
strong
have we
momentum.
been measuring that statistic?
I'm not sure.
78? 79.
79.
So it's a
79
record
seems
level
to-
since 1979.
That's my understanding, correct. And that does suggest to us, along with the range of other factors, that there is still substantial momentum in the labour market, particularly in the near term.
So then you look, Dr Kennedy, at the longer term forecast, which, as I understand it, the current unemployment rate figure is,
It was 4 in February from memory.
4%.
but you're looking forward that we expect that to fall down to 3.75%, 3.75%. Is that correct?
That's right.
And then looking forward over the next few years, what's the expectation, given we've got this momentum, as is evidenced by the unemployed people per vacancy being at a record low?
So at this stage, we expected to hold at that level, and on the other side, the record participation rate to hold around its level. Participation over time the aggregate participation rate will begin to become more affected by the ageing of the population. But we have frankly been surprised that not only how quickly that unemployment rate has fallen, but how many people have come in from outside the labour force, hence driving up the participation rate. It's a really welcome sign. It's part of the story that you were talking about with increased female participation, but it's true for men as well. So we're effectively forecasting a holding at this very low rate, and effectively with the workforce very much sort of fully occupied as growth eases back towards, if you like, equilibrium trend levels. If those forecasts unfolded as expected, then that would be enough to hold an unemployment rate at that level. So I spoke about this last time. We are saying that the sustainable rate is 4.25. It could be lower, could be a little bit higher, but let's say for a moment it's around there. Or
That's
even
the Nauru rate.
the Nauru rate. Even if it's lower, that rate can be held with inflation at 2.5, wage growth at inflation plus whatever productivity is,
Yep.
and growth at its longer run levels. You don't have to grow any stronger to hold that rate at that level.
Excellent.
And that's the sort of sweet spot, I guess, that all governments are aiming for to get their economies. Now, of course, Chair, there will be shocks. As we've seen, things will happen. They could be positive or negative. They could be positive shocks on the terms of trade. They could be negative shocks from other sources of global demand. But you're in such you're just in such a better position if those shocks are hitting you when you're at that full employment level.
Absolutely. It's
to be able to get back to it more quickly than
Absolutely.
if you're not at that level.
Okay. Thank you, Dr Kennedy. Senator Cox, you're seeking the call?
Yes,
Thank
thank
you.
you, Chair. Can I go to the housing affordability issue? Can you explain to me how the Home Guarantee Scheme makes housing more affordable?
They'll be
Well,
done in fiscal. Do you want to do it here? I'm happy to do it. while I'm here.
We can do a little bit of it while you're here if you like, and then if Senator Cox has more detailed questions, touch on it in fiscal. But obviously
So we are going to do it in detail in that, but very happy to do it here now, Senator, but we are also going to do it in that section. Yeah. Did you get the question, Jenny?
This was about the home guarantee scheme.
Yes, that's
Yeah.
right.
Do you want to repeat the question, Senator Cox, just for the witness?
Thank you, Chair. Can you explain to me how the home guarantee scheme is making housing more affordable?
Senator Cox, whilst Ms Wilkinson settles in, I'd just probably introduce at least that by pointing out, the primary objective in the home guarantee scheme is to help Australians into the market sooner and faster than would otherwise have been the case, enabling them to not have to pay rent whilst saving for a deposit, but to be able to instead get into the market and start paying off their mortgage instead of paying that rent simultaneously. So it's an ease of entry that has proven through the delivery mechanism working with banks to be an effective means of ensuring that we're supporting people into the market who can afford to pay their mortgages, but simply would have had difficulty in saving the scale of deposit required initially. But now that you've settled into the chair, Jenny.
Thank you. Jenny Wilkinson, Deputy Secretary, Fiscal Group. So the Minister's done a very good job of explaining how the home guarantee scheme works. The home guarantee scheme is the scheme that allows individuals to get access to loans with a lower deposit effectively. So there's different arrangements for different parts of the home guarantee scheme. It's administered by NIFIC, the National Housing Investment Corporation, and there was an expansion. There's been a significant number of home guarantees which have been offered over the past several years, and there was a significant expansion in the budget.
Okay. So by allowing people to borrow more money, you're saying that this actually makes housing more affordable? Is that what you're saying?
So one of the challenges, so there's different challenges for different cohorts of people in getting into the housing market. And one of the challenges is the deposit hurdle. So there are people who have the income that would enable them to service a loan, but they find it challenging to accumulate the sort of deposit that you would need to accumulate to get a loan from a commercial bank without taking out lender's mortgage insurance. So essentially this reduces the deposit hurdle for those individuals.
Okay. So all else being equal, the home guarantee scheme will actually increase housing prices, won't it? If it helps people borrow more money so that they can pay more for housing, that will push housing prices up. Is that correct?
Senator Cox, it's not about helping them borrow more money so that they can pay more for housing. It's about helping them be able to, in aggregate, have the funds to pay for the house sooner, so they're not having to spend as much time saving for the deposit. Like if you're having to wait to save for a 20% deposit, and then it's many years of paying rent, and while you're paying rent, trying to build up those savings. And our government has implemented policies in terms of the First Home Super Saver scheme to help people save faster. But if you can instead get into the market at a 5% deposit rather than a 20% deposit, then you're no longer having to pay rent while trying to save for that deposit. You're instead diverting those rental costs into paying off your mortgage sooner.
I think that might be your view, Minister. But what we do know, and Sal Aslak, who's a fair-headed or hard-headed economist, in his maxim, he actually says that anything that allows people to spend more money on housing than otherwise has one effect, and only one effect, is that people spend more money on housing than they otherwise would, which means that they increase the potential for riskier debt.
Senator
So
Cox,
won't the expansion of this home guarantee scheme actually mean people are taking more riskier levels of debt?
Senator Cox, just before the witnesses answer that question, could I just ask for the record, where are you quoting that excerpt from?
There's an economist called Sal Aslak.
Yep, yeah, I know.
Yep.
Saul Aslak. And where's that quote from?
I don't have the reference, but I can get that.
Okay, all right. Are you happy, witness? You can answer the question?
We can answer the question in the general,
So,
Senator,
actually-
for the point you're making, regardless of the quote. And I touched on that, Senator Cox, in my initial remarks, which is that the home guarantee scheme we deliver still relying on Australia's financial institutions to determine whether or not somebody can afford the loan that they're taking on. And so it's a very important check and balance there. And Ms Wilkinson or others may be able to speak now, or it might need to wait for fiscal group in terms of what we've seen around the defaults under that scheme. But the reason we have had the confidence to expand it is because we've seen the exact opposite of what you've suggested, and that is that Australians to date who have been helped into this scheme and program have, thanks to the approaches of Australia's banks and financial institutions, demonstrated an ability to be able to meet their mortgage obligations and enjoy that benefit of, as I say, not having to pay their rent whilst saving, but instead being able to pay off their mortgage. Recognition as the Retirement Incomes Review found that this is one of the fundamental pillars of setting people up for economic security throughout their lives.
So what we know is that Australia has some of the highest levels of household debt in the world. So is there any evidence that people are not borrowing more money? Like because they have access to it? Is there any evidence that actually shows that?
Senator, movements in house prices are there on the public record to see that there was a period of growth. That period of growth has slowed in recent months. And again, in terms of people's borrowings and their position in relation to those borrowings, officials may be able to give some information, but what Australia's banks would be and are reporting at present is that many Australians are actually ahead of their repayments. Savings rates through the last couple of years have grown, and Australians have put themselves in a position where, in fact, they are repaying faster in this environment of lower interest rates than they had previously been doing.
Senator, I could...
Even though, sorry, yes.
Sorry, I could add to that answer by the Minister if it helps. Just a couple of brief points. Firstly, APRA, the Australian Prudential Regulatory Authority, published a systemic risk assessment in December 2021, which found that while the banks are well capitalised, most Australian households remained well placed to service their debt. And they also, in October, instructed banks to use an interest rate that is at least 3 percentage points above the loan product rate when assessing the serviceability of home loan applications. So, as Ms Wilkinson said, there are two aspects here. There's the deposit hurdle, which this scheme aims to assist people with, but then also the ongoing serviceability costs. And APRA has increased the rate at which they assess borrowers to ensure that they can meet those serviceability costs at a higher rate of interest as well. And as the Minister said, the number of people who are ahead on their home loan has also substantially increased over the past year in terms of their prepayments.
I do want to acknowledge
So there's actually been that increase, is that right? From APRA's perspective, that they've said the risky lending has gone from 17% to 24% in new home loans just last year, is that correct?
I don't have that figure to hand, Senator. Our colleagues in Markets Group may have more information on that, but I don't have that figure to hand. I'm not disputing it. I don't know the answer to that question. So.
I think that's right, Senator. I do want to acknowledge one of the facts you raised earlier. Australia does have high household debt ratios globally. There's no doubt about it. Australians have a very strong preference for housing assets, and so we do hold relatively high levels of debt in the household sector, and as APRA has made the point many times in the past, a lot of that debt is held by wealthier sectors of households, but this strong persistent demand for housing, stronger than many other places, and frankly also more recently these very low interest rates have seen higher house price growth in some capitals at rates they hadn't experienced or perhaps never had. For example, Hobart, which I've spoken to Senator McKim about in the past. So I don't, while I just want to acknowledge that that underlying fact that you're talking about. I would say, though, it's a persistent feature of the Australian economy. And because it's persisting, and, it's something we seek to understand over time, these policies that try and assist younger people to access housing, at least distributionally, may end up still being quite important. Of course, it's the fact that if you, as Saul has pointed out, if you do something that increases demand, it will in part, of course, flow through to higher prices. But if interventions are not made for younger people to access home ownership for those who wish to, then these deposit hurdles, which is so not so much the serviceability issue, but these deposit hurdles, particularly in capital cities, really start to see a younger generation potentially not able to access the housing market. But I want to acknowledge your underlying concern that that there has to be a balance across all these measures. Ultimately, they would be assisted by a stronger housing supply. There's just no doubt about that. The Commonwealth Government doesn't happen to hold many of the levers there, but in some of those markets, and Hobart would be another example, the inability of that market supply of housing to keep up with the demand is a very strong contributor to higher housing prices, much stronger than some of the other impacts we're talking about.
Thank you for acknowledging that, Dr. Kennedy. And what we do know is that housing prices have gone up that 25%, particularly since the start of the pandemic, and that's more than 5 times the wage growth over the same period. So I'm just trying to understand, just to wrap this question up, like how is it that putting money into a scheme like the Home Guarantee Scheme into the housing market is possibly the solution to the current national housing crisis that we have and that we are facing here in Australia?
Senator Cox, it's certainly not the only measure either that our government is doing or would like to see from other levels of government. So in this budget, we provided a further $2 billion into the National Housing Finance and Investment Corporation to increase their ability to support affordable and social housing solutions around the country. But in addition, I would certainly highlight the work of my colleague, Mr. Falensky, from the House of Reps, in terms of some of the issues he's identified around supply of housing and particularly in terms of land availability and other issues that are in the domain of state and territory governments. We have proudly acted to try to help more young Australians be able to get into the housing market sooner by addressing some of these hurdles, especially in relation to the deposit barriers that exist. It's a scheme that has been working, which is why we've expanded the scheme. I understand more than 40% of participants in the scheme to date are ahead of their loan repayments. So even in this cohort of individuals accessing this scheme that enables them to enter the market with a lower level of deposit, you've got close to, well, more than 40% of them paying off their loans faster than is required, and that's a feature, as I acknowledged before, more broadly across home loans. But there are certainly supply side issues in relation to the housing market as well, and the government continues to encourage states and territories to ease some of the regulatory burdens that impinge on some of those supply issues.
Senator Cox, we've come to the
One more
end.
question and then I'm done.
Okay,
Should
thank you.
take me like 5 minutes. Thank you, Chair. I just want to go to
you've only got 1 minute left. Sorry.
1 minute.
Yep.
Okay.
Sorry, Senator Cox.
Absolutely, go as fast as I can. Thanks,
I need
Chair.
to pass the call.
Yeah, obviously, because I'm getting some really long answers. Budget papers show that the wages grew by 1.7% last year and 2.25% the financial year. And I know Senator Gallagher already asked some of these questions around wages. So I just wanted to pick up that the budget also says that the average earnings per hour are expected to increase by 5% through the year to the June quarter of 2022. How is that possible?
So what the National Accounts measure does is it basically takes all the remuneration being paid to workers, bonuses, sign-on bonuses, any form of payment, and it then effectively divides by the number of people and the number of hours they worked, and that gets you to that hours basis. The wage price index, in summary, I hope I get this right, and colleagues will correct me if I'm wrong, finds effectively a job that's paid whatever it's paid, and it finds out what it's being paid in the next quarter, and it looks at the change. So it doesn't capture, if that person, let's say it's one person for a moment, got a 2% increase in their wage across the course of the year, but they were also paid a bonus, it's not inside that number, but it is inside the other number. There is a wage price index inclusive of bonuses. That grew by 3% through the year from memory most recently. I'll get my colleague to confirm. So, so that captures that bit. The other bit that's sort of not quite caught is that if there's changes in the sort of composite, it's sort of following a fixed group of jobs from memory. If there's, I'll confirm all this for your notice, but if there's changes in the composition of jobs, that they are not going to be picked up as quickly in the WPI as they are in that other measure, which is just say adding up all of our wages, all the compensation we get paid and everyone else, Labor gets paid, and then just dividing it in that same way. One of the reasons people tend to focus on the WPI and not the National Accounts measure is because it strips out some of the noise. You know, things can be moving around a lot. So the WPI is still an important measure of wages. But if you want a full sense of what Labor workers were compensated, you go to that National Accounts measure. But mostly economists tend to look a lot at the WPI measure because it strips out some of that noise. Sorry, this is a long answer, but the last thing I'd say is the AENA measure tends to pick up the strengthening in wages prior to the WPI measure, because a strengthening in compensation typically comes through non-regular payments before it comes through regular payments, like a bonus to stay at work or something like that. And so we presented a chart in budget which shows the deviation in those two measures and how it changes over time, but then how it settles down. And that's what our forecast suggests, that AENA eases off and the WPI comes back up, and then they start to grow with a gap, but at similar rates. Okay. But I will have drawn heavily on old history in that answer. I'll confirm it on notice for you that I got it all right.
The difference between AENA and the WPI was never going to be a short answer.
Yeah, it sounds like it's very, very complex. Okay. So I just want to, and just pick up on your point there that there will be, so the wage growth.
Sorry, this is the last question. Senator
It is
Cox.
the last question.
Okay.
Thank you, Chair. Thank you for being so patient. So we're expected, so I'm just trying to understand this. The next 3 months, which happens to be time of the election as well, how timely, that the wages growth will actually spike at 1.5%, but then go back down after the election. Is that correct? Or have I missed something in that?
The AENA forecast, do you mean?
Yes.
To be honest, that's just our forecast based on what we've seen in the most recent national accounts and how we expect it will play out. The other reason it's relevant is it is the number that drives the Labor. It is the number that drives the tax upgrade, not the WPI. So if we need to be transparent with all about, you know, why, Treasury, do you think income tax receipts are going to rise by, I think, around $90 billion across the forward estimates? It's the AENA number plus employment that drives the upgrade to not the WPI number, because AENA is actually the measure of Labor income, the actual measure that income tax is paid on. So that measure is always there. And given the significance of the size of the income tax upgrades, we thought it was important to draw it out. But anyway, that's what we did.
Okay. Thank you very much, Dr. Kennedy.
Thank you, Senator
Chair.
Cox. Now, Senator Gallagher, I did give some indulgence, Senator Cox. I'll be providing the same to you. So if you'd like a 20-minute slot.
Thank you. Luxury. Just to... so that's your explanation for why AENA features prominently in the, you know, in your economic outlook, I think, statement 2, is it? That it's linked as the next way of explaining some of the upside on income tax receipts.
But it's partly that story. It's also partly to when I talk about upside risks to inflation, for example, that come from domestic sources, I expect them to be first seen, frankly, in AENA before I see them in WPI, because that measure is a slow-moving measure.
Yeah,
Let me put it that way. And I frankly think to be, well, the RBA will do its own piece, but it's a measure there that we're talking a lot more about, because if wage price increases come through, given where the unemployment rate is and other things, they could come through quickly, and that's where they'll turn up first. And so we're starting to watch it closely. We've always watched it. We certainly thought people would want to understand how is it that you could get, a $90 billion upgrade to income tax receipts and only have wages of 2 3/4 and 3 1/4, etc., and employment where it is. And because frankly that wouldn't add up. It only adds up if you use the AENA number and the employment number to get to that wage upgrade.
If I could add one extra point to that, I completely agree with that answer. The other aspect from a macro sense is that during the pandemic we saw quite a drop-off in labour mobility as people obviously sort of hunkered down during the pandemic and wanted to hold on to their job. We've seen quite a significant pickup in labour mobility as the emergency supports have come off and as the labour market has picked up. And so a lot of job shifting, a lot of people moving into higher paid roles and seeking those higher wages in different roles and opportunities. And so again, that's not going to show up immediately in the WPI. It's going to show up in AENA. So there is this dynamic in the labour market at the moment which AENA better reflects than the wage price index because of those compositional factors that Dr. Kennedy mentioned.
The last thing I suppose I'd say is AENA didn't really tell us anything through the pandemic itself, because the compositional changes were so dramatic, because employment was falling and hours were falling because of the pandemic. So it'll only now, we think, reveal information. Through the pandemic itself, it was a measure that none of us were really we were watching it swing around because of those movements in the national accounts composition was so dramatic. Hours were falling so dramatically when the lockdowns were occurring that you couldn't read it. And you can only just begin to really read it now, but it is... It's a crucial part of our revenue forecasting, and
Yeah. Okay. What does the data you get through AENA give you other information, like where, what sectors of the labour market are seeing, the benefits or the increases in pay or the bonuses? Are you able to sort of pick out some of that information, and what do you know from that?
So we can, across a range of measures, see where the greatest tightness is and where the greatest pressure is coming. And certainly, I'll draw out some figures, but certainly professional services at the moment across the board are growing quite strongly. The construction market is another area where we've seen particularly strong wages growth. So those are the two that stand out. I'll just refer if I have any others, but those are the two that have been probably seeing the greatest amount of, particularly in that area of bonuses in the professional services sector. There's a lot of competition currently in the market, and we're hearing this also through our liaison streams as well, that the big accounting firms, the professional services firms, there's a lot of competition in that market. Construction is the other one that sticks out in my head.
What about at the, it's sort of at the lower paid parts of the labour market, workers on minimum wages,
hospitality.
And aged care, care economy more broadly, supermarkets, cleaners, what's happening there?
I'll see if I can provide anything further, Senator. I mean, we don't break down, we don't have wage measures that break it down by income.
All right. It was more
categories, but
you slot them into the industry category. I
mean, certainly, I think I'll just double check this because I'm just trying to find the right page in my folder. But in the hospitality sector, we are starting to see more competition for workers as we've emerged from the crisis. There's certainly an area there, accommodation, food services, and retail, where there is increased competition, and again, we're hearing that through our liaison sources. Some of the public sector, sort of heavily dominated sectors, obviously have their own arrangements, EBA arrangements and other arrangements that take a little longer to roll through in terms of wage increases. as a general rule, including
So
state-based.
that's in the public sector, did you say?
Yeah, so some of the public sector wages, but certainly those are the ones that stand out. I'll see if I can find anything further,
Yeah.
Senator, but those are the ones that stand out: construction, professional services, and some of those hospitality and retail.
Okay, so you're not seeing much in the public sector by the sounds of that because of enterprise agreements and things like
And
that, is
decisions
it?
people made.
Yeah.
Some state governments froze wages.
And the Commonwealth, yeah.
The wage setting situation in the Commonwealth is to follow the private WPI,
Yeah.
which means public wages lag a year, whatever the private WPI is doing, and so
Yeah.
in a
Crazy.
strengthening wage situation, they will be growing at the level of the previous year till the next year, when then they go up again. So that was an arrangement. That
Yeah.
is different to Phil's Lowe, the governor's spoken about this issue. I mean, public wages are a little lower through this cycle. In the past, they've tended to sort of just stick at a pretty constant rate, and private wages have gone up and around them. But they have come down a little over, not surprisingly, given private wages were so subdued for some period. And so they are, that's why, again, they are pulling down on the aggregate wage measure, and as
Public
Luke said,
public wages,
and they'll
yeah.
probably respond with a lag. Now, depending on how they respond will depend on that dynamic that we've got going in the next year or two. But they are, I don't know, at least 20 to 30% of wages. So it's an important consideration.
Yeah, sure.
I can add, Senator, a couple of additional points. Certainly, I'll confirm that accommodation and food services and retail trade are areas that are seeing relatively stronger growth currently. Manufacturing is also seeing some growth. And of the public sector, I think healthcare and social assistance is one where we have seen slightly higher growth than some of the other aspects of the public sector, particularly that healthcare sector related to the emergency response, I think. And as I said, professional, scientific and technical services as well.
Yeah, okay. In terms of wages in general, Dr. Kennedy, you've spoken before this committee a number of times, I think, about the link between wages growth and productivity, and how important that is. Productivity is in underpinning or ensuring that there is appropriate wages growth. You don't mention it in your comments today, or you have it not in your speech. And what's your view now?
Well, it's the same as the past. In this sort of equilibriums that I was talking about earlier with the chair, the growth in real wages is pretty much entirely driven by productivity. So if we had zero productivity growth, wage growth consistent with stable inflation of 2.5 would be 2.5. If we have productivity growth of 1% a year, wage growth consistent with inflation of 2.5 would be 3.5. If we have 1.5, it would be 4. And that's what we've seen in the past. So our view is that productivity will be crucial to driving real wage growth in the future. And now, it isn't always the case that those increases in productivity have flown through to real wages. I've seen some research which has shown in the past that some of the increases in productivity across pre-COVID, across that decade, were not finding their way fully into wages, which has led to this debate about wage setting behaviour and the shape of the labour market. My own view is the second factor at play there may have been insufficient aggregate demand. Or, in other words, not having the unemployment rate as low as it sort of can be to generate that sort of virtuous productivity cycle and the return to labour income. Hence, my ongoing focus on ensuring that we test and see how low we can sustain that low unemployment rate. Because I also think that is important, frankly, for what happens in productivity when you are fully employed and firms are competing hard for labour. The firms have to work hard. They might have to invest more in other capital to put against those people that are working there. And when they put higher quality equipment next to people, they'll earn more money and they should get higher wages. So there's, again, a virtuous cycle when we ensure that our economy, when we do the best to ensure our economy is at full employment. We assume, so I may as well jump to this because I think that's where we're headed. We assume over the medium term that productivity goes back to its 40-year, actually. 30, is it 30? Good. 30-year average of 1.5. But we haven't had productivity growth of 1.5 for a number of years now. And the last productivity cycle, which is probably, which is what the ABS recommends that we look at to understand the most recent trend in productivity, was 1.2, not 1.5. We've chosen to stick at 1.5 because, frankly, it's the way we've assumed productivity growth, well, at least since I was involved with it, since the early 2000s in the IGRs, and it's just a very transparent way of driving a longer-term trend. But if that longer-term trend is lower, then real wages are lower over the longer term.
And so did you just say over the medium term you expect it to be one, or that's what you're saying, that's 1.5?
Yeah.
So what does that mean across the for the next 3 years?
The forecast.
Yeah.
You
3 to 4 years.
Well, you can get in some ways a broad sense of it by looking at the gap between, it'd probably be AENA, but let's say the WPI and GDP growth, which I think is around 2.5, Luke, by the end of the forwards, and the WPI around 3.5. So that's about strengthening towards about 1 percentage point of productivity, roughly speaking. Once again, we're going off the top of my head, but I'll confirm it for you. But roughly speaking, that implies a productivity growth rate of around 1% in that period, strengthening towards that 1.5 over the medium term. We don't jump productivity back to 1.5 straight away because, frankly, it's not there in the data at the moment. We grow it back towards that medium term, which encompasses a whole range of assumptions about what the economy looks like as it grows in a stable way over time. To finish, given the likely future events, the focus on productivity by governments is crucially important to future real wages, in my view.
Sorry, I just missed the beginning of that.
The focus on productivity
Yeah.
is crucial to future real wage growth from my perspective.
Yeah. And what do you think would deliver that?
Sorry.
From your, you open the door. From your
It starts to sound
perspective,
like it's asking for a policy opinion, Senator, but I know that we give Dr. Kennedy some licence for showing his expertise in these hearings.
the door was slightly ajar. From your perspective, can you give me a bit more of your perspective, Dr. Kennedy? Not allowed.
Well, perhaps
I'm looking forward to seeing all the ideas that are presented in the upcoming period, Senator.
yes. I mean, I suppose the point is that, Dr. Kennedy, that we did have the Productivity Commission produce an extensive report, Shifting the Dial. We talked about it last time we were in estimates. That report hadn't received a response at that time. Has the response been provided to Shifting the Dial yet, Minister?
Senator, no, not off the top of my head.
Right. Any progress on the next productivity review then that's been commissioned after you didn't respond to the last one?
Well, Senator, our responses in terms of policy settings, what we're doing was and is built on through successive budgets. So the work which you can see yielding dividends in this budget around the full expensing measures to encourage business investment shows very strong projections for business investment, particularly non-mining business investment this year and next year. The work in the skills agenda, the infrastructure agenda that you can see running through successive budgets, and again particularly this year, again are measures to lift capacity across the economy and improve productivity. So in that sense, the government takes that advice from some such reviews and acts on it in different ways through the actual policy measures that we're implementing.
Senator,
Mr. Joyce does that, does he?
Senator, I can confirm with my colleagues, but it's my understanding that the next 5-yearly review from the PC has been commissioned by the Treasurer The terms of reference have been
That's good.
released.
Yes, it has been.
and
We may as well
to
commission the
report next year in
one.
January.
Yeah, that's good. Where was I? So on wages, like just, for the last, 8 years or so, wages have flatlined, they've stagnant. So why do you think that was the case? Why haven't wages grown at the sort of historic average? And is it just the fact that our borders essentially have been shut, so demand for labour has increased here on the supply side, that's actually driving it? Are you able to look back and think, why didn't this happen even with an unemployment rate of 5%? Why weren't we seeing wages growth?
Yep, so just on past wages growth, well, just so we're clear, they grew at lower rates than what we'd seen in the past.
Yeah.
They did not grow, so the growth was subdued, and so we have to acknowledge also what we think is a domestic and a global influence. This was true around the world. So we saw a slowing in global productivity, a slowing in productivity in Australia, for example, and more subdued wages growth here and around the world. We did see pre-COVID some strengthening in wages in some countries that had lower unemployment rates, which goes to my issue about the level of aggregate demand and exactly where the unemployment rate sits and when you would expect wages to strengthen. But there was, and there is still, an ongoing healthy debate about even this trade-off, this sort of unemployment, inflation or unemployment wages trade-off. Was that changing over time? Why weren't we seeing the wages, etc.? But in the US and New Zealand, from memory, in the UK, where they hit lower unemployment rates than us, they saw wages strengthening, and they've certainly seen them, particularly New Zealand, strengthening once they've got to these lower unemployment rates than we have. In terms of understanding why has this global productivity slowdown occurred and that it's spilled through to Australia and what's the future, unfortunately, most of productivity is a bit of a mystery because it's the bit that's left over at the end that we can't explain. So, I'm always surprised how confident people are at explaining productivity because it's the residual. It's actually the thing that our economics doesn't explain. Hence why I tend to use sort of longer term trends as a guide to where we might go. But yes, a long debate then ensues about why is productivity slower now than what it has been in the past, and
Yep.
is it likely to strengthen? In terms of looking forward, we have lost part of the labour market through having less temporary workers here and those sorts of issues. I think that's only assisted in part, and frankly a small part. The most significant thing driving improved labour market outcomes at the moment is the extent and composition of the fiscal policy response, which has really increased significantly the demand for labour. And while that is tapering out, I think that kind of virtuous cycle that gets set up will persist as migration recovers, and it takes me back to those two things I guess I talk about a lot, is keeping that unemployment rate low, and that will in and of itself help productivity, but then also the measures. And apologies for bursting out into laughter when you asked me that question, but in broad terms, there are a common set of areas that everyone is going to be aware of that are going to assist this country improve its productivity relative to others. And that is going to be the quality of your workforce, so investment in skills, the quality of your infrastructure, and the quality of your markets, how efficiently they allocate resources amongst markets, all those sorts of things. More broadly though, Australia is not going to drive global productivity. We should accept that. We can we can get faster to that, get closer to that frontier. But global productivity is in some ways given to us by how quickly productivity is growing in the US and some of the productivity leaders and where the very large scale economies are producing innovations. But what Australia always wants to be is as close as that possibly can be to that frontier, and that will depend on, as I said, how skilled its workforce it is, how efficient its capital stock is being deployed from the private sector to energy to transport infrastructure, and it will depend on whether we put impediments for allocating resources to markets that will give us the best return. I'm sorry, it's a very general response, but hopefully that was a bit more.
But Jess, do you want to jump?
Yeah.
I don't know what our time's doing. I've got a couple more, and Jess has a few.
Yeah, how long do you have, Senator Walsh?
Few.
I'm just trying to organise we've got Dr Kennedy until 11:15. So.
Always depends on the answers, but five,
Okay.
several.
Can I just quickly, 5 minutes? Do you?
I think so, yeah.
I have one on our wages.
Okay.
I'm happy for Senator Bragg to...
So what we'll do, I've got one follow-up question. I'll go to you, Senator Bragg, follow-up question on wages. We'll get to that, Senator Cox, so just give me a minute. And then I'll go to Senator McDonald, and then Senator Cox, you can table the article, okay? So I just want to keep the flow going. So, Dr Kennedy, just this issue in terms of wages, and there's one point that was referred to in the budget papers in relation to the increase of wages for workers who change jobs, and what the single touch payroll is indicating. It's on page 57. Can you just address that issue quickly, because I think that's an important point in terms of what the evidence is in terms of wage growth.
I'll do the broad trends, and I'll ask Luke to draw out the specific numbers. But what we saw post GFC up into the COVID period was a lower turnover, or a lower proportion of people leaving their jobs for other jobs. A little less dynamism, frankly, in the labour market than what we'd previously seen. It dropped down below what it was pre-GFC and then stayed at that level. What we've seen post-COVID is it picking back up to where it was and actually even popping up a little bit higher. Some of that may be catch-up, but we're hopeful it indicates further dynamism. And what we find, it goes a little bit to Senator Cox's earlier question, that when people are leaving, the way a lot of wage increases happen for individuals is changing jobs. Part of it might be whatever you get every year through the EBA, but a lot of people will go to a better job or the same job paid more in another place. That's the competitive effect that's going on.
So that's the labour mobility, the importance of labour mobility. And I think to go to my earlier comments about where the unemployment rate settles, when you're confident about the labour market, you're confident to change your job. Yeah. And hence you'll move to a better job. As I said earlier, firms will compete harder for you and you'll see that increase. Luke, do you want to say what the numbers have been?
Yes, I can just confirm that. So we have a data source, single touch payroll, which allows us to track individual workers through as they move through jobs, and we can see what happens to their salary. And the reference you mentioned, the Chair, in the budget papers is that during mid-2021, when we started to see a pickup in this dynamism, workers who did that and changed jobs were typically experiencing pay increases of between 8 to 10%.
Yeah. Okay, thank you. Senator Bragg, you had a follow-up question on
one question on wages, and I've asked you about this in prior appearances, Dr Kennedy. Just wondering, what is the proportion of the real wages increases that will be eaten up by the compulsory super guarantee increases? What's so funny?
Sorry, Senator Bragg. Just
I'll tell you what our assumption is. Luke, have you got the assumption for super?
Yes.
In the past, I think I told you about, was it 80% in the short, from memory? Is that right? 80% in the short term?
Yeah, so what I have here, Senator, is that in the near term, it's taking around 0.4% off the wage price index in a given year.
And how much of that is the proportion of the real wages increases?
Around 80%. Senator.
About 80% in the forward estimates?
That's... I'll just double check, sorry.
I'm pretty sure it's the same as the answer I gave you in the past, which builds up to about 0.8 from memory. So there's the effect in the year that you're in. That might be a bit lower. That might be about what 0.4 is that Luke's talking about. But in the next year, that it flows through. So as I've spoken to you about in the past, Senator, compensation for workers is compensation for workers, and if it goes into another means, it goes into another means.
Sorry, Senator, I can confirm it's that 0.8. It's around 80%.
In the forward estimates?
Yes.
Okay. Thank you.
Okay, thank you, Senator Bragg. Senator McDonald, I'm treating this block of time as government senators'
truly?
times.
Oh, if I knew that, I would have been poking you.
If we can do that, say if 10:45, if you could finish your questions by.
Oh dear,
that's
okay, well, we're going to be very targeted in our questions and hopefully our answers too. Dr Kennedy, in your opening remarks, you talked about Australia being relatively well positioned to weather these disruptions. Other economies with greater reliance on energy and food imports will experience greater economic impacts, and you go on. I'm intrigued, while you're hiding your light under a bushel, I mean, the AAA credit rating, Australia's AAA credit rating is an extraordinary achievement given what the world has just gone through. Do you want an opportunity to to shine? You've not talked about it in your opening statement. There's some references in the budget, but I think it's something that is truly significant.
Yes, look, I think the confidence of the rating agencies in particularly the sustainability of our fiscal position in light of the size of the shock that the country has experienced is a very good outcome. I think we see a very substantial. What rating agencies are often focused on are two things. They're looking at the rate of consolidation of the deficit, and they're looking at the level of debt, and both of those improved very significantly in this budget, Senator, and faster than what we anticipated, and almost fully reflecting a stronger and more robust economy than we anticipated. And I think we shouldn't ignore the fact that we get a little bit of upside from quite a lot of upside for when commodity prices are spiking, but it also hurts to have higher petrol prices in the country, as we've seen through the cost of living response. But the point I was trying to make is that's a negative part of the shock, and it's difficult for individual families, but we are well placed to absorb it in the macro level because of this robust growth that we're seeing and frankly improvement in fiscal sustainability.
So, which leads me neatly into my second question, which is around the deficit reductions. You're very cautious or conservative in the forward commodity price projections, but that's played out to a really significant reduction of debt in the forward estimates.
Well, certainly throughout the whole pandemic, we've tried to be cautious in our approach because in the way it flows through in the fiscal side, because we want people to understand, frankly, the consequences of the very significant decisions they were making, and the potential for things perhaps not to go as well as they could. But what we've seen at every stage is an improvement from the very start of the pandemic. And I should acknowledge another impact, Senator, and that is Australia's handling of the health situation of the pandemic has also very significantly contributed to the positive economic outcomes. And we try to point that out in our budget, in our part of the budget document as well, that I'm not saying it wasn't a very significant impost on the community through the lockdowns and other measures that were required, but the confidence given to the community in the way the health situation was managed has no doubt contributed to very positive economic outcomes.
So Senator McDonald, Dr Kennedy referenced before that over the forward 4 years, the $90 billion improvement in revenue associated with stronger labour market outcomes. And so if you look at the The revenue improvements, which are the significant part of the reduction in deficits compared with what had been forecast last year, overwhelmingly, around 90% of those revenue improvements over the forward 4 years are exclusively in that labour market category because of the assumptions that remove the high commodity prices by September this year under those assumptions. So, as the sensitivity analysis Dr. Kennedy spoke of before, there's a very significant upside potential if those commodity prices were to continue even just for as short as a 6-month period, and that would itself then realise a further material improvement in the deficit position.
So the investment in this budget that I don't think has been called out enough is the investment in where we make our money in the regional regions, the $2 billion Accelerated Growth Fund and the regional hubs. And given, I mean, you touched on the health impact, the regions were less impacted. In fact, they continued to operate as if COVID was, had a very small impact. Is that part... I'm excited about that investment. Regional person, I believe in growing these regions. Is that another element of being conservative in building Australia's future, or how would you describe that? Because I think this is a key part to our next stage of Australia's prosperity.
There is it's been happening over a few years, a real strengthening in the economic prospects for the regions. For a long time, for example, remember many years ago, people talked about the opportunity in agriculture and food production for the growing Asian middle class, and it hadn't seemed to turn up, but it does really appear to have turned up, and we are seeing obviously there's very good seasons at the moment, so that helps a lot when you're not in drought. That's really is all the difference really. But Senator Cox earlier spoke about house prices. It's been a long time since we've seen really strong growth in regional house prices, and concerns about people being able to access housing in some regions because they are growing so robustly. So I do think it is pointing to, frankly, well, there was a lot of focus on the capital cities and the service sector economy in the past. We're seeing, a real strengthening prospects for the region, which frankly, given my background, I find very pleasing. And it is important that the infrastructure that is going with that growth opportunity goes with it and goes to the right place, of course, and that final decisions are made mindful of the best return for a dollar. But having said all of that, and there are also, frankly, adjustments we may need to make to where we may do certain food production because of the changing climate, and that may require different investments, for example, in water and other areas. So as long as they're well done and well planned, Senator, they could deliver very significant returns.
So at the last estimates, I asked questions of the RBA and other ABARES around the idea of a regional CPI. We've talked about wages this morning. Certainly the AENA figures reflect better the experience that I've seen regionally of people working more than one job, working a lot of overtime, picking up bonuses, those sorts of things. Do you think that, and I would also touch on the banks requiring a 60% deposit to buy a house in many regional areas. Right. Do you think that there might be an opportunity to consider regional CPI data to more earlier receive these signals to the economy?
Look, I haven't discussed it with a statistician. I don't know if you have, David Gruen.
They directed me back towards Treasury.
Did they? Okay, fair enough. All right, so it's my problem.
You're laughing again, Dr. Sorry.
No. It's just the time of the year, Chair. I'm more than happy to take it up with David and have a chat. I mean, our CPI, of course, unlike other countries, also comes on a quarterly basis rather than a monthly basis. But The other opportunities that I've talked to David about in the past is the opportunity to exploit, and I know he is doing this, other administrative data rather than surveying and those types of things. So, look, I will undertake to take it up with him, Senator McDonald.
And my last question, Chair, I'm learning. Thank you, I appreciate that, because it is a pet project. I just want to finally touch on this productivity issue. I'm really concerned because I'm seeing what can only be called price gouging from some of the privatised ports. I've had a message this morning from Cube increasing container park booking fees from $70 to $95 per container. This is going on every week. And of course, these prices are generally passed back to farmers and other exporters who can't pass those prices on to anyone else. So it takes money again out of regional Australia and the places that we're trying to encourage. I believe the Productivity Commission is doing a report into the productivity of the ports.
I think it's a important development. I'm confident that PC will do a good job. You're drawing attention to an important issue around productivity growth. There are parts of the economy that, if they are not productive and if they are not near world's best practice, they really spill over and constrain other parts of the economy. And the transport network, and particularly ports, are a very good example of that. The ACCC, in its, from memory, stevedoring inquiry, detailed some of these issues. I know that there was some contest around those issues, but nevertheless, I agree with you. It's a very important area for the PC to dig into and get on top of, and it has national consequences if our transport network is not as efficient as it could be.
Okay. Thank you,
Thank you, Chair.
Now, Senator Cox, I'll give you an opportunity just to formally table this document, and I'll go to Senator Walsh.
Yes, thank you, Chair. At your request, just for the reference of the Saturday paper from 2017. So just tabling that document.
Thank you, Senator Cox.
Thank
Senator
you.
Walsh.
Thank you, Chair. I've got a couple of questions about wages for the Minister. The budget projects that we'll end up this financial year with a minus 1.5% drop in real wages, and then going forward pretty low real wages growth. We've got the minimum wages annual review underfoot at the moment, and that affects a couple of million Australians who are working on awards. One of the things that government could do to support real wage growth is to explicitly support a rise in those award wages. Will the government do that this year?
Thanks, Senator Walsh. Well, there will be a rise in award wages. I'm confident of that because in assessing the annual wage case, the Fair Work Commission ultimately always applies some form of rise, and particularly in relation to an environment where we are seeing the inflation impacts from around the world being felt in different ways in Australia. I'm sure they will consider those issues. The government will continue with our standard policy, which is to help the Commission by providing relevant information about economic conditions and the type of analysis that's contained in the budget for the Commission to make its independent assessment in relation to what it determines in that wage case. So that's about backing Senator Walsh, the independence there of the Commission, but ensuring that it has the evidence to make a determination.
So you could support a rise to minimum award wages in an environment of flat and backwards wage growth, but you're choosing not to do that?
No, Senator Walsh, that's not the case as you characterise it. We don't think it's the role of government to try to put a figure on what the Commission should determine. We think it's the role of government to help to inform the Commission around the economic circumstances, conditions, and to help them then make an independent and expert determination based on all of the evidence before us.
If you won't submit a specific number, will you submit support for significant increases to award minimum wages this year?
Well, Senator Walsh, I'm not sure those sorts of that sort of gesture politics aids the outcome relative to actually providing the evidence as we do. It's a process the government has engaged in.
Is it gesture politics for people to know whether the government supports an increase to minimum award wages? Like, do you support an increase to minimum award wages?
As I said, Senator, I fully expect there to be a determination that increases minimum award wages. Fully expect that to be the outcome. Now, what the scale of that increase will be is something the Commission will independently determine, and they'll determine that based on the evidence that's before them. The government will make sure that we provide the type of evidence that is here in the budget papers. We clearly, in this budget, have sought to make sure that when it comes to people's disposable incomes and the things that we can directly influence in relation to people's disposable income, we've taken action in response to the oil price spikes by providing the reduction in fuel excise, taken action in providing additional targeted payments to deal with these spikes we're seeing at present for low, middle, fixed income earners. And these actions come on top of other things we've done to lift disposable income, most notably being the stages of our tax cuts, two of which have been implemented to date.
Thank you, Minister. There are, a range of submissions to the minimum wages review, including a submission from the Master Grocers Association on behalf of retail employers that there be a flat-out freeze, no increase this year. And there are other submissions for very low increases from employers and their associations, which would in effect be a real wage cut if those submissions were successful. Do you support those submissions for a freeze or a real wage cut?
No, Senator Walsh, we won't be putting in a submission in support of those submissions either. We will be putting in a submission that presents the evidence around economic observations.
What would you like to see happen? Like, why can't you tell the Australian people what you would like to see happen to the wages of 2.5 million Australians covered by awards?
Senator Walsh, I do note that the last time the Labor Party was in government, you didn't actually even make a submission at all. And yet now you're saying
9 years, and this is this is your response.
Well, sorry, I'm just making that. I'm just making that observation, Senator Walsh.
Sorry, Minister. We just need to keep the line of demarcation between the question and the answer. Just the hands up.
I'm just making that observation, Senator Walsh, because you're seeking to somehow hold the government to a different standard from the way in which
seeking genuinely on the behalf of people who would like to know. Does the government support them having a pay rise?
And as I've said, I fully expect the Commission to make a determination that will lift those minimum wage rates. The government will provide information and analysis to assist the Commission in making that determination, to assist it in making a determination that does so in an environment that maintains the jobs growth we've seen in Australia and the strength of the labour market overall, that helps us to maintain the economic strength we've seen in Australia, and that fairly reflects the inflation conditions being faced by Australians. The government has acknowledged those inflation conditions in the budget handed down this week. Mr Albanese didn't propose anything last night additional to address cost of living pressures on Australians. His budget reply speech was
Mr.
absent.
Albanese.
Sorry, please let the Minister finish his answer and then you can have a follow-up question. Minister.
So, Senator Walsh, we've handed down a plan this week that shows very clearly how we are directly helping Australians with the oil price spikes seen as a result of events in Europe at present, how we're directly assisting Australians in terms of the growth in jobs. You can see how that flows into wage price rises as Dr Kennedy's talked us through today. We've had the exploration today in far greater detail around not just the WPI elements that you asked me about in your initial question, but also the AENA assessment showing perhaps a stronger growth in wages across the economy. But in terms of the minimum wage case, we will do as I've indicated, and that is assist the Commission to make a determination that I am sure will see increases, but the Commission will be the ones who independently determine what those increases are.
Well, I note that was an answer to a question about whether you support a pay increase for a couple of million Australians that will be decided in the minimum wage review, and that is your answer. You can't say that you do.
Senator Walsh, I'm saying I fully expect to see one,
right?
And that increase will be informed by the type of evidence and analysis the government gives.
Real wages have gone backwards by 1.5%, and you can't just say yes, we support a wage increase for 2.5 million. Australian workers dependent on that increase. You can't say that you support that today.
And Senator Walsh, we could sit here and I could look back at you and say whether it's on that matter or on the grandstanding in relation to aged care wages that Mr Albanese engaged in last night, that how meaningful is it when you won't say how much? What is the point of running around the country saying we support an increase, but we won't tell you how much of an increase we actually support?
Well,
you're simply trying to play politics.
Sorry, order.
No, you're asking me some
order.
questions, and I do have some
order.
questions for you.
Sorry, order. Minister, I'll take those as rhetorical questions, of course, because you're not in a position to ask questions of members of the committee. But Senator Walsh, you have the call. But if I could ask all senators if we could try and keep that line of demarcation between the questions and
which bit of that statement is untrue?
Minister, between the questions and the answers for Hansard's benefit, please. Senator Walsh, you have the call.
Mr Albanese did announce last night that Labor will support and will fund an increase to aged care workers' wages through the Fair Work Commission. Well, what is your position? Do you support a pay rise? Do you support a pay rise for aged care workers? And will you fund it?
Well, once again, Senator, we will back the independent process of the Fair Work Commission. There's a case there. And that case will reach an outcome.
They've asked you for your position, actually.
Sorry, Senator Walsh, you need to let the Minister finish his question.
They've asked you for your position.
And the Shadow Treasurer, Mr Chalmers, has been pushed on this morning, and he said we don't typically nominate. That's the job for the Fair Work Commission.
Yes.
As I reflected before, Senator, your side of politics is trying to have its cake and eat it too here.
Do you support
going
an
out there
increase?
saying we want an increase, but not actually having the courage
we're saying we will fund the outcome.
To say
Sorry, Senator Gallagher, you don't have the call. Senator Walsh, you have the call.
Labor is explicitly calling for an increase to aged care workers' wages and saying that we'll fund the outcome. Do you have the guts to say you support an increase? Do you have the guts to say you support an increase?
No.
Do you have the guts to say you'll fund it?
No. Senator Walsh, we're just not going to play politics in this space. There's an independent Fair Work Commission, and we back the independence of the Fair Work Commission. That's what we have done consistently. The fact that the Labor Party is going out there and dangling some sort of unseen and unknown carrot in front of people, saying we support an increase but we won't say how much that increase will be, is some of the most shameless politics I've seen.
Senator Walsh, you have the call.
So much wrong with that.
I think people are getting all the information that they need to know from you about what your position is on people's wages today. So I actually appreciate the answers. Your predecessor, of course.
Sorry. Order. Senator Walsh, you have another question?
Your predecessor obviously famously said that low wages were a deliberate design feature of your government strategy. Does the Morrison government today want the wages of Australian workers to grow in real terms? Is it a policy objective of this government for workers' wages to grow in real terms?
Absolutely it is, Senator Walsh. It is, and we had a discussion before about some of the areas in terms of trying to pursue and assist productivity growth, and we have invested significantly in those areas, be that the skills agenda, which you can see in this budget, and the support in areas of trade skills for apprenticeship, and not only commencements but also completions, be it the work more broadly in the skills agenda, be it our investment in infrastructure, now a $120 billion pipeline to drive productivity and to increase the efficiency across a range of different sectors of the economy, be it the transition in this budget from the economy-wide drivers of investment that I spoke about earlier that are lifting particularly non-mining investment across the country, which will increase the productivity and competitiveness of those businesses, through into this budget, the measures that we've announced for small business to provide tax incentives for skilling, tax incentives for their investment in digital technologies. These are things that again will drive improved outcomes across the economy that help to underpin real wages growth, which you can see in this budget is forecast to be achieved from 1 July this year, and we've had the extensive discussions that the WPI presents perhaps a low side estimate of that when compared with the alternate measure of AENA.
So essentially we've moved from low wages being a deliberate design feature to sort of trickle-down approach. Everything that you've just described will just trickle down to better wages for people. Do you have a specific policy objective of real wages growth? Do you have a specific wages policy that you can point us to?
Senator Walsh, I just took you through some of them. Now, it's a contrast.
So trickle down.
Sorry,
Senator Walsh. Let the Minister finish.
Senator Walsh, I actually gave you a relatively serious answer just before in terms of going through specific policy areas that the government's pursuing that are drivers in the economy that have helped to achieve a 4% unemployment rate, forecast to go to 3.75%, the lowest unemployment the nation's seen in close to 50 years, that create the environment that give us the opportunity to forecast, as we do, increases every year in the incoming budget and forward estimates period of real wages. These are the measures that we have detailed and we are taking. Now, that stands in quite strong contrast to the fact that Mr Albanese simply says that a Labor government will write a letter to the Fair Work Commission saying we'd like to see increases, won't put a figure on it or follow through with any detail, and didn't last night detail any areas of an economic plan that would actually help to drive wages growth, to drive productivity. They were missing from last night's speech. They're missing from the fact that Labor doesn't have a plan in that area. We have demonstrated it. Our plan is working in terms of what it's done for unemployment and jobs growth across the country. You can see when you look at both the WPI assessment going forward, but also what's happening with AENA already, that it is also moving to deliver additional benefits in terms of wages, and that in terms of what households have available to them, what we've done in cutting income taxes to date is putting around $1.5 billion extra per month into the pockets of Australian households, helping with their disposable incomes. And what we did in this budget addresses the oil price spikes that the world is seeing in a very direct way.
So, thank you, Minister. So, Labor has substantial economic policy out there already. We've released a skills plan. We've released a plan around National Reconstruction Fund. You've completely chosen, after 9 years in government, to completely misrepresent Labor policy instead of be able to defend your own strategy on wages. The RBA say that wages are in part going backwards due to public sector pay rise caps and enterprise agreements that lock in low wage increases for a number of years. Your government employs 150,000 Australians. Why won't you use your weight in the employment market to encourage wages growth? Why are you using your influence to keep wages down?
Senator Walsh, as was canvassed earlier, the government's public sector wages policy position has been to move now to a pegging of public sector wages to private sector WPI measures. So as we see the growth in relation to the wage price index, and particularly in the private sector, the public sector will move in tandem with that, Senator Walsh. We think that's a fair approach in terms of ensuring that public sector wages don't fall behind growth in the private sector, but nor that governments provide some sort of preferential treatment into the public sector. The tone of your question suggests to me that a Labor government may vary that, and that its policy would be to prioritise growth in public sector wages. What we're prioritising is growth in jobs right across the economy, and from that driving growth in wages right across the economy, both private sector and through that public sector.
My final question on wages before going back to Senator Gallagher is really this. You're not supporting wages moving in the public sector. You're not supporting wages moving for 2.5 million Australians. You can't point to any specific policy that you have to result in real wages growth. People's wages have been flatlining under you for 9 years. Why should Australians believe that you care about their wages, that you have any plan to get real wages moving?
Senator Walsh, when we came to government, unemployment was 5.7%. It's now 4% and tracking to 3.75%. And when we came to government, real wages had fallen in 3 of the 6 years of the previous government. And as I said before, you didn't even bother to make any submission to the Fair Work Commission in the last of the wage cases. We indeed do have very clear, very detailed policies that are about the economic strength of Australia, and through that, creating more jobs, which we've done incredibly successfully, 1.7 million of them. Creating an environment that pushes us towards the theoretical limits of full employment, and from that driving wages growth further. And each of the forward estimates years show real wages growth as we hit those limits of full employment across the economy. Backing areas in terms of lifting the capabilities in the Australian economy, from infrastructure to skills to digital technologies and capabilities. We're not going to see an Australia that is richer or wealthier through the Labor Party policies, which are either letter-writing campaigns to the Fair Work Commission or simply driving public sector costs
estimates
higher.
asking the government about your policies.
Okay. And Senator Walsh, we're also weeks away from an election. And last night was a pretty shallow and empty effort by Mr Albanese compared to the details of the government.
Okay,
Yeah,
thank you.
It's your
Thank you, Minister. Thank you, Minister. Senator
Okay.
Gallagher, we'll finish where we
Yeah,
started with you. So
Thank you.
you've got until 11:15.
Thank you. I've got a question for Dr Kennedy before he leaves. But firstly, Minister, the aged care work case, the aged care wage case before the Fair Work Commission will hand down a decision after the election. If you win the election, will you be funding the outcome of that case?
Senator Gallagher, if there are implications from the outcome of that case, then the government will respond to it in future budgets as necessary.
Right, so you will fund the outcome of the wage case that comes down after the election?
We'll work through the implications of that. As is well known, we provided an increase some $10 a day, if my memory is correct, in last year's budget in terms of support for care of elderly Australians in
daily
residential
fee
aged
increase,
care,
yeah.
and also through that providing increased support for the sustainability of aged care services and encouragement for them in terms of their remuneration and otherwise of their staff through those services. So we will continue to respond to that. We've put $19.2 billion through in the last 12 months of additional funding into aged care, not just residential aged care as was the sole focus of last night's speech, but also crucially supporting the home care sector,
across the sector
to provide effective choice to senior Australians too.
So you will fund the case. That is a commitment from you. When the wage case comes down, the government will fund it.
We'll respond to it and analyse it as necessary.
Okay, so you might not fund it.
Ensuring the sustainability of the aged care sector is an important part of our government's position, and so we will respond to any such circumstances that come along once we've seen the details of them.
Okay, so we are agreeing to fund the outcome. It sounds like you are agreeing to fund the outcome. Yeah?
Oh, the difference, Senator Gallagher, is you're running around the country saying, we're going to say there's an increase, but we won't say what the increase we think it should be.
Well, the Commission hasn't made a decision yet, Minister, as you know.
I just can't quite tell, Senator, whether you're trying to say there's a difference in our positions or our positions are identical.
Well, we are trying to work it out from you,
because
you're criticising us for committing to fund an outcome that either government, whoever wins the election, will have to fund. You are criticising us for that. So I'm trying to understand, is your position that you're not funding it, or is your position the same as ours, that you are funding it?
We'll ensure the sustainability of the aged care sector as we've done, Senator. We'll analyse whatever decisions come from the Fair Work Commission or other impacts across the sector.
Okay. Does anyone get what that is? Is that a yes to funding or a no to funding? I just don't know why it's so hard. You know you have to fund the outcome, don't you? Yeah. You do.
Senator, there are many cost drivers in sectors like aged care.
Like food.
Yes, Senator McAllister, indeed.
Yeah,
and that's part of why funding was increased last year. Part of why there is so much more flowing into the aged care sector now is to respond to those things in the Royal Commission. So this sense that you're trying to paint that $19.2 billion worth of additional investment and support across aged care doesn't change the dial is just completely misleading.
Well, you had to do it. The system was in crisis. Our policy is to actually fix the missing bit that you didn't deal with. That's the reality. Yes, your system was in such crisis that you had to inject that money. You had no choice, but you failed to do the bit that actually enables people living in residential aged care to have a dignified existence and for carers to have the support they need to deliver it. I mean, I don't know how long it's been since you've been in an aged care facility, but to get somebody out of bed, to clean them, to get them changed, to give them breakfast, most carers have 8 minutes to do that.
That's it.
8 minutes. That's the system at the moment, and that's what needs to change.
And Senator, changes we put in place last year in terms of ensuring 200 minutes guaranteed care time per resident per day, 40 minutes guaranteed care time from a nurse per resident per day on average. They are very important changes that took a substantial increase in budget funding, and we delivered it.
So, Senator Gallagher, we've only got Dr Kennedy for 2 more minutes, so if you've got any questions for him.
My question was about, it's different to aged care, it's about net overseas migration and the figures in the budget paper that have the forecasts, I think, for the end of this year, 41,000, but going to 213,000 in 23-24. Who comes up with those numbers? Is that through Home Affairs, or how do you land on that? And is that an ambitious number to reach in 2 years' time?
we come up with the numbers through our population centre, but we work with Home Affairs about what the size of the program will be. But we make the judgments about how quickly net migration will move, when students are likely to turn up. We have a conversation about that in there when other parts of the NOM calculation turn up. We have upgraded it substantially. I wouldn't describe it as ambitious or optimistic. It is just our best guess at what we think the net flow of people will be. We do note in the budget also that Australians travelling, different issue, but Australians travelling overseas is actually going to, in some ways, detract a little bit from growth.
Yeah.
But Jenny can outline for you, do you want to know, in effect, what the migration assumptions are that underpin the net migration?
Yeah, and I'm happy to do it in the next section,
Okay.
if that's okay.
That's fine,
If it fits more properly under that
Yep,
in
happy.
Jenny's, Ms Wilkinson's group, I'm happy to follow it up after that.
Okay.
Thank you, Senator Gallagher, and thank you, Dr Kennedy, and can I also thank you for placing on the record the contribution that Dr David Irvine made in terms of his service to this country. I had one interaction with him in his capacity as chair of FIRB, and I found him extraordinarily professional and responsive. So
Thank you, Chair.
our thanks to you for raising that issue. We will now adjourn and take morning break and come back at 11:30. Thank you. We will reconvene. Thank you, Mr Yeaman, and welcome back the Minister. So we're now in the fiscal group, and who's seeking the call? Senator McAllister.
Look, I just have a couple of questions, and they're probably for you, Mr Yeaman. Obviously, the last term of government has been bookended by very significant natural disasters. Correct. And I note that Budget Paper 1 canvasses the macroeconomic impact of those disasters and the nature of the government's response. Has Treasury done any evaluation or review of any kind about the continuing suitability of the overall framework for economic support for disaster-affected communities? The reason I ask is that I'm interested to know whether the Treasury's, well, perhaps I can ask the process question, has there been any kind of review of the arrangements that are in place?
Just to clarify, Senator, you're asking about the disaster recovery arrangements themselves that kick into action when a disaster hits, the policy response? Is that
I'm asking about the economic dimensions
Yes.
of the overall policy settings for disaster-affected areas. Obviously, the Budget Paper 1 recognises the capacity for natural disaster to have significant impact on the performance of the Australian economy. I'm interested in, given the significance of natural disaster over the past few years, I'm trying to understand whether Treasury has undertaken any policy review, internally or externally, to assess the adequacy of the current governance framework for responding to the economic impacts of natural disaster.
Thank you, Senator. Short answer is, not to my knowledge, no, but our fiscal colleagues, so we deal with the analytical side of the forecasts, and there's no doubt, as you say, that natural disasters have had a material impact on our forecasts at different points over the past decade and more. And we've got advice around that in the budget documents. In terms of what is the best way to deal with that in an ongoing sense, I will defer to my colleagues who will be on next in fiscal group who deal with natural disaster response in the whole, in the broad, so they may have more knowledge than I do. But to my knowledge, no, Senator, we haven't done a formal review.
Right, okay, that probably finishes my line of questioning, because I'll wait till fiscal group, Chair.
This is fiscal group.
No, this is macro.
This is still macro.
Oh, we're still in
Yeah,
macro.
yeah.
Sorry. Oh, sorry.
But macro and
Okay.
corporate appear together, don't you?
Correct.
Yeah.
Yes.
Yeah.
Okay. Well, I don't have any more questions for macro and corporate. so-
I have one small set, and then they will be released.
Okay, Senator Gallagher, you have the call.
In relation to the budget, 22-23, is there an advertising campaign linked to it?
Roxanne Kelly, Deputy Secretary Corporate and Foreign Investment Group. Not specifically, but I will get Ms Kenner to sort of give the detail.
Thank you.
Hello, Senator. Shannon Kenner, Branch Head of Communications in Treasury.
Hi.
There isn't a specific budget advertising campaign, no.
So when you say specific, what does that mean? There isn't one, or
There isn't.
Okay.
Yeah, there was no funding allocated.
So there won't be any ads or anything appearing in the next few days advertising the budget?
No, Senator.
Okay. What was the other campaign you did, you know, post-COVID again? What was it?
Australia's economic plan.
It was
The
all the
economic recovery campaign.
Yeah. Is that still ongoing?
Yes, it is, Senator.
Okay. And I think last time you talked about the buy for that campaign. Can you update us on what's happening with that campaign?
Yes, Senator.
Yep, thank you.
The campaign was, third phase of the campaign was approved to launch on the 4th of March and commenced across radio, digital, social, out-of-home and press on the week commencing the 6th of March.
Yep.
And we've had some staggered rollout of creative material since then across television and other media.
Okay, and that is, so it started on the 6th of March, and how long, what have you bought for that campaign?
The media buy at this stage is due to go through to the 16th of April, but that's an indicative date only because we obviously stop advertising as soon as the federal election is called.
Okay, so, and you say you've got radio, TV, social media.
Out of home.
Sorry?
Out of home.
What's out of home?
Outdoor advertising, like
billboards,
street furniture, billboards, that kind of thing.
Yeah,
Buses.
billboards,
Buses.
buses. And
Telephone booths. Sorry.
Senator Scarr, you've been very helpful. Telephone booths, I'll put them in there. Cinemas, yeah.
I'm actually not sure if we are in cinema.
on telephone booths, but,
Well, we're putting them in there. Senator Scarr's nominated them.
If you can find one.
I can't confirm if cinema is in there, but I can come back to you on that one.
Is there any mail, direct kind household information?
No, Senator.
Okay. So what have I missed? In that?
Digital.
Digital. Okay. And for the 6th of March, or for the third phase, what's the cost of that?
I can give you cost to date, Senator, or expenditure to date. So I don't have that tallied up at the moment. So this is, again, I can go across each contractor if you'd like, Senator.
Okay, yes, I would, thank you.
So on research, we've spent 224,180.
Yep.
We have also spent, and this is a bit of a complicated one because some of the costs came under the previous phase and some of them are for this phase, but there was a further 262 on research, 262,600.
Yep.
Then our evaluation research is 52,703 and 20 cents.
Yep.
Creative is 1,081,587 and 60 cents.
1,081,081, yep.
And on the actual advertising, the media placement, it's 2,384,203.54 cents.
Okay, and that's for phase 3, is it?
Correct.
Phase 3 on both the creative and the advertising spend.
Yep. That's correct, Senator.
So, okay, so that's 500. So almost 4 million by my quick adding up there.
That sounds about right, Senator.
For 1 month or for 6 weeks?
That's expenditure to date.
Oh, that's expenditure to date. So that's to, where are we? Oh, we're the 1st
End of March
April.
or so.
So it's 4 million in the last 4 weeks.
The campaign has been live since the 6th of March, but there are development costs that come prior to that.
Okay. And then so from now until the 16th, it could, well, depending on where, so it's about $1 million a week spending on that campaign.
That's if you're applying it against the media buy, Senator.
Yeah, okay. All right, and it stops when
When an election is called, or the 16th of April.
Okay. The research components of it, what is that? Are they focus groups or...
That's correct, Senator. It'll be focus groups. We also did some quantitative research, so that's online or computer-assisted surveys that we do with members of the public.
And they were done in March, were they?
No, they started in, there were some that were run in December last year, some more in January and February.
January and February. Okay, and so with things like, so is that assessing phase 2 or the earlier phases of the campaign? So in those focus groups, you show them the ads, you say, you know, what do you think? And then you get feedback, or is it actually testing concepts with them?
It's more of the forward-looking work that is looking at what we are looking at doing next. So it wasn't assessing phase 2, it was obviously doing that with reference to the fact that phase 2 had happened, but we were actually showing them new material or new ideas and getting their views on how the situation was looking at the moment.
What's the campaign called? What's the...
It's the Economic Plan campaign.
Economic Plan. And did you make changes from phase 2 to phase 3 with the ad?
Yes,
What were the changes?
It's new creative, Senator. So the previous phases of the campaign were using our comeback tagline.
Yeah.
This phase of the campaign has moved on and is using new creative, which is more appropriate to the position that Australia is in at the moment.
Yeah, okay. So what's the tagline for it? I haven't seen the ads. I'm sorry. Lucky I wasn't in your focus group. But so we've moved from our comeback, because that wasn't really working, into what's the...
this phase of the campaign...
Comeback's been working very well, just as an aside.
Well, they've changed it, so something's happened.
But not a snapback.
What's the tagline?
Been better than that, actually, Senator.
This phase of the campaign is called The Next Steps.
The next steps.
We're taking the next steps.
The next steps, okay. I'll have a look. Is it on your website? Treasury?
There's an economicplan.gov.au website, campaign
right.
website set up specifically for the campaign. It's not on the Treasury site.
All right, great. Okay. Oh, yeah. All right. And these focus groups, were they... So you said they were in December to February, I think you said, were they?
That's correct.
Okay.
Who conducted them, sorry?
The contractor was Where To Research.
Can you, do you have how many groups that you did and where they were?
I don't have that, I think, Senator. I might have to take that on notice.
But did you, because you're in charge, are you in charge of the campaign?
Yes, that's correct,
Okay.
Senator.
So were groups done in every state, for example, and territory?
We didn't do every state every time. What we tend to do for a round of research is we'll look at 2 capital cities and a regional centre. So it might be that we do Brisbane, Melbourne and Bendigo or something like that. And then the next round of research will select another couple of cities and another regional area. So we get full coverage of Australia throughout that.
Okay. And those research reports presumably went to that committee of cabinet that looks at that?
That's correct, Senator.
What is it called? The SDCC?
That's it.
That's correct.
Okay, so all research goes there, doesn't it?
Yes, Senator.
What for, do you have to, they consider it and do they make decisions, or it's just you send it to them for information purposes?
It's part of the process to inform their decisions as well.
Because ultimately they have to tick off through the advertising campaign, is that right? Or
They review the campaign and determine whether they are happy with the direction it's taking, but it's ultimately the department and then the responsible minister that signs off on the campaign.
Okay. And when did those reports go to the SDCC?
Progressively over those months, Senator. I'd have to take that on notice.
So it's getting a fair bit of research between December and February. Yeah.
Yes.
In terms of the when you say creative, is that the design and kind of finalising the materials?
That's the advertising agency, so the people that actually come up with the concept and then produce the ads for us.
Okay, so that's the labour costs and other costs associated with that. And then the advertising, I think last time you were talking about how you buy, slots and things. How is that been weighted from the 6 over the last month? Is it accelerating in terms of the buy, or is it standard?
I think it's fairly not flatline, but fairly standard throughout. We don't tend to buy media to try and accelerate. It's more that you try and buy or start a campaign with a larger buy, and then you tend to decline over time.
Okay.
So I'd have to check how we've actually weighted the buy, but it's not going to be an accelerated buy.
Okay. And in terms of the breakdown, I think last time you were able to give me the breakdown of, the cost for TV, cost for radio, what the digital campaign cost, out of home. Is that what you called it, out of home?
Yep.
Yeah.
I can't give that to you at the moment, Senator, because the campaign's still live, so the costs are still accruing over time.
Okay.
So I can come back to you on notice with how much we've actually allocated in the budget to each of those media, but I'd have to, again, take that on notice.
Okay. All right. Okay, thank you very much. Thank you, Ms. Kenner. Appreciate that.
Okay, so I think that brings us to the end of corporate and macroeconomic group. So thank you very much for the attendance of the relevant officials for that section, and we'll now move to fiscal group.
Individuals taking the next step.
Mr. White, you're carrying a burden there.
Yes.
Okay, welcome Ms Wilkinson. Who would like to start the questioning? Senator McAllister, you have the call.
Thank you. Ms Wilkinson, you've probably heard me ask Mr Yeoman about disaster response. It's obviously been a very significant feature of the last 3 years. It impacts on our national economic performance, but it obviously impacts very acutely in particular parts of the country. I'm interested to understand whether Fiscal Group has undertaken any reviews internally or externally to assess the adequacy of current arrangements for economic support for flood-affected areas, or natural disaster-affected areas, actually.
So the short answer is we haven't conducted any internal or external reviews. There was a PC review in, I think, about 2016, which was a review of all of the disaster funding arrangements. And that took place at a time where many of the current features of the arrangements are in place, like the disaster recovery payments and the disaster recovery allowance. Minister, I haven't looked at that review for some time, so I'm very happy to take it, to take it on notice if we want to come back and have a discussion about that. But no, the short answer is that we haven't, in recent times, undertaken a review of those arrangements.
I note the budget papers emphasise what I would describe as individualised payments to households and also to businesses for capital, those kinds of things. Is Treasury satisfied that the level of coordination between the federal and state governments in administering those kinds of payments and other forms of economic support is going to produce the necessary results in these communities. I'm thinking particularly of communities where very, very large, a very, very significant proportion of the economic assets in that community have been almost entirely destroyed.
Yeah, so when I think about that, so there are a lot of different elements of the current arrangements. So the support to individuals through the disaster recovery payment and the disaster recovery allowance, which is the ongoing payment, that support is obviously delivered directly by the Commonwealth, and I think it's fair to say, and I think if you wanted to have questions about how that actually works, questions to Services Australia would be most appropriate. But frankly, over the course of the pandemic, I think we have refined and improved the speed with which we have been able to make those sorts of payments, and have learnt a lot through those experiences. So those payments can be triggered and then can go out extremely rapidly. There are, when I think about the suite of other support that's provided by government, there are a set of arrangements which are provided through state governments who are, by and large, closer, work more closely with the individual communities, that they've got services that they can actually deliver on the ground. All of the Category D disaster recovering arrangements are arrangements where the Commonwealth pays 50-50, but does rely upon states to actually administer that support. Now, some of that support is to individuals, some of it's to businesses, and some of it's for clean-up and recovery. So there's a range of different elements that are required in any sort of a recovery package. And then there are some other specific supports that the Commonwealth has provided where the Commonwealth has a lead. And I guess when I think about it, in the most recent budget, the announcements around things like the mental health support and the financial capability and wellbeing assessments are all services which the Commonwealth provides across the nation, and therefore the Commonwealth is best placed. So I think it is always going to be the sort of situation where you're going to need to have different parts of both states and Commonwealth governments working together in order to most effectively get the support to the people who need it, when they need it, through the most efficient mechanisms. And that's what the current arrangements attempt to do. The National Response and Recovery Agency and Emergency Management Australia are much closer on the ground to how these are actually all flowing. So in terms of how has the specific suite of supports worked in this most current phase, I think questions of details would probably be most usefully explored with them.
Sure. The reason I'm asking Treasury is rather more specifically around the economic recovery questions rather than the emergency response phase of a disaster. And it's not unrelated to the questions asked earlier by Senator McDonald, actually, about some of the spatially differentiated economic impacts of natural disasters and the way that combined states and territories and the Commonwealth are able to respond to that. All right, thank you. That's all I have for that, Chair.
Oh, okay. Senator McDonald? Oh, well, I've got some questions. Ms Wilkinson, I just wanted to ask some questions about the movement in the underlying cash balance since MyEFO. So I'm not sure who you need at the table for that.
Yep.
So it seems to me one of the outstanding features of the budget has been the movement in the improvement in the underlying cash balance in that period between the MyEFO and when the budget was brought down this week, which I think is approximately probably just under 4-month period. And Statement 1, Budget Overview, page 1 of the budget. I did get further than page 1, but I was impressed by this leapt out at me on page 1. So since the MyEFO, the underlying cash balance has improved by a substantial $103.6 billion, right, in that less than 4-month period. over the 5 years to 2025 to 26. What are the drivers for that improvement in the underlying cash balance?
Sure. So in an overarching sense, the drivers are the improvement in the macroeconomic outlook that you've discussed with Dr. Kennedy and Mr. Yeaman in the earlier session, and they then flow through to the underlying budget position. But I might ask Mr. Goldsworthy to just walk you through the breakdown of how that improvement has occurred.
Mr. Goldsworthy, take me for a walk.
Thank you, Senator. I will. So Brenton Goldsworthy, First Assistant Secretary, Budget Policy Division. So as Ms Wilkinson said, the improvement in the UCB since MYEFO really does come on the back of a stronger economic recovery than we expected, in particular in the labour market. So as you would have heard this morning, employment growth is a lot faster than we anticipated at MYEFO, and so too is wage growth. So what we've seen is a large upward revision in household incomes. That flows through into an upgrade to personal income tax receipts. And also on the back of the stronger labour market, we've seen a reduction in outlays for unemployment benefit recipients as well. So if we want to step through in terms of some figures, if that's helpful. So as you pointed to, in terms of the UCB, 103.6 billion improvement over the 5 years to 25-26. The breakdown is, as you'd be familiar with, in terms of parameter variations and policy decisions. So parameter variations, they've increased tax receipts since MYEFO by 158.2 billion over the 5 years to 25.6.
So those are just on the tax receipts. Those are families, Australians having more income, and as a consequence of that, paying more, the government receiving more tax revenue, and drawing a distinction here between the concepts of tax rates and tax revenue, knowing that greater economic growth and activity promotes an increase of tax revenue, and that can even occur when tax rates are falling.
Yes,
is that correct?
Right. So it's on the back of a strength in household incomes as opposed to changes in tax
and
rates.
then there's the company tax receipts as well, presumably which have increased. They're being projected, forecast forward to increase as well.
That's right.
Arising from things like the increase in commodity prices, yeah?
So Revenue Group colleagues who are appearing, I think, this afternoon can go into further details, but the bulk of the upgrade in tax receipts is due to personal income tax for the reasons we just discussed. We also have elevated commodity prices in the near term compared to MYEFO, so there is some support being provided through company income tax collections. And we're also seeing, for memory, a little bit of strength in GST collections as well, which of course doesn't impact the underlying cash balance because there's an offset on the payment side.
Okay, all right, thank you very much. I just want to quickly change tack, if I could. And Mr. White, I see you're the First Assistant Secretary for Commonwealth State Population Division.
White's coming to the table, Senator Scarron, I certainly encourage you to, as I'm sure you have, move deeper into BP1, and particularly page 79 shows quite visibly the improvement in the underlying cash balance and how that rolls right out through to the medium term, and in fact a halving of what the UCB had been projected to be.
Yeah, and that's important, isn't it? And that leaps out when you look at that chart 3.2 in terms of halving, which is quite, I mean, it's an order of magnitude in terms of the change, isn't it, Minister?
It's a material improvement for sure, and in fact the pace of consolidation in the underlying cash balance from its peak in 2020-21 through to what is forecast just over the forward estimates period is the fastest pace of consolidation in UCB seen in more than 70 years. So we're seeing very significant improvements there, and as we've canvassed earlier, that is without making any assumptions other than very conservative ones when it comes to commodity prices going forward.
Yeah. And that's a key point, that the assumptions underpinning those forecasts and projections are conservative. Is that correct?
Especially in that sphere of the commodity prices, and we have seen the upside dividends of that in the current financial year and over previous years, but we're not banking on them for the forward estimates or beyond.
Thank you. Ms Wilkinson, did you have anything further to add just on that point?
Oh, well, the only thing I was going to say is that this very significant recovery since the peak in 2021, it reflects the fact that a lot of that spending was, the vast majority was genuinely temporary and very targeted, and it has in turn supported such a strong recovery in the economy.
Excellent. Mr White, the reason I was keen for you to come to the table was Senator McDonald, my good friend Senator McDonald, raised some very good points early this morning in relation to a number of initiatives which are going to progress investment in our regions, and there appears to be quite a material increase in the number of people moving from our capital cities to the regions, and also from, for example, say Victoria and New South Wales to my home state of Queensland. And I'm just wondering, from your perspective, what are you seeing in that regard, and how does it impact the budget?
Thanks, Chair. Damien White, First Assistant Secretary, Commonwealth, State and Population Division. When we do our population forecast, Senator, we have capital cities and we have rest of state. So rest of state is the closest we have to regions. Rest of state includes some areas that most people would not probably think of as regional, like cities like Newcastle, Sunshine Coast, those sorts of things. Gold Coast. Over the course of the COVID-19 pandemic since then, so mostly cities had grown faster traditionally than the non-capital city areas. That changed during the course of the pandemic, mostly because cities grew much slower, which was a result of our international borders being closed mostly, and so a lot of migrants who come to Australia settle first, at least in cities. Regional areas, their growth rates in population held up much more. They had a slight fall. Part of that was people in those regions effectively not leaving those regions at the same pace as they would traditionally. So lots of people, especially at that end of school age, like late teens, early 20s, would often move either for study or work from regions to cities. And we saw that slow down a lot. And we've also seen a little bit of people who have left cities to go to the regions as well. We've especially sort of seen that in Victoria, where it seems that the effect of lockdowns in Melbourne have led to people making decisions about wanting to live, at least temporarily, from Melbourne to regions, often in Victoria, but a bit in New South Wales as well. And your other point was that, yes, Queensland has been the state that has had the fastest population growth over the last couple of years. They have benefited a lot from interstate migration, people moving from other states to Queensland. Pardon?
Sorry.
So we've seen some of that. The economic impacts, it's a bit harder to tell. So the economic impacts that we look really are at the aggregate population of Australia. So, and as we've seen, the growth rate in the aggregate population has slowed down. And of course that feeds through then into the economic growth forecasts and those sort of things. We haven't done really any work on the question of the economic impacts of the distribution of the population around the country though.
Right. And how up to date are your figures? So in terms of that growth in Queensland's population or the net migration to Queensland?
Population figures come out relatively slowly. We've just had a release, I think, of the September quarter last year, which came out, I think, like maybe it was this week, it could have been last week. So that's the latest figures we had. We weren't able to obviously include them in the budget forecast because they come out right then. But so we probably had ones up to the June quarter of last year when we were doing the budget numbers. But I think the September ones show a continuation of that sort of trend for the moment. And the question will be what happens when things are, I guess, we go through the the last bit of the pandemic and we get back to what we might see as normal afterwards, whether those trends continue or go back to the sorts of trends we saw beforehand is an interesting question that we're following.
Okay. Thank you very much, Mr White. Did you have anything to add to that, Ms Wilkinson?
No, that's all.
Okay. Thank you. Who's seeking the call?
Are you on? Okay, I'll have it. Can I ask some questions about the paid parental leave policy measure? Presume, Ms Wilkinson, you and your team provided advice on this measure?
So we worked with the Department of Social Services, but yes, of course, we provided some advice on this measure as well.
Okay. And can you tell me what you are assuming in terms of change of access to this entitlement? There's been some commentary that it might result in less uptake of the 2 weeks dad and partner pay, and more women taking the 20 weeks. What do you understand? Is that the case, or how did you see? What did you see the change happening with this increase of the 2 weeks?
Yeah. So perhaps again, we'll see how far we can go in terms of helping you, and then it might be the case that more detailed questions have to be taken up with DSS.
Yeah.
But perhaps we can just talk in broad terms. About 180,000 people access the paid parental leave scheme every year. Of those, these new arrangements will provide additional benefits to about 120,000. Now, obviously, they're not the same families from one year to the next because it depends on, when you've actually had your child.
Yeah.
So there are some. So the change to the assets test is estimated to directly benefit, or to mean that of the order of 200,000 families will get access to paid parental leave from the government that they wouldn't otherwise have been able to get access to.
200,000 families.
Sorry, did I say 200,000? 2,000.
Yeah. Oh, I was going to say that is
2,000.
Yeah.
2,000.
Right. Yeah.
So
you're bringing in more people who are currently not eligible. 2,000.
That's right.
Yeah.
That's right. So maybe I'll just pass to Ms Elliston, who will just explain how the new means testing arrangements work and why, therefore, that brings additional people in.
Yeah.
Lisa Elliston, First Assistant Secretary of Social Policy Division.
Hi there.
Hi. So the change to the income test arrangements is to introduce an either-or test. So in addition to the individual test that exists at the moment for the primary claimant to have an income under 151,000, we're now adding in also a household test of 350,000.
Yeah.
So anyone whose the primary claimant's income was above 151,000 is not eligible under the previous system, but under the new system, we can move on to a family test. And if the family income or household income is below 350,000, then that family becomes eligible.
Yep.
And as Ms Wilkinson said, the estimate is that there's around 2,000 families that become eligible as a result of this change.
Okay.
So then continuing on, then we've got about 9,000 single parents who access paid parental leave every year.
Who will get an extra 2 weeks.
They will be eligible for an extra 2 weeks. And then we have families who access paid parental leave. Some of them also access the dad and partner pay arrangements, and some of them don't.
Yeah.
The changes to the flexibility arrangements around the paid parental leave scheme, really removing this distinction between primary and secondary carers, so removing a sense that there is one parent that's, if you like, I don't know, more eligible for a payment than another, removing that, folding dad and partner pay into the paid parental leave scheme so that exactly the same accessor arrangements provided to men as to women, and increasing the flexibility for how it can be taken. For example, allowing families to decide if they want to split over the course of a week, 3 days for one parent and 2 days for the other parent. All of those, we think, should make it more attractive for parents, both parents, to access paid parental leave than under the current arrangements where there are many tighter constraints on access to the dad and partner pay arrangements. So
there is that flexibility. Is there, sorry, and this might be for DSS, so I don't want to just let me know, but you're saying that you can genuinely share the 20 weeks. You could take 10 weeks each.
Yep.
You could take 19 weeks and 1 week.
Yep.
You could, right, okay.
It's completely flexible, both in terms of the total quantum and also how it's distributed. And there's a range of reforms that DSS are putting in place to improve to streamline how you actually access the payment, to make it easier for individuals to access the arrangements.
Okay. And then as part of that, you said you think these changes make it more attractive.
Yep.
Do you, as a part of costing this, what is the assumption that, you know, because I presume the cost is tied to funding the extra, or funding essentially a proportion of people currently taking it increasing to 20 weeks. Is that right?
So I think that's right. Again, I think I might need you to talk to DSS about the specifics of the costing, or to finance when they're here next week.
Yeah.
I don't believe that it's the case that when we do the costing, we make an assumption about exactly what the split would be between men and women.
No. No, but in order to get that figure, it must.
We certainly
that cost
assume
comes with an
right.
increased uptake of the 20 weeks.
That's right.
Yes, you're assuming at that point.
Yeah.
I imagine, and again, refer to others for specifics, but it would be hard to imagine why somebody who met the eligibility criteria under the reforms would not now access the full 20 weeks.
That's right.
Yeah.
Whatever combination they sought to access it, but they'd all now be eligible. So you've got the single parents who previously were only entitled and eligible for 18 weeks, so they all expand out. But of course then also in couples, the situation where you would have also had a proportion who only accessed 18 weeks before,
that's right.
and will now also access the 20.
That's right.
And it might be a question for DSS, but I'm going to ask it anyway, just in case it had been part of the assumptions you were working through. But do you think the policy will increase men taking up the entitlement?
So the new policy certainly makes it more attractive for men to take up the entitlement. It also makes it more attractive for families overall in terms of the streamlining. And I mean, we have looked at a range of different evidence that's out there. It's always quite hard to assess exactly what the implications of a change will be where you are making a number of different changes to the arrangements. But when we looked at things like, private companies like Deloitte and PwC have relatively recently made their parental leave policies much more flexible between men and women, and the take-up of men has gone up quite considerably. So removing it, so I think it's a combination of things, removing a perception of who should take the leave, removing that barrier, making it more attractive financially, and making it more flexible. All of those things should encourage the uptake of paid parental leave, and make it easier, in those circumstances for women to maintain kind of connections to the workforce if they're sharing or sharing the care with their partners.
Yeah. Okay.
In some ways, Senator, I like to think of it as it removes that perception, that sense of predominantly the male being the afterthought in the equation. Oh yes, there's 2 weeks. You know, whereas now couples can actually have a serious conversation about whether it is 10 weeks each or what the actual arrangement that best suits their circumstances will be. And I particularly expect that amongst a number of families where men would have been accessing those 2 weeks, there will be the motivation and the incentive perhaps for that to be more than 2 weeks now.
Yeah.
How many more men you get, well, that's a function of a whole range of different circumstances.
Sure. I was just wondering whether you had that kind of assessed or that informed part of the decision about how, so that the policy motivation behind this is increased flexibility, essentially, and then for people to make their mind up about how it suits them, rather than a desire by the government to kind of encourage more men to take parental leave.
Increased flexibility, increased support, increased choice, but also we think as you look at the data that showed that we have been making inroads into closing the gender pay gap, not closed by any means, but have been making inroads across society, and feedback from different circumstances where the model as it was, that perhaps had an element of trying to engineer an outcome, was actually having a perverse result in some cases where it was limiting the amount of time that dads were taking rather than providing the opportunity to maximise it.
Yeah. Oh, okay. And on the implementation of it, DSS, right?
Yes.
Okay.
Yep.
I won't put you through that. Asking questions then. I think they're later today over in the other room. But okay. Now my other questions were BP2. Veterans Affairs measure for processing claims. It appears as a 2-year measure in the budget papers, but we are told, I'm trying to find the page, but it appears as a 2-year measure in 22, 23, 23, 24, I think, for 22 million over those 2 years. Now we're told that there is actually 96 million for this measure. Ms Wilkinson, what can you tell me about this and your understanding of the measure? Was it your understanding that it was a 2-year measure at $22 million? Oh, thanks.
Senator, I can take you through, if you like, the year-by-year UCB for the combined aspects of the measure. We did discuss this yesterday in terms of the 22 million that's on page 175 of budget paper number 2, and I outlined that further resourcing was provided following late decisions that is there and will be provisioned from the contingency reserve, but I can take you through the year by year of that if you wish to get to that 96.
Yeah, so okay. Where would I find it in the budget papers?
Well, given some of it's in the contingency reserve, you can't find all of it detailed as I can take you through in the budget papers, but I can give you the, it's 42.3 in 22-23, 36.1 in 23-24, 10.5 in 24-25, and 7.2 in 25-26.
7 in 20.
And so there's the element, the 22.8 that we discussed yesterday, that is the additional staff to help clear the backlog. And then some of the other measures that have been that are supplementing that include the expansion of computer-based claims processing, investments in streamlining forms, some applications around diagnostic protocols, and some additional resourcing to assist veterans in the completion of the claims or the forms themselves, as distinct from the processing of the forms.
Okay. So yesterday, you acknowledged, I think, and I don't want to verbal you, right? But
Don't make
this,
me laugh again, Senator.
well, because I'm trying to understand. There's the budget paper was the budget was signed off. There was 22.8 million over 2 years, printed in BP2. You'd obviously done your work on that, signed off. The minister got told, ministerial tantrum ensued, calls were made, commitments given, and $42 million extra, or actually it must be more than that, about $74 million extra was then found in the contingency reserve. Is that a correct assessment of how this mess has happened?
I wouldn't use all of that language, Senator, but
would you use?
But it's accurate. But I think it's accurate, isn't it?
As I said yesterday,
It's an unusual.
They were late decisions taken in the budget process.
Like on the weekend.
The completion of the review that the Department of Veterans Affairs had commissioned from McKinsey was relatively late for the budget process. Some submissions were made, some decisions were made in terms of the initial provisioning, and yes, then case was made for extra. Extra was provisioned. I've taken you through what that is in terms of what it looks like. So it was provisioned from the contingency given the lateness, and it was too late to reflect in the printed budget papers the detailed implications of that in terms of it showing like it does in the budget papers will show in PFO when that's released.
So the case, when I use the word ministerial tantrum, you use the words a case was made, but we're talking about the same event, aren't we? Which is the Saturday morning when a media conference was called, threats of resignation, much outrage.
There were a number of discussions about the DVA case. Significantly more was provisioned last year to increase DVA's resourcing and ASL numbers to help with the backlog. So this is supplementary to all that was done last year.
Okay. I think what you're saying though is the budget cabinet decision obviously was 22 million or 22.8 million, and then you've struck this arrangement, post the publication of the budget. Is there a provision in the contingency reserve just for fixing up problems like this? You had enough in, and what else is in the contingency reserve sitting there?
So to answer the last question first, what's in the contingency reserve is actually stepped through in a fair bit of detail in these budget papers, and any implications for the contingency reserve other than those that are not for publication due to commercial sensitivities or national security reasons or whatever will be plain for all to see when PFO is published in the next few weeks. But the contingency reserve, for example, includes $3 billion of anticipated additional expenditure in the flood response. So that's there, that's identified in the budget papers along with a number of other elements. Now I'm trying to remember the first parts of your question, Senator.
There's obviously room. There was room in there to allocate 74 million for this.
There's always some
payment
minor
of the ministerial tantrum.
There's always some minor headroom provided for to enable for certain decisions that need to be taken.
Normally that would happen when the budget, though, wouldn't it?
We obviously had extensive discussions around the CR in MyEFO last year, and subsequently you saw that a lot of those decisions taken but not yet announced elements of that were for things like the Antarctic investment or the Great Barrier Reef or as sort of flushed through in this budget, the women's safety package and so forth. So the CR is comprised of its different elements: the conservative bias allowance, and specific provisioning for different expected expenses like the floods. There's the decisions taken but not yet announced, but then there's also some degree of flexibility usually provided too.
Yeah. And the fact that it's not in the decisions taken but yet announced category is because it wasn't a decision taken through the budget process. It was a deal that was made after the budget.
Look, it's a decision.
Okay.
It's a decision that was taken before the publication of the budget, but after the printing of the budget. So it's why I can provide you with all of the details of what the decision is right
Sorry,
now.
can you tell me about that again? It was a decision taken before
the publication of the budget, but after the documents themselves had gone to print.
Oh, yeah, rightio. Yep. Got that. Okay, and then on the specific measure itself, like, from what I understand, the claims processing, there's 60,000 claims waiting to be processed. This 96, Treasurer, you would, Ms. Wilkinson, you would have been involved in the costing of what it would cost, although that's finance as well. Sorry, yeah, all right, I know you're going to redirect me.
Just about to handball back to you.
Yeah, I did it myself. But presumably the 96 million equals the dealing with this backlog. Why then did the government make a decision not to properly fund it at the beginning? Why did we end up in this mess? If you valued sort of veterans' access to compensation and having their claims processed, why didn't the government deal with it in the normal way, which would be to fund that measure properly through the budget process? It looks like you're kind of doing a third. You want to attack a third of it but not deal with the big problem, and that's why the Minister G, lost his temper.
Because there's an intersection here between simply clearing the backlog and some of the technology and other improvements that this measure will fund. So, as I said, last year we provided significantly more than this total amount to support DVA in the employing of additional staff to clear the claims backlog. DVA have employed most of those staff and are working through it. We accepted the argument that they still needed some more staff to improve the momentum in clearing that backlog, and that's why the decision that you can see in budget paper number 2 is there. Okay. There were then additional elements that I just took you through in terms of some elements of technology and streamlining of forms and different things that at the late stage of the budget cycle it was a question of whether to do those immediately or to look at those in a MyEFO context with a bit more scrutiny. Ultimately, in the backwards and forwards of the issue, the decision was taken to do them immediately.
Okay. Do you have, in terms of the original, the 22.8 million, how many claims was that going to process? Do you have that information?
I'd have to probably defer that one to DVA, I suspect.
Okay. All right, but if 96 million does 60,000, presumably, it would be around less than a third of that, I would presume. Anyway, all right,
yeah,
DVA.
It's not proportionate because I said, Senator, there's the difference
finance.
between the number of staff there simply clearing the backlog versus different elements that go to upgrading the way their systems work, which will help over time with the backlog, but also hopefully build a better system for them for the future in terms of the technology.
Capital investment.
That's right, Senator, that sort of thing.
Okay, and Minister, have you ever seen this happen this way before in your time as a minister?
You would have seen it all, Mr. Birmingham.
No, but it is a unique set of circumstances, I think, that presented, where a minister, you know, goes outside the cabinet, does a media conference, says he's demanded more money and he's been given assurances that it's going to be there after the budget's been finalised. Have you ever seen that happen before?
Look, I think Senator Scarr's right. I've seen lots of things from different ministers and others before. It's only my second budget as finance minister,
but you've been a senior minister for
I have.
a long time.
I've been a minister who's had to argue with finance ministers and treasurers to secure funds.
So have you seen this happen before, where we've had a minister give a media conference to demand more money, is given that money, and the fix is done afterwards? No.
Not that I can recall offhand, Senator, in terms of the precise set of circumstances, but in every budget there are ministers disappointed who think that their case was one that should have been acknowledged, and if the Australian people make what I think would be an erroneous decision to elect an Albanese government, but if they did, well then no doubt you'll have plenty of ministerial colleagues disappointed with you if you're in my shoes in the future.
Yeah, good problem to have. Okay, finally...
It is, Senator.
Yeah.
I hope to continue
Better
to have
than the
it.
alternative.
I'll take the disappointment of my ministerial colleagues in the next budget cycle very happily. If I'm
Although I
given that
hope to not
chance.
have a repeat of what happened from Minister G, I think. Okay, on the on the original decision to fund it, the government must have taken a decision to reduce but not to eliminate the backlog in processing claims. Would that be a fair assessment? You wanted to come part way but not the full way.
No, Senator, I don't think it's a fair assessment. As I said, we made a very substantial additional commitment to DVA last year. When presented fairly late with the proposal for this year, which was informed by, I gather, a review that DVA had undertaken, we agreed to the additional staff elements of the proposal because that's where we could immediately, consistent with what we've done the year before, see the opportunity to speed up claims processing. Areas of investing in terms of their technology and those sorts of transformational elements will, we trust, also add to that, but some of them do go to longer term capabilities, not just shifting the dial in the next 12 months or so.
Senator Gallagher, I need to share the call.
Oh, okay, sure.
If
No,
you're
that's
happy
fine.
with that. Senator McDonald.
Thank you. Well, I've already outed myself as being very excited about the regional spending in this budget. And so I want to...
I am too, Senator.
Thank you very much for your support, Senator Scarr. That's terrific. So I want to go back to that. In 2019, the AgriFutures winner, Joe Palmer, estimated that if we could access the partners, primarily women, but partners of people who move into regional areas, it would be worth $1 billion a year. I know it's an extraordinary number, primarily because a lot of them are white-collar workers who can't have the matching jobs in regional spaces. One of the exciting things about COVID has been that we've moved to this online digital world and people are able to work remotely. And so with the Regional Accelerator Program, the regional hubs, all the supporting programs that have been identified in this paper. And also, I believe there's another document like this, but for the regional programs.
There is.
I'm just struggling to get my hands on it. If anybody has a spare one and would give it to me, I'd appreciate it.
I'm sure we can get one to you.
Thank you. Terrific. I want to know, the important part about getting this right, so hooray, money allocated, is going through a master planning process similar to what's happening in Northern Australia with the Northern Australia master planning process. And if you're not aware of it, I recommend it to you. It's Northern Australia is very excited about it. With all things being equal and in the first part of the term of the next government, how would you see this being mapped and unfolded? Is that something you've turned your mind to, or is that something that regional areas should be coming to the Treasurer with programs and ideas?
Yeah. So, Senator, you're absolutely right that planning carefully is going to be really important for both the Regional Accelerator Program and also the regions package more broadly. So responsibility for actually implementing those programs is spread across the Department of Infrastructure and then a number of different portfolios. So the Regional Accelerator Program, the $2 billion investment in growing regions, has been quite deliberately designed to use existing programs and to have an additional spend in those programs which is more focused on regional areas. It leverages the approach the government used through COVID in terms of, where possible, using existing programs that work in order to then drive those outcomes. So it does mean that across the public service, across all of those different areas where the Regional Accelerator Program will be rolled out, there is going to be the responsibility to be thinking carefully about how that part of the investment can be managed most effectively. I'm sure the Minister can add, but my recollection is that the actual process for distributing these funds and making decisions within the individual programs then has to be managed centrally so you can think about the connections between them all, and that's the key responsibility that the Minister for the regions has. So that's the Minister Mackenzie has that key role of approving how all of that is actually working and making sure that it all works together. So it's as it's a big task to coordinate across different portfolios and then also different layers of government, and in relation to the regional investment package, coordinating with industry as well, because there's an important partnership here for Commonwealth Government, for state governments and for industry to work together so that the most can be leveraged from these very significant investments.
Were you going to add something to that, Minister, or...?
Look, Senator, really to echo what Ms Wilkinson has said, but the uplift in using what have been proven to be successful areas for government investment, such as the Modern Manufacturing Initiative, Australian Apprenticeships Initiative, the Critical Minerals Accelerator Initiative, Export Market Development Grants, the Recycling Modernisation Fund and Defence Industry Program, they're all areas where the government has demonstrated an ability to effectively support economic growth and to activate further private sector investment across the economy, and so that's where the vision here of saying let's make sure that these programs, which have supported regional Australia to an extent in the past, now have some dedicated streams that guarantee investment in regional opportunities to ensure they don't get squeezed out by bigger or other city-based applicants, but have the opportunity to yield the same benefits and to build the type of stronger regional growth that we've heard before is actually shifting population dynamics and housing dynamics in positive ways across the country.
Well, I think there was a requirement for urban congestion expenditure of, I think from memory it was $10 billion a few years ago that it was estimated at, and it seems to me that moving populations into places where there's greater lifestyle and economic benefits to the nation is very attractive. I say that as a regional person, so I can continue promoting that. So I guess that's the part that I came to this Parliament of the belief that growing the regions is not just a nice thing to do, it's actually critical for the prosperity of the nation, particularly as we move to make it good for Australians. I think FIFO is a terrible blight on our societies, and what it does to communities and families is awful. That is an opinion, not a policy.
Speaking as FIFO workers of sorts, as
yes,
we are.
Indeed, exactly. I'm interested in understanding how Treasury will approach the modelling of, we've identified these billions of dollars to grow Australia, to grow Australia's prosperity. It just happens that most of it will come out of the regions. How you'll look to be modelling this to support the investment, because I'm keen that it doesn't, should there be a change of government, that this doesn't slip away. It's such an important agenda for Australia to grow into the future.
Senator, I think, and Ms Wilkins might want to add that there's the specific investments that will now be undertaken, certainly if our government's re-elected, in terms of delivery of these programs. And then there's the broader benefits and an assessment of what happens there. So, Department of Infrastructure and Regional Development will play the driving role in terms of ensuring that for the infrastructure piece and energy security piece, that where those investments occur in the centres across regional Australia, there is thorough analysis of the different pieces, whether that be in port infrastructure or road infrastructure or rail infrastructure or water infrastructure. The different parts that are identified there will have to each stack up to meet the assessment to then receive that funding and the transformations that will deliver for those regions. These areas identified under the Regional Accelerator Program will have to meet the grant conditions and guidelines for the different streams that it will support. But then there is the aggregate of how is this continuing to shift the dial in terms of economic performance, and particularly economic performance for regional Australia. Big drivers of this, as I know you appreciate, are the export and wealth generation elements for the country. Regional Australia generates around 67% of the nation's total exports, about 82% of Australia's goods exports, and so investing in the areas that are currently our wealth generators for not just the regions but all of Australia is about cementing that future, and especially in areas of expanding the agricultural exports for the nation to meet our $100 billion Agriculture 2030 strategy, or growing the potential of new energy and resources activities from critical minerals to hydrogen, and seeing that potential realised too.
So just on that, Minister, with your indulgence, Senator McDonald, it seems to me there also needs to be interaction with the state and territory and governments in relation to the deployment of those funds. So you mentioned critical minerals in our home state of Queensland. There might be critical mineral deposits that are relatively isolated and which need an improvement of infrastructure, roads or ports or whatever, in order for them to be accessed to unleash opportunities, not just to access the critical minerals, but also employment opportunities for local towns, including disadvantaged communities, Aboriginal and Torres Strait Islander communities. So there's going to be that piece of interaction with the state governments as well, so we can leverage every dollar that's in the Regional Accelerator Fund.
Necessarily so, Senator Scarr, that as is often the case on infrastructure projects, it's a partnership arrangement. Now, for major road infrastructure projects in regional Australia, we have adopted in general a forward-leaning position where the Commonwealth undertakes an 80% funding split compared to a 20% with the state or territories. In urban areas, we do more conventionally a 50-50 split. In these sorts of projects, there'll often be, for the infrastructure side, in areas of water and ports and the like, negotiated depending on the circumstances of different projects. And if you take the investment in the Northern Territory as an example there, the NT government has firmly been promoting the benefits of the Middle Arm Industrial Precinct and the energy and advanced manufacturing and other developments that they seek to leverage growth from in that region. And we trust that this allocation from the Commonwealth will help to achieve a step change in terms of their ability to realise those visions.
Excellent. Sorry, Senator McDonald.
Thank you. So my final question on this regional part, and then one question after that, Chair, is Tom Gilmore was the mayor for Mareeba up on the Atherton Tablelands outside Cairns, and when he was leaving office, he made the point to me that under current Infrastructure Australia guidelines, a project like Tinaroo Dam wouldn't be built, but under a 30-year kind of ROI program, and yet after 50 years, that's generating $500 million worth of food and fibre in that region, employment, activity, and close to our near neighbours as an export market. I'm probably just making an observation that the way we measure infrastructure, particularly long-term infrastructure like dams and rail and roads, I think we have to think about, the years pass so quickly. What is a good number to have all that surrounding infrastructure spring up? It doesn't happen overnight. Industry has to change, technology for a good return on investment. So actually, that's probably a comment, unless you have something to add to that.
I'll transform it into a question.
Oh, thank you.
So the point Senator McDonald makes is very important. So, for example, when you're considering, say, to take my example of critical minerals deposit, one deposit might have been identified and a case is done on the basis of that deposit, but what that doesn't take into account is how that area or region might be liberated through the provision of that infrastructure, such that other deposits are identified, other opportunities are realised, which if you just take a plain vanilla ROI, internal rate of return analysis based on the known opportunity, you don't sufficiently take into account the opportunities which are reasonably confident will flow, but which can't necessarily be identified with particularity in the first instance. So how do we make sure we get the balance right in that regard, Ms Wilkinson?
So
how long have you got?
So it is genuinely the case that Infrastructure Australia try and take into account broader societal impacts of these decisions. So, and I think it is always important to remember that the sort of straight return on investment calculation, which can feel a bit cool and clinical, is one input into decisions around the where funds should be spent. But you also, in these exercises, do need to think about what are the broader sort of societal impacts. Is there a strategic fit? What are the delivery challenges? There's lots and lots of different things which go into a proper planning and assessment process around projects. And I don't think I'm adding anything. I mean, I think I'm just reiterating that that's really important. Coming back to your, if you like, your sort of original question, from a Treasury perspective, how do we think about this? I mean, one of the things that we always focus on is making sure that the money that's committed is spent well. It's spent on projects where there is a rigorous assessment, where we are confident about the returns. I mean, these are the points that the Secretary was making earlier. That's important, that the quantum is important, but also how it's spent is important. And that's kind of one of the lenses that we would look through.
I mean, that rigour question is, I guess, the one that regional Australians, we reflect on if the rail project from Normanton to Cloncurry had been built at the turn of the last century, how that would have changed the development of the north. I'll start waxing lyrical if I go on. The final thing I want to ask you about...
It's not a precise science.
Yes,
Donald,
yes. No, well, and the Copper String project in Queensland that the Queensland and federal governments are working on, is that kind of forward-looking, long-term infrastructure to open up, known reserves of critical minerals, agricultural value add. So I think that's a good example of something that doesn't immediately return on investment, and it will possibly be some time, but it's important. What I wanted to ask you about finally was I'm listening to those numbers on the unemployment rates for women at the lowest point for 48 years and then turning to 50 years in the near future. But the interesting part is the gender pay gap. Each year I've heard what the amount is narrowing by. Do you have an updated figure on where that's up to?
So in terms of the unemployment rate, women's unemployment is currently at 3.8%, so it's below the national average, and it is the lowest level since 1974. The gender pay gap is currently 13.8%, and I am sure that I have. In fact, Ms Ellison, I'm sure, has the figure on sort of exactly what is that gap. This is, again, the lowest level. It's come down from nearly 18% in about 2013. And in terms of converting that into quanta, I'm pretty sure that Ms Elliston can do that.
While she finds that, while Ms Elliston finds that, I've been an accountant working in business for, over 30 years now, and I reflect back to the conversations that you used to have putting on men and women. And I remember, people saying, oh yes, that woman who's going to the same job as the bloke we employed a month ago, but she's the second income in that household, so you pay less. It's a way of thinking that fortunately has disappeared. But it was real.
It's moving. It's moving.
Yes, you're right, not disappeared.
I'll bring your attention to so in the women's budget statement on page 28, we've got a discussion of the national gender pay gap, and we do highlight that the chart 2, I think, is quite instructive. It remains the case that female graduates get paid less than male graduates when they enter the workforce. It's improving over time. But there is, more work to be done.
More work to be done. That is an interesting graph, isn't it? That it actually peaked in November 13. There'd be some unusual things to unpick. What the thinking
so
was
compositional
then.
Changes in the workforce have quite a big impact on the estimate of the gender pay gap over time.
Yes.
And so that's why you want to look at broader trends rather than a movement from one quarter to the next. And I've just found that figure for you. So with a current gender pay gap of 13.8%, that means that women are earning on average $255.30 per week, less than men.
Okay. Thank you, Chair. That's the end of my question.
Thank you, Senator McDonald. Senator Chisholm, Senator Walsh.
I assume this would probably be for Revenue Group. Is a question around the cut to the beer excise?
That would be for Revenue Group.
Yeah, okay.
Yes.
I don't think we have anything else for fiscal then. No.
Oh, okay. Do you want to stop for lunch, or would you? Yeah, okay. So we'll stop for lunch and we'll return at 2:15 p.m. for Revenue Group. Thank you very much. What? What's wrong? Yeah. We'll recommence following our lunch break, and I welcome the Minister back again, the Honourable Simon Birmingham, and we are now into Revenue Group. So welcome, Revenue Group. Ms. Mrakovic. Excuse my pronunciation.
Very good.
Thank you. Who would like the call? Senator, there aren't many options, Senator Chisholm, so...
So I was just going to start quickly
Beer.
on... Yes, that's right. I saw in... would have been...
We could go and do it over one instead if you like.
Have a chat about it over a beer, yes. Not after your slanderous effort 10 minutes ago there. So I saw reports mid-February that the budget will contain a cut to beer excise. I suppose, was any work done on a potential cut to beer excise?
Senator, I'm sure Ms Marakovic probably has a standard answer she gives on these situations about the range of different policy work that is done in the context of a budget to help inform decisions. We don't generally go through the hypotheticals of what could or couldn't have been in a budget. The final decisions are as outlined in the budget papers.
Okay. So I'm sure you were aware of some of the media speculation on it, Minister. Is that something that was in the budget at some stage or was under consideration at some stage? Like, I'm just trying to get a sense of how it sort of ended up. I think of multiple reports that I can recall, one on TV, one in print saying it was going to happen, and I certainly know that the hotels industry are extremely disappointed.
Yeah, no, there were multiple reports, Senator. I recall seeing some of those. I think I recall at a doorstop one day a few weeks ago saying rather pointedly that anybody who thought they knew precisely what was in the budget was probably seriously mistaken and should be careful about making such prognoses. And that was in response to the range of reports, and there's always lots of speculation on different things. Yes, it's public knowledge that certain sectors were lobbying for different areas of tax relief, and that beer excise was one of those sectors. And I understand very genuinely the concerns advanced by the Hotels Association and brewers and others in that regard, and we know that that some of those businesses have been through tough times during COVID-19. Now we've helped to support from JobKeeper and small business payments, and then targeted payments through the states and territories at different times to assist those businesses, as we have other hospitality businesses and other businesses in general affected by COVID. Ultimately, budgets are about decisions that you have to make and priorities that you have to set, and the prioritisation we undertook was in terms of ensuring that our economic plans for the future were well supported in terms of driving further small business investment and skills development and infrastructure, as we've spoken about already, that we addressed some of the real cost of living spikes that Australians are feeling from the shocks in Europe, and that we lowered the level of projected deficits going forward. And we did each of those things in the budget. It wasn't possible to meet, of course, the demands of everybody else for everything else.
Thanks for that, Minister. I had some questions also just on company tax. So the budget overview notes a big jump relative to MyEFO on predicted company tax receipts in 22-23, which then starts to fall away. There's an upgrade of $10.3 billion in 22-23, but overall for the 4 years to 25-26, the upgrade is $9.8 billion. And particularly the 24-25, the budget estimates a fall in company receipts relative to MyEFO. I just wanted to try and get a sense of what's behind that.
I suspect the commodity price assumptions are playing a fairly big role there, Senator.
Miriam Rakovic, Deputy Secretary, Revenue Group. And that's correct. It is actually commodity prices that are a large part of the story, and specifically the fact that commodity prices have been so strong in recent times. That is combined with, in fact, the assumption that is made in the budget statements that essentially we do expect there to, for those very high commodity prices to actually come down. Those assumptions around commodity prices are set out in statement number 2, but essentially you kind of have iron prices, met coal prices and thermal coal prices very high at the moment. Those obviously, and they have been in the recent past, they are factored into obviously larger than expected company tax payments that we are to some extent already seeing and expect to see in the next year or so. But then as the assumption kicks in around a return in those commodity prices to lower levels, you essentially have that short-term effect dissipate. I don't know if Ms DeMarco has anything to add.
No, I think that's right. Katrina DeMarco, First Assistant Secretary, Tax Analysis Division. Because of the mechanical way that those conservative commodity price assumptions have been applied over many years, you do find that general pattern where you do get that lift in the first budget year should prices be higher than the base assumption, and you do see that flow through. Because of the timing of the company tax system, you do see that drip through over a number of years.
Okay. And what about, is that a trajectory that goes beyond 26?
So basically there's an assumption that you have the prices are kind of on a downward path out to, I believe, around the September quarter of 2022, and after that they are held flat. Right. Post the forward estimates, I think that we actually rely on the longer term, the medium to longer term economic projections. I won't go into detail, but it's probably a question best put to macroeconomic group, because then they start thinking about the evolution of the terms of trade and
you can't come up
broader considerations beyond that point.
You can't come and say, I've got to ask questions to the ones who are on earlier.
Essentially, maybe the other way I will answer that is to say I would not anticipate...
Although we are back on Wednesday. Sorry.
I would not anticipate commodity price variations, variability to be playing any role in the medium term.
If you've got budget paper number 1 there, Senator Chisholm, then the sensitivity analysis on page 64, 65, and particularly if you look at the table 2.3 on page 65, if you look at table 2.3 on page 65, it gives quite a good timing sense of understanding about the impacts of the different commodity price assumptions. That sensitivity analysis is basically moving the fall in prices back 6 months, and it shows that if that were to occur, then, as Dr. Kennedy said earlier, barring any other impacts across the economy, you'd see most of the additional revenue from those higher commodity prices realised in what would be additional company tax receipts in the next financial year. But then, because you've got a tapering fact and a timing fact around company tax receipts, there's still an amount, a substantial amount in 23-24, but then it comes down to effectively nothing by 24-25.
Yeah. So I've got some questions which go to that. So if we take the booming commodity prices out of the equation, what does the rest of the corporate mix look like? Can you give us an overview of any other notable changes since MyEFO?
Senator, I think broadly speaking, it's fair. I'd point you to, I think it's page 118, which doesn't split it out by commodities and mining versus non-mining. But if you have a look at the table 4.4 and the line of gross operating surplus, which covers company profits, you can see sort of that pattern, which then is reflected up in chart 4.4, where you've got falling gross operating surplus in 22-23 and 23-24, which is largely driven by your commodities story, and then it's growing again at 4.25 fairly flatly over 24-25 and 25-26, and that's just, you can see profits growing in line broadly across the economy at that point in time.
Okay, so budget paper 1 notes the continuing volatility of the commodity prices that underpin the big jump in company receipts. that jump wasn't anticipated as recently as MyEFO. So what's the probability that either doesn't materialise or we get a drop-off sooner?
I think, so I mean, the whole point here is that we assume it drops off, and drops off quite sharply in terms of the assumptions, as we have previously. The reason there is a big dividend for this financial year is in part because of the company tax receipts from commodity prices, because we had assumed they would drop off in their levels earlier. The reason there's no real dividend realised in the budget papers from the company tax effects of higher commodity prices by the time you get out to 23, 24 or 24, 25 is because we assume that they've already come back to previously assumed levels. So the fact that that is a 6-month trajectory essentially for them to come back to the much lower levels that we assume I think the budget language is unwind over 2 quarters, is a pretty steep downwards trajectory. I think there's far more commentators out there who would suggest there's more likely to be an upside from that scenario than a downside from that scenario.
And Senator, if we could just add that essentially some of those stronger commodity prices have already been reflected in company tax collections coming in stronger than expected already in what we've seen since MyEFO. So we basically have already in just the 3 months of information that collections have been running around over 12 billion stronger than we anticipated at MyEFO, and I'd say that company tax collections are associated again in large part with the commodity prices are part of that story. So we're basically already seeing those company tax collections come in, and because of the way that company tax system works and instalments paid in some respect contemporaneously, but some with a lag, that also accounts for some of the expectation that we have in terms of stronger company tax receipts into 22-23 as well.
There's also some uncertainty noted around the extent to which companies will use losses incurred during the COVID-19 pandemic to offset future profits. Did you model the bounds of that?
Senator, I think what we've already seen to date is, in part, as Ms Marakovic referred to, the strength in company tax that we've seen this year being led by commodities. In part, it's also been led by collections, payments made for income from the 2021 year being much stronger than we thought. And so what we've actually seen is those losses not being as deep, and so companies returning to profitability sooner, and we've seen that flow through company tax collections. That is always a risk because we've yet to see the full amount of 2021 returns come in. We won't really know what that 2021 position looks like until mid this year. But at this stage, what we are seeing are very strong returns coming in from companies across the economy for the 2021 year.
But just specifically in terms of how you model that, do you have sort of an upper and lower expectation, or how does that actually work?
Primarily with this, Senator, we run with a central expectation based off the collections that we have seen. We have, the forecast, sorry, I'll take a step back, Senator. The forecast is based on a central estimate. We don't have an upper and lower based on losses in these forecasts.
Okay. Is there any more detail you can give me about what that uncertainty is based on? Particularly, is it a question of the attitude of company taxpayers, i.e. can they offset, but will they, given they may have received JobKeeper or other supports, be mindful of public scrutiny? Or is it a question of whether their performance makes the offsets available?
So I wouldn't describe it as an attitude thing at all, Senator. I guess when we characterise that risk, what we saw after the global financial crisis were that losses were deeper and that they took a long time to work their way through the system. What we've seen in the post-COVID world is those losses have been much shallower than we expected. That is in part driving the upgrades that we are seeing. and that we have seen over successive budget estimate updates, which I think the Secretary talked through earlier, but it's not, I wouldn't describe it as a choice thing, Senator.
I just had some questions around from the overview on company tax. So 0.6 billion in that bump on company tax receipts since MyEFO is due to the new measures, mostly the extension of the tax avoidance task force. Does that simply reflect the ongoing impact of the task force established activities, or will that incorporate changes to policies or settings in that space?
So, Senator, the assumption is that the program in effect continues for another 2 years. So it is basically an extension of that program. In terms of, obviously the level of activities and the kind of impact on revenue, it's a conversation that we have with the ATO in terms of, undertaking the costing of the measure, how much basically they anticipate in terms of that activity will actually return as higher revenue. But it is, in effect, the continuation of the program.
Okay. And what proportion of the other 1.5 billion comes from each of the other entities the task force targets? Large public and private groups, trusts, high wealth individuals?
Senator, I'd have to take that on notice, but it may also be a question better directed to the tax office.
Yes.
Yeah, okay. Yeah. So I've got some other questions on this that I'll put. And
I think that if it comes to the detail around the different sub-programs and the allocation of effort, those questions are definitely better put to the ATO.
Okay. So will that extended funding involve new work programs, recruitment of new skills, new tools or policy settings, or will it just be business as usual?
Again, I think it's a question that it would be best put to the ATO.
Okay. Just on the OECD timeline in the context of international signals, around the delayed start dates, has Australia expressed a view to the OECD about when we'll be ready to commence implementation of Pillar 1 and Pillar 2?
Senator, the way that I would categorise that is that Australia is fortunate enough to sit on the steering group, and we participate in the discussion that's happening at the OECD level around essentially trying to progress both the Pillar 1 and Pillar 2 components to their current timelines. We've always said that, the OECD has always said that it's a very aspirational, ambitious timeline, but nonetheless we continue to focus efforts on essentially trying to achieve that timeline. I'm aware that there has been speculation or conversations around the fact that, some important timelines are approaching and whether or not the work will be done, and, also conversations around different countries expressing concerns with some components of the measures, but certainly from my perspective, and I will ask Mr Robinson if he has anything to add, but certainly from my perspective, as we sit on the steering group, we continue to make best efforts towards the timeframes that were set out originally. And in fact, I can tell you that we're meeting tonight at 10:30 with yet another steering group.
10:30?
Yes, we're very lucky here in Australia. Our participation generally occurs between 10:30 and 2:30 a.m, 3 a.m. in the morning. And I can tell you that in order to meet the very ambitious timeframes in the middle of the year, we have had as many as 6 to 8 meetings set up in the course of March and April. So that has been a fascinating thing to try and balance at the same time as put a budget together. So we are, there's definitely a lot of hours being spent in committee trying to progress these. And certainly the focus remains on trying to achieve those Pillar 1 outcomes that are very much focused on the second half of this year, and Pillar 2 outcomes which have a start date of 2023. And we are making best efforts towards that. Mr Robinson?
Marty Robinson, Acting First Assistant Secretary, Corporate International Tax Division. Look, there's probably not a lot more to add from what Ms Marakovic has already said. I think as she noted, back in October and when the high-level framework received endorsement by the G20 from the OECD proposal, there was a very strong endorsement by political leaders globally around the desire to have the Pillar 1 and Pillar 2 reforms commence very early, and so there's that strong political commitment to beginning of 2023 for both pillars to take effect. And the OECD has been driving a very hard program on doing everything it can to ensure it delivers on the trains of work in that time frame. As Ms Marakovic said, we've spent many long nights. Certainly my team has been highly involved on negotiations around the Pillar 1 and Pillar 2, so we're certainly working towards those time frames.
Okay. So I'll just go a bit more on this. So there are countries proposing a delayed implementation, but you've made the point here today, and I think it'd be fair to say consistently, that every country is dealing with different challenges in implementation. So how would you context Australia's challenges to comparing that to other countries who may be suggesting that they delay? Would it be fair to characterise Australia's as we're keen to push ahead and get this implemented, or are we a bit hesitant in terms of our engagement?
So you might recall that the whole process that we're actually engaged in, I'd kind of separated into two factors that have been important to us for some time. The first is the approach that Australia has generally taken to the base erosion and profit shifting program of the OECD, which since basically the start of it in 2013, 2014, Australia has actually been not only strongly supportive, but in fact in 2014 actually did a lot of the driving of the decision to actually move to BEPS being undertaken by the OECD. So we've actually been very strong supporters in that, and Australia has actually implemented pretty much most, if not all, I think it's a very large majority of the actual action items under BEPS. The second thing I'd say is that there was a lot of conversation at one point, discussion around the possibilities of digital services taxes, and as a result there was a consultation process that was run in Australia, and the very strong feedback from stakeholders at the time, which I think has influenced the government's decision, was that basically it was best not to have a whole raft of unilateral measures in individual countries, that we would be part of a multilateral consensus, a multilateral negotiation at the OECD. So with that end in mind, we entered into the process. That process very quickly devolved into both a Pillar 1 and Pillar 2 process. Pillar 1 is normally categorised as the reallocation of some of the income from the, if you like, taxing jurisdictions to the market economies, where that, some might argue where that value is actually being created by the actual existence of the market. Pillar 2 is sometimes categorised as that global minimum tax rate. And the important thing to note is that they have been seen very much as two pillars of the one arrangement. So it's been important for various stakeholders to see them being progressed together. or at least, in a kind of, lateral move to each other. And so in that regard, we've always seen progress on both Pillar 1 and Pillar 2 as part of that negotiation.
Mm-hmm.
And as I said, it also fits into the view that we have generally taken around the importance of base erosion and profit shifting participation. So that's all a very long way of essentially getting to the heart of your question, which is to say that yes, every country will have its own individual challenges in terms of implementation. We have been very focused on being a party to an agreement, and as part of that agreement, implementing both pillars to the best of our ability. We have been engaging with stakeholders. We have tried to understand the concern of companies in Australia, doing our best to address those concerns by our interventions and the comments that we're providing to the OECD. But we have also been at pains to explain to stakeholders that we are one of very many countries participating in a multilateral consensus, and while we do our best to represent Australia's interests and the interests and concerns of those companies, at the end of the day it's also about a negotiation. But in terms of also the implementation, we will be working, we have worked and we will continue to work very closely with Australian companies to essentially ensure that we take their concerns into consideration as best as possible.
Okay. So I think it was in February at Estimates you said we were still aiming for that 1 January 2023 date, whilst there are jurisdictions pushing for the delay. There are still other countries who are likely to stick to that start date of 1 January 2023. Would that be correct to say?
So certainly to the best of my understanding, there are still countries, and indeed, quite a few countries, many countries that I have understood are sticking to implementation in 2023. There is one element, is it the undertax
France
payments?
and Germany.
Yeah. But I guess that, look, I've seen the speculation in the press, I've seen the commentary in the press around some countries expressing concern. I don't know how those concerns will land, but I would only go back to saying that we've always understood that it is very ambitious in terms of a timeline, and that we are making best efforts towards implementation consistent with what we understand to be still the timeline that has been agreed at high level at the OECD.
Okay. So would you say that Australia would be ready to join with other countries to pushing to keep the 1 January 2023 start date?
I think that we would be part of a active conversation in terms of trying to understand what the concerns are. I don't want to get ahead of things here, but I'm just trying to think my way through the issues. For example, if it was raised at a steering group meeting that a number of countries were having difficulties, or that there were problems occurring that would challenge those timelines, I think that we would be very keen to listen, understand the issues, try and get a feel for what the problems are and whether they were actually going to be a problem that would result in a significant number of countries perhaps not being able to join, very large countries perhaps. And then we would have to, I think about where we would sit in that overall scheme of things. But to date, I can tell you that we have not, that we have spent more time, far more time, focused on how do we actually prepare ourselves and make this happen, than thinking about what are the opportunities for it not happening or being on a delayed schedule. So we're focused on basically achieving the timelines that are currently set.
Okay. I've actually got, if I get a good answer, one more question to go on this.
Well, hopefully you can foreshadow the answer you're looking for in your question.
On the answers I've
No, I
already got.
understand. I understand.
So just on, like, obviously when it comes to stopping multinational tax avoidance, the sooner this is implemented, the better, and the message that that sends to other countries as well. I imagine there will come a point where some countries that are ready to start may end up doing that before all countries are going to sign on.
I might ask Mr. Robinson to reflect on that.
Yeah, sure. So I guess it's important to think about the two pillars in sort of responding to that question. So pillar one, which basically relies on the redistribution of some of the profits of the largest and most profitable multinationals between the sort of current taxing and market jurisdictions, relies on quite a coordinated global approach to implementation. And so from that point of view, having countries being ready and prepared to implement the Pillar 1 reforms at the same time is going to be very important, firstly from a tax administration point of view, because there's a lot of information that will need to be shared amongst tax jurisdictions in order to calculate the redistribution of the profits and to which jurisdictions they go to, and then for the tax jurisdictions in those countries that receive the additional profits to then apply the taxation arrangements. And then secondly, from a global corporate point of view, having that implementation globally is going to be very important for them in order to give them certainty. So that's something we're certainly very focused on, both in the approach to the negotiations in the OECD, and the OECD is very alive to this issue, as are the participating countries. Pillar 2 is slightly different in that it doesn't necessitate all countries implementing the Pillar 2 arrangements. So whilst I think 137 of the 141 countries that form the Inclusive Framework Group endorsed the Pillar 2 framework, it's then up to those countries to make subsequent decisions about actually, number one, going ahead and implementing Pillar 2, and secondly, decisions about the timing with which they implement Pillar 2. So the objective is to have Pillar 2 implementation from 1 January 23, but certainly, and certainly no earlier than that. But some countries that may choose to defer the implementation or not implement at all would have the right to do that. But the countries that do implement from 1 January 23 could then start exerting taxing rights on undertaxed profits globally. So in some sense, there's actually going to be an interest for many countries to implement, certainly from the time that the OECD rules allow. And secondly, going to the broader point I made in relation to Pillar 1, there's also a very strong interest from a business perspective for good global coordination in the introduction of the rules. Again, from a business perspective, certainly the feedback we've been hearing from stakeholders and businesses that we've been consulting with to date is very much that a introduction of the Pillar 2 rules, where it's sort of staggered across different countries, and particularly when you have companies that have presences in lots of different countries, would just add to complexity. But I guess the key point there is there's no particular rule governing when countries introduce those Pillar 2 rules, but we're certainly working towards that January 2023 time frame for both Pillar 1 and Pillar 2 in terms of the work we're progressing.
And on Pillar 2 specifically, there's not necessarily need to wait for other countries. There's effectively, or some incentive to even be one of the first to operate.
That's right. I think it's certainly fair to say that there's lots of benefit to be had in being part of the group that implements early when the rules permit. Some countries may choose to delay implementation for various reasons, and they will have their own reasons for doing that.
But I think what you're also seeing, Senator, is a number of countries move ahead of that to increase their corporate tax rates so that, in fact, it doesn't provide an opportunity for other countries to exert a taxing right on payments that might have been undertaxed in those jurisdictions.
Is that something the current government are looking at?
So this is more around. Sorry, I might have missed the question.
I was being smart.
Oh.
Don't. That's right.
Well played, Deputy Secretary.
I think it could be an open invitation to respond with the different things we've already put in place to
you answered very well, Deputy.
minimise multinational tax avoidance in Australia, where we have moved ahead of different parts of the world. But I think, as you've heard from officials there, Senator, certainly Australia wants to see timelines met and is moving to make sure that, as far as possible, we meet them and that we work in ways that encourage others to meet them.
Excellent. Now, Senator Cox, I'm going to give you the call. And before I do so, I just want to apologise. First. I didn't realise in the first session the only reason why you're waiting was so you could table the document. Yeah. I thought you were also going to ask some questions. So sorry I kept you delayed.
That's okay.
As an expression of my regret, I'm giving you have the call, Senator Cox.
Thank you. I'd like to ask some questions around the PRRT. Yes, the right group. Good. With the recent boom in gas prices, this will mean that the gas companies will chew through their PRRT credits quicker. Is that right to say? Yes?
Yeah, all other things equal, Senator, that's true.
Yes. Do you have an updated estimate on the value of the carried forward tax credits? I previously asked this question last year.
I think the total carry forward expenditure, Senator, as at the 1920 income year was $282.2 billion for offshore projects only.
Offshore?
Yeah, that's right.
Great. And previously you forecasted that you don't expect any significant tax revenue from gas companies until the mid-2030s. With the recent, again, boom with gas prices, do you expect that timeline might be brought forward?
Senator, we haven't updated that medium-term estimate. I think that estimate was provided as part of the Callaghan review, if I best recall, and we haven't remodelled and updated that estimate. There is an increase in expected PRRT receipts in this budget, which is largely a function, again, of the higher oil prices over that period, but we haven't remodelled when we expect some of those LNG projects to be coming into the net, but that's not over the forward estimates in these forecasts.
Right, okay.
And sorry, Senator, one of those, just to add, again, when it comes to making assumptions about commodity prices and current elevated levels of prices, we're actually quite conservative in terms of assuming, I don't know if it's conservative or not, but we basically have an assumption that they don't stay at the current high levels. Yeah. And so the approach that one takes to the way that one thinks about what we've done to revised estimates of PRRT, or indeed even company taxes over the forward estimates period, would be quite different to an approach that we might take if we were to actually update our very medium and very long term.
So there's
estimates.
not been a discussion about sort of a timeline now about when that will be
We
updated?
haven't updated the medium and long term estimates since Callaghan report. Excellent,
thank you. And you previously talked about PRRT credits being trapped effectively, and then that they're never going to be used. So I had that conversation at last estimate. So again, given the recent boom, has this affected the value of the credits that you consider to be trapped that were quoted at $282 billion?
So, Senator, there was a conversation around this, but it was very much informed by the ATO. And I think when it comes to that issue, they're probably the ones who are best placed to talk about
okay, we can
that
refer
issue.
that to them. Thank you very much. That was it. Thank you, Chair. That's all for me.
Thank you, Senator Cox. Deputy Secretary, just on that issue of the petroleum resource rent tax, what was the revision to receipts generated from the petroleum resource rent tax between MyEFO and the budget? So what's been the increase?
I think it was $4 billion.
That's correct. It's $4 billion, Senator.
That's over the 4 years?
That's right, between 22-23 and 2025-26.
So it's over 4 years.
Over
So
4 years.
essentially increasing, what's $1 billion a year?
That's exactly it.
That's right.
And I should be treasurer. What percentage increase is that?
Oh.
So has it increased by 20%, 30%?
Of all the tables I didn't bring, Senator, it was the one with percentage increases.
But we should have the PRRT base.
It's substantial, Senator. So receipt. It's going. Oh.
You've got PRRT?
Yeah, that's what I've got here. That's somewhere. It's all. I do have it here. Changed from my EFO, Senator. So for 22-23, it's higher by 71.4%.
71.4% increase
Yep.
in the revenue under the petroleum resource rent tax. So that's quite material. That must be, presumably, that must be one of the largest percentage increases in receipts across all the different revenue categories, I would have thought.
And in percentage terms, Senator, that's correct.
I think it'd be safe.
Yeah.
Okay. And also that would presumably, and I say this, I should declare as a shareholder of some oil and gas companies, and they've been on a bit of a ride since those substantive investments in those huge LNG projects. So that increase in the oil and gas price presumably will accelerate their move into a taxpayer position, given their revenues would have increased so substantially. Is that correct?
So, Senator, one of the challenges for us, of course, is that we don't actually know the ins and outs of all the individual companies, and the ATO, even though they obviously, cannot ever speak to individual taxpayers, at least have a sense of what's going on in perhaps a little bit more practical or intimate detail. We basically rely on the story, the information they're giving us at a very broad level. So I just don't think we've got the granularity to be able to answer that in detail.
Okay.
Because it's a project-specific based tax, Senator, we do rely quite heavily on that kind of intelligence. But all other things equal, I think that's correct. But it is led by a range of things: project costs, oil prices, foreign exchange movement. All those things can swing around the PRRT.
Theoretically, it would appear to be.
Yeah. All other things constant.
Yeah.
As we
ceteris
economists
paribus.
like to say.
Ceteris paribus.
As Dr. Kennedy referenced earlier today.
Sorry? Yeah. Okay. Senator McDonald, did you have any questions in this specific stream?
No, I don't. I'm holding my questions for the ATO next week.
Oh, okay.
Yes.
Well, that's.
My
I hope the
specific
commissioners.
questions of
I hope the
this-
commissioners listening.
I'm sure the Commissioner won't be...
Well,
I'm sure the Tax Commissioner won't be losing any sleep over my direct questions. But,
Senator Chisholm, do you have any more questions for the revenue section?
Yes, and following sort of continuation from what I was asking before, and following on some searching questions from Senator McAllister from estimates to yourself in February around how much these reforms will return to Australia's tax base. So are there any particular sectors that you've prioritised or have been particularly proactive in your direct consultations around the proper integration with the Australian tax system?
Is this in relation to Pillar 1, Pillar 2, or both components?
I'll say both. Yeah.
I might ask Mr. Robinson, who's actually been leading quite a bit of the consultations.
Thanks. I wouldn't say we've been focusing our consultations on any sectors in particular. We've had a number of consultation sessions. Our most recent one, in fact, was only a couple of weeks ago with our digital tax working group. We have quite a broad involvement right across different sectors. So sort of financial services, mining, oil and gas, manufacturing, and so on. And, we're obviously very keen to hear from all sectors on how the two-pillar reforms might impact them, and certainly their views around integration of those reforms into the Australian tax system. So quite broad engagement.
I'll just jump back a sec. In February, you were waiting for the OECD to release its commentary on the Pillar 2 rules before you could get stuck into the revenue questions. With the commentary having been released on the 15th of March, has that work now started?
That's right, Senator. So the commentary was indeed released on, I think it was the 15th or 20th of March or something. And so we will continue to engage with business and consult both on the model rules and the commentary. Obviously, with the upcoming election period, we'll need to be conscious of what the caretaker conventions will imply for our ability to consult on those, and certainly the consultation would continue right throughout 2022, both on getting views from business on the application of the model rules and integration into domestic legislation, and then later in the year, for example, at the time that we might have draft legislation, further consultation at that point. So we will see. We anticipate an ongoing close consultation with business through the process.
But okay. Senator, just to go to also the specific question you asked, I think that as we are getting more granular information, it is enabling us to start trying to think about how we would go about actually devising the costing models that we will need to have in place to be able to answer those questions that you're asking. As part of that, I can say that there have been preliminary conversations. I'd say they're still at a very early stage, but basically it will be Ms. DiMarco's division, which basically does the costings and quantitative analysis, working together with Mr. Robinson's division, which is devising the policy, obviously in consultation with the OECD process, and the ATO's specific knowledge around the tax system, that basically we're all working essentially together to try and basically make sure that we are building the models that we need to be able to essentially cost.
And if I could just add one thing to that, Senator, this will continue to evolve, as Ms Marakovic referred to earlier, as other countries choose to respond, perhaps by lifting their statutory corporate tax rates. Yes. That'll, of course, impact the amount that's able to be reallocated under the rules. And so while there's obviously model building work done on the rules and how we would implement them domestically, developments globally will matter substantially for what the ultimate cost would come out as.
Right. So was any consideration ever given to including notional revenue from Pillar 1 or Pillar 2 in forward estimates in the budget?
No. We haven't made any allowance or factored that in. At this point in time, it's a high-level agreement, and we are still trying to understand exactly what the policy implications of it would be. I think that there will come a point in time at which there'll be what you might call the formal decision-making process, but we don't see ourselves at that point as yet.
And Senator, within that there'll be, I guess, the extent to which policy changes applied in Australian law drive any revenue differential, which is probably likely to be limited, versus policy changes applied across the OECD membership, which is more likely to then derive benefits for countries like Australia that have already fairly strong
Yeah.
tax regimes in place. So sort of in that sense, kind of the benefit for us, the upside revenue benefit for us is the work that the officials do at all hours of the night to get the other countries to come to the party, not so much anything that we can just change in our own laws that addresses it.
Yeah, I've got a question sort of along those lines. So one of the unpredictable elements you've pointed to previously was the ability for low tax jurisdictions to lift their own minimum tax rate and effectively claim segments of tax revenue that parent jurisdictions might have otherwise claimed. The problem there was that without knowing what's going on in all those jurisdictions, any estimate could easily be thrown out. So as a general principle though, simply thinking of a jurisdiction like Australia taking initiative and being at the front of the pack in implementing, there would be less of that going on the earlier you move on implementation, wouldn't there? Like, would that be an incentive to implement earlier?
So, Senator, just to clarify, if I heard you correctly, I'm sure I never would have said we would have thrown something out. But I would acknowledge that we cost policies on our best information at a point in time. And then essentially, often the world turns out slightly differently, and to the extent that that happens, you see changes crop up in parameter variations. In terms of the specific question, we already are seeing in advance of the actual implementation of Pillar 2, a number of countries already announcing proposed increases in their corporate tax rates. The way that I'll answer that question is to say that at a point in time that consideration of Pillar 2 and Pillar 1 as potential components of a package of measures in this space comes forward for a policy decision, that would be the point at which we would basically, on the information we have available at that point in time, do our best to cost the proposal, and that would be based on what, I imagine, I'm speaking hypothetically here, but it would be on the basis of announcements by other countries, indications that they had given. We would basically pull together all the information that we had and come to a view as to what the implications of that would be for revenues in the Australian tax system. As Mr. Robinson mentioned earlier, I don't know that I think it does influence being a first mover or waiting a bit. I think that, in effect, this is actually going to be, I think, quite a big change to the way all countries have operated in the international tax system. And I don't think that we've really lived in a world where sort of countries have had the ability, for example, to actually look at some operations in another country and come to a view that they're undertaxed in that jurisdiction, and therefore they have the ability to actually apply an additional tax. That's going to be quite a change in the way that the international tax system is operating. And so I don't know that we can answer that question, in that kind of strategic way. It is 140 odd countries basically working together to essentially try and put in place a global minimum tax rate. It's not really about trying to, in essence, necessarily capture revenue from another jurisdiction. It's actually about trying to avoid a race to the bottom where essentially you are seeing jurisdictions compete against each other for those tax revenues.
Okay, so leaving the revenue aspect aside, do you think that the first cohort of jurisdictions implementing will play an important role creating momentum across the other signatories to actually implement the legislation?
I would imagine that the more countries that join, I think it'll be important for some countries with relatively low corporate tax rates at the moment to ensure that essentially if activities remain in those jurisdictions, that they're not giving other countries the opportunity to essentially, tax some of the taxes that they would otherwise be entitled to. And that's what I think you'll see in terms of a driver of those jurisdictions, perhaps below the global minimum tax rate, lifting their tax rates.
So there's an incentive for them to act, to get to the 15% minimum.
I would have thought that there would have been an incentive for those jurisdictions to move to that situation, particularly where if you imagine that those activities would stay in that jurisdiction, because of course that will be the other issue as well. Companies will have to think to themselves about where they actually choose to locate their activities once tax considerations or perhaps tax differentials are not as large as perhaps they are at the moment.
Okay. Thanks for that. I'll just come back to the consultation questions, which I think Mr. Robinson was answering. In those consultations that you mentioned, which I think were pretty wide-ranging that you've had, have you been indicating a likely timeline for the stages from legislation through to implementation?
Senator, largely what I told the committee earlier. So the nature of the discussions have been broadly along the lines of, particularly in relation to Pillar 2, we have model rules and commentary, which is currently out for consultation by the OECD. We're seeking input from business on their views around that. We would expect that consultation to continue, possibly through till the middle of the year, and then in the second half of the year, we'd be looking to try and settle draft legislation and look to have that introduced and through Parliament in the latter part of the year in ideal terms, in time for commencement in 2023. Of course, as we've mentioned earlier as well, it's an ambitious timeline that the OECD is holding us to and that we're working towards. So we're doing our best towards those sorts of timeframes.
Okay. Would you be able to identify the top 3 sectors that would likely to be affected?
Internationally, Senator?
Well, from operating out of Australia.
I think it's probably best if we take that on notice.
Okay. Among the affected parties you've been consulting with, would it be fair to say that there's an attitude that the implementation of Pillar 2 is inevitable?
Sorry, from a business perspective, do you mean? Or?
Yeah.
Well, I think there's certainly a realisation that once governments internationally, as I mentioned before, 137 of 141 countries agreed the high-level framework, and we now have the sort of more concrete form of what the rules are going to look like in the form of the model rules and the commentary. I think it's probably it's becoming more apparent for business that this is moving along and moving towards, and certainly with other countries announcing plans to implement and raise their tax rates, those sorts of things. I think there's certainly a view emerging amongst business that this is actually happening.
I'd say the way that they are engaging with us and the concerns that they're bringing to our attention and the issues that they want us to be active in thinking about and raising with other countries would lead me to suggest that they are working on the presumption that
it's going to happen.
It's going ahead.
Okay. Yeah. And has any consideration been given to public consultation, when that would begin, what that would look like?
Senator, so we are looking at a public consultation. I probably can't indicate any particular timeframes at the moment. We would hope to undertake that very soon. But we would anticipate at some point we would have some kind of paper that we would release for consultation that would go alongside and complement the papers that are out there with the OECD. As I mentioned before, there's the Pillar 2 model rules and the commentary, which is currently out for consultation by the OECD. On Pillar 1, there are a number of consultation papers out there relating to some of the building blocks, as we call them, or the key elements of Pillar 1. There's still further work being done to negotiate the other elements, which will subsequently be released by the OECD for consultation as well. So we basically see a rolling consultation process, both between what the OECD is putting out and what we would expect to be doing, sort of, through
And what
the year.
about potential legislation?
As I mentioned earlier, Senator, I would anticipate legislation's going to be something that would come out later in the year. In terms of precise timeframes, I can't be too precise. There's quite a lot of work that needs to be done, and we're assessing approaches to legislation.
Thanks for your help on that. Thanks, Chair.
Oh, thank you, Senator Chisholm. Senator McAllister.
I'm not sure. I think that these questions should be directed here, but I'm not certain. They relate to the budget measures, small business skills and training boost and small business technology boost.
How about if we try?
That list with you. Look, I'm really just trying to understand the basis on which the impact on receipts has been calculated. So in particular, it would help me to understand, and this is one of those tedious processes that would be best done on notice. However, if I do that, I won't get the information for a long time. So unfortunately, I'm just going to have to ask you. For those companies with a turnover of between 0 and 50,000, or less than 0, perhaps, to $50,000, what is the average revenue foregone over the forward estimates in that category?
So, Senator, this is, if I take one quick step back, there are many costings that we do in tax analysis division that are done on a micro basis. So we have individual firms, we project that forward. Neither of these two costings are one of those. And the reason for that here is that in these cases, there isn't a line in the tax return where you observe the exact expenditure on either of these two items.
Right.
So rather than going firm by firm, we've gone top down and it's a more macro-based costing.
Okay, could you step me through how you did do the costing then? Because I think that would help me understand what information is likely to be available and what isn't.
Yep. So I might start with the technology boost, Senator?
Terrific.
So for that, we have used a combination of data that we have on tax returns about investment in categories like ICT, and we've also confronted that with data from companies like Xero that have estimates of ICT expenditure using micro data that they have through their business systems. We've taken that data, produced an estimate of expenditure on these items, and we projected that forward consistent with the macro parameters for investment on machinery and equipment more generally.
Right, and in terms of the baseline, have you assumed a certain number of firms would access the concession, or have you taken it as a proportion of total revenue lodged by firms in these categories? I'm trying to understand what the baseline is.
Yeah, no, absolutely. And so we haven't assumed it by firm because it's just not the nature of the data that we've had available. Instead, here we focused on the amount of expenditure that we expect to be eligible for the program, projected that forward, and a whole bunch of other different tax timing things that mean it appears in returns in different years. But it's not one of those costings where we have an estimate of the number of firms who will take it up.
Right, and what's the baseline for expenditure?
I'd have to take that on notice, Senator.
What's it derived from? So I'm sorry to be...
No, that's okay.
You're, as I understand it, have calculated the level of expenditure in the in the pool of taxable businesses that would be likely to be eligible. I'm trying to understand a little more about what that baseline looks like, because you had and how you get to a delta of, you know, that tells you what the impact on receipts is.
Yeah. So we've got two separate data sources here, Senator. We've got data on tax returns about investment, and then we've also at the same time had a look at private sector estimates of business expenditure on ICT.
Yep.
And we've used that to generate a baseline level that we've then grown out consistent with our estimates for growth rate of machinery, investment in machinery and equipment. What I don't have with me, Senator, and apologies, I'd have to take it on notice, is what that level actually is in terms of the level of investment that's eligible.
You know, I think it would be helpful to maybe try and track that down while we're here. It's a budget measure. You know, it's a budget measure that has a non-trivial cost to the budget, and I'm just interested in understanding the basis on which it's been
We can
set
see if
up.
we can do that for you, Senator.
In doing that, did you in any way consider the different kinds of firms that, in terms of their scale and size, and the relative benefits that would flow to small and medium businesses under the measure?
Yeah. So, Senator, the zero data that we had looked at and used to help inform our estimate of the baseline suggests that for sole traders, their share of expenses on ICT is around 5.1. For businesses with employees of 1 to 5, it's around 2%, and for greater than 5, it's around 1.2%.
So that's a share of their
ICT expenses.
ICT is a share of their overall business expenses.
Yes,
right. And what about as a share of the claims that are anticipated to be made? Or I'm trying to understand, thinking about, you know, in this first year, the 500 million that it's going to cost, is that going to benefit sole traders? Is it going to benefit firms with 1 or 2 employees, or is it going to benefit firms with 30 employees? I'm trying to understand the breakdown within the business sector.
Yeah, so Senator, we have not done this costing by turnover size. We haven't done it by number of firms. We've used these to inform an estimate of the overall pool of expenditure that could be utilised, that would be utilised under this policy. I think the other thing to consider here is that there's a cap. So it only applies to $100,000 of expenditure a year. So to the extent you've got larger firms who would spend vastly in excess of that, they can only do it for the first 100,000.
Right.
And that would also act as a handbrake here.
All right. I might come back to you with some additional questions about that, but can we, in a similar way, talk through the skills and training boost?
Yeah. So similarly, Senator, we don't have any data. This is even slightly different again. We don't actually have any data from tax returns about the amount that's expended on skills and training. What we have done here is had a look at other estimates available for the share of employee costs that firms that entities will often spend on skills and training. We consulted with the Department of Finance and have used an estimate of around 3% of compensation of employees that is spent on skills and training, and that estimate is the basis of the costing.
Right, okay. Again, any sense of the overall number of firms expected to access the payment, the deduction?
No, Senator, again, this was done on a macro basis.
Right. Okay.
We've got a... Yeah, I'll keep going. Yep.
Please.
No, you keep going on this one. Yep.
Look, can I ask then about the payment times reporting register? what are the specific redesign and improvements that have been funded in the current budget measure?
Senator, I think this might be a question better directed to Markets
That
Group.
is one
the
for
small
Markets
business,
Group.
Yeah.
Right. Okay, terrific. I just might have one more thing that I wanted to ask about. Can I just ask about the change to visa rules supplementing Australia's workforce during the recovery? Just can you tell me a little bit about that measure?
So from a policy standpoint, Senator, I think this measure would be the better directed to Home Affairs or Fiscal Group. So while there are receipts implications, the Revenue Group, our role is simply in costing it. The policy areas in Fiscal Group, unfortunately, Senator.
There's obviously an allocation of funding to the ATO. Can you tell me what that funding relates to?
Sorry, Senator, can I ask what page you are on budget paper?
Yeah,
number
sorry,
two?
it's page 11 on BP2.
Page 11.
I'm particularly interested in the description in the text, which says that the government will clarify the tax treatment for income earned by workers under the Australian Agricultural Visa Scheme. It's expected to increase receipts by 115 million.
I think we'll have to take it on notice. Senator.
What is the clarification that's required for the tax treatment of income earned by workers under the scheme?
I think we're just going to have to take it on notice.
Senator Paul McCullough, First Assistant Secretary. I thought I had something in my notes on that, and I just can't find it. But if you want to go on to other questions, I'll see if I can come back
Yeah,
to
look,
it.
that would be terrific. I'm just interested in a couple of the budget measures that go to tax and to receipts. There's another measure on page 29 around tax integrity. I think you might have answered some questions about that already. But that's a just tell me again, what is the purpose of that measure?
So basically, it's as the measure description sets out, it's essentially undertaking compliance activities targeting multinationals, large public and private groups, trusts and high wealth individuals.
Right, so and that's expected to increase receipts by 2.1 billion and increase payments by 652 million over the forward estimates.
That's right. It's the continuation of a current compliance program that the ATO is undertaking.
Right, okay. And do we have any more information about this measure in relation to the visas and the tax treatment of people working under that visa?
I think they're just coming back to...
Great.
I haven't been able to find it, Senator. I apologise for that. I'll have to take it on notice.
Right, okay. But the net result is an increase in receipts of 115 million.
Sorry, Senator, I think for that measure,
yes,
there will be different components of it.
Right.
And I have a feeling that the increase in receipts from that measure is related to the component that's about the temporary increase in the workforce across a variety of different visas for a variety of different categories rather than the piece in relation to agriculture.
Right. It seems to me that, each of these items that we're discussing do have the potential to increase receipts and to increase taxes by either enhancing enforcement or clarifying the rules around the existing arrangements. That's correct, isn't it?
So I think for this particular measure, Senator, the one on page 11, I don't think that's about an enforcement issue. I think here, in terms of the increase in receipts, it's about increasing the amount of hours that existing students and working holiday makers can work in certain industries.
Okay. But no one can tell me what the clarification around the Australian Agricultural Visa Scheme is going to involve.
Not at the moment. We'll continue to make best efforts to see if we can add any clarity to that.
Must be just the reopening of migration, isn't it? Isn't it just migrants coming back?
Just trying to see what information I can glean for you there, Senator McAllister. I think there were aspects of that would have been clarified in the Income Tax Amendment Labour Mobility Program bill that was listed for the Senate this week, but which I think we couldn't get consensus with your side to be able to proceed with in terms of some of the tax treatment around the agriculture visa. I'm just trying to get a more precise answer for you if I can. Otherwise, we'll have to get that on notice.
Sorry, Minister, this isn't intended as a criticism, but because you are looking at your telephone, I'm not really sure what you're doing. Are you about to answer this question?
I'm seeing whether I have anything further to answer the question. I'm trying to read, so if I'll leap in, but feel free to move on. If I get something further, I promise I will share it with you.
I guess the challenge is that if we move on, we might let
anyway.
Revenue Group go. So I'm just trying to understand what's going on before we finish up with Revenue Group.
I just feel like making a suggestion about what that is. But yeah, we're just on that one, aren't we?
So the legislation that didn't pass the Senate, Senator McAllister, and will have to be considered now presumably in the new Parliament, sought to reduce the tax on certain income earned by foreign resident workers participating in the Australian Agriculture Worker Program or the Pacific Australia Labour Mobility Scheme from 32.5% to 15%. The bill amends the Income Tax Seasonal Labour Mobility Program Withholding Tax Act 2012 to amend the title of that act to encompass other factors. So I think what we're looking at here is, if I were to put a generalisation on it, seeking to ensure alignment of the agriculture visa participants broadly with tax treatment under the Pacific Labour Mobility. But I, again, would say let's make sure we get some precise advice on notice to make sure that that is an accurate description from me.
All right then. Okay. Well, let's wait and see.
Yeah.
Okay. Thank you. I don't have any further questions. I don't think so for Revenue Group.
I may have missed Senator McAllister's questions on the small business measures. Whether you asked Senator McAllister about the types of activities that were covered in the measures. So when you referred to ICT expenditures covered in the technology boost, what sorts of things were you talking about there? And how does it work for a business who's seeking this measure?
We can give some examples.
Yeah, some examples, yeah.
So basically cyber security systems, subscriptions to cloud-based services, accounting and e-invoicing softwares, web design, things like digital tracking of livestock, and even hardware such as laptops and portable payment devices, just to give a few examples.
Yeah. And the rules for this scheme are found where? Where do businesses find the rules for the scheme?
Senator, I will defer to Mr McCulloch, but I presume that there is still a bit of a journey in terms of clarifying that in legislation.
Yeah, that's right, Senator.
It's an idea at the
government's
moment.
made an announcement in principle, but the intention would be to consult on the details in the course of development of legislation.
Okay. And the other one, the skills and training boost, what are some of the examples of things businesses can claim?
Again, the criteria as expressed in the budget measure from memory were that it has to be, this is the skills and training one, this has to be training that's recognised. Now the process of how it would be recognised by a registered organisation is something we would have to consult on, but there are 4 organisations that currently register training courses. That could be the basis for being eligible for this. But that level of detail just has to be put into legislation before it can be taken forward.
But the important thing is it is external training programs rather than in-house or on-the-job training or something. It is basically externally provided, and essentially, as Mr McCulloch said, basically from one of those 4 organisations that basically is responsible for registering those providers.
Yep. Okay.
I think I might have the answer to that earlier question.
Can you just remind us what it was?
This is on the visa. As the Minister described, the measure itself is a clarification of the tax rate changing for a certain class of visa holders from the normal...
this is the agriculture visa.
Yeah, sorry. from the normal tax rate that would apply to foreign residents to a flat 15% rate. The reason why, although you would think that might look like a revenue reduction, the reason why it comes in as a revenue increase, I think, is because it's a separate class of visa holders. But if I can take the rest of it on notice, I think we could confirm that within too long. And the examples of the training courses that we were talking about might be accounting training, it might be hospitality training courses, those sort of things.
Anything
That
external and accredited by those 4 bodies.
Yes.
Yeah.
And just to come back to your earlier question, Senator McAllister, about the volume of expenditure per year, subject to the digital boost, we expect it to be around 40 billion.
Right, so that was... So 40
billion are under the digital.
Billion with the
billion,
B?
Yeah.
With the B?
With the B.
Under the digital. And did you have a similar quantum for the skills and training?
Sorry, sorry to interrupt. That's the quantum of the expenses.
That would be subject of the policy.
40 billion.
40 billion.
Okay. And that's before the 20% gross up.
That's correct.
Sorry.
40 billion for the total quantum, of which then a proportion of that is expended on ICT?
No, so for the boost, we expect it to apply to around 40 billion of expenditure per year.
Right. Okay.
Yeah. And we're still getting you a number on the skills measure, Senator.
Thank you. I don't have any further questions for Revenue Group.
Senator Walsh, you're done?
But I'm waiting for that.
We will. I think we'll make sure you have it before the session's out, Senator, even if it's not with Revenue Group.
Thank you.
We'll have someone respond back in Marcus Group perhaps at the beginning or something like that.
That sounds helpful. Thank you.
Thank you, Deputy Secretary, and to the officers from the Revenue Group. We will now move to the Markets Group. And I note that I think Senator the Honourable Simon Birmingham, we're having a change of minister, I think. Sorry? I had us going straight to the Markets Group and then having the afternoon break before we go to industry.
We have a quite limited number of questions from Markets Group.
Sorry, you do?
Our questions for Markets Group are quite limited.
Oh, okay. So I think it makes sense to do Markets Group then and then have the break. Do you?
Break at 3:45. Chair.
Sorry?
Break at 3:45.
I think you can have a 15-minute.
Okay, we'll have a 15-minute.
You're here now. I'm happy for them to keep going.
The coffee cart's not far away.
All right.
A spare 15 minutes.
Okay, it sounds like members are keen to have a 15-minute break. So
Yeah.
I'm happy to. Sorry, Minister Hume. Portfolio at 5 p.m. Looking to have the dinner break at 6:30 p.m. So it's a later dinner break, still for the hour, and looking to go through to 9:45 p.m. at this point in time. That's right. So welcome, Minister, Senator the Honourable Jane Hume. Welcome. And welcome, Deputy Secretary. I give the call to Senator McAllister.
Thanks. And
sorry.
Chair, just before we start, my colleague has an answer for the senator from a previous question. So is it okay if we start with that?
Sorry, Senator, with respect to the skills and training, it's expected to apply to around $9 billion of expenditure a year.
Thanks very much. That's much appreciated.
Thank you, Mr. Marco. Much appreciated.
Okay. I have actually a limited number of questions about super. I was just hoping to get an update on the status of the regulations that are needed for implementation of the Choice Product Performance Test.
So those regulations have been are being worked on by Treasury, and they're in progress.
So that product performance test is expected to be applied from the 1st of July. That's right, isn't it?
That's correct.
So does that not present some problems? When are you? Has the minister got any indication about when those are going to be made public?
As soon as they're ready to be released, I would imagine they'll be made public. I understand that you're working on them with APRA too, who are looking at that for their heat map.
Can you provide any insight about how administration fees will be dealt with?
Pass to my colleague.
Luke Spear, Assistant Secretary, Member Outcomes and Government Branch. That will be a matter for the government when we release the expected regulations. So I'm not sure if we can provide much information on that right now.
Yeah, I mean, we're running pretty close to, these are consequential decisions for both consumers and for trustees. We're running pretty close to implementation and people don't have that information. Have you received any feedback about how administration fees should be dealt with from stakeholders?
We have been in discussions with a large range of stakeholders in this area, Senator, and so we have got feedback. I'd also note that APRA has been working very closely with the industry in this area and have been liaising closely.
As the policy agency, what are the sort of choices that stakeholders are putting to you about, the pros and cons of different approaches?
Which approaches are you?
In terms of the treatment of administration fees?
We can take that on notice, I would have thought, Senator. I'm not sure if I'm across the issue in detail enough to provide a decent answer.
Right. You're not personally undertaking the consultation with stakeholders?
We are not undertaking a formal consultation process at this point in time. We would be expecting to release some paper, or the government would be expecting to release a paper prior to the release of prior to the regulations being made.
So there's there's a few steps in, as we always undertake. So discussions in design.
Sure.
And
but
then
it's 5 minutes to midnight. That's rather, I mean, it's quite late, isn't it?
It depends a little bit on how much uncertainty there are, and in this area there's been a lot of discussion about how to structure various elements of this. We've been through the process for the My Super products. This has been a policy that's been out for quite a long time, so there's been quite a lot of discussion with stakeholders. We do discussions as part of the design in terms of forming our advice to government. Government makes decisions around the regulations, and then we consult on the actual regulations as instruments to check with stakeholders and check implementation issues. We have not reached the stage of releasing regulations for consultation, but we have had discussions with stakeholders around the design features. So that's where we're at the moment.
Right, but Mr Spear isn't having the discussion with stakeholders. Are you having the discussion, Ms Quinn?
So not me directly, but certainly the Retirement Income and Advice Division has been having discussions with stakeholders, as well as talking to APRA, who themselves have had discussions around the data and the arrangements, given they would be administering the policy.
Right, okay, so my question to Mr Spear was what are stakeholders telling you about the key issues they wish to see addressed in relation to administration fees? And he said he wasn't across that detail and he couldn't provide an answer. Is there anyone in Treasury who can?
So I will just check. We've got Lynn Kelly on the video. I don't know if Lynn can expand a bit further on this issue.
Ms Kelly, can you hear us?
Hey, it's Lynn Kelly, First Assistant.
Sorry, could you just repeat that? It just got a bit, I'm not sure what the word is, distorted.
Hey, it's Lynn Kelly, First Assistant, Retirement Advice and Investment Division. So I think someone else may be on, not on mute, because I'm getting a lot of feedback.
Yeah, so are we.
That seems to be better. Sorry, in relation to the question around stakeholder feedback, has been some stakeholders who have reached out to APRA and Treasury to provide views on different matters around the trustee directed products and the application of performance tests in particular. Sort of the detail around specific aspects, I need to take that quickly on notice.
Did you get enough of that?
No, not really. But I think really the official was telling us that she couldn't help me, so that I don't wish to verbal her. It was very difficult to hear, but I suspect she was saying she didn't have an answer for me.
But we're happy to take it on notice and provide that information.
All right. Look, obviously for the My Super products there's been a very clear process laid out. Can I ask whether trustees of trustee-directed choice products that fail the performance test in July, will they need to write to members in those failed products and let them know?
That is the expectation, Senator.
That's the expectation. And are there plans to ensure that the ATO online comparison tool is extended to include choice products?
That's the plan.
That's the plan, right. Can I just ask about the heat maps? We've had many conversations here about the heat maps with Markets Group and with APRA. Is Treasury aware of concerns that have been raised about the quality of the published choice product heat maps?
I think there's a range of concerns that have been raised both with us and with APRA on that matter.
And what is Treasury doing about it?
The APRA heat map is largely a matter for APRA. We are in ongoing discussions with them about potential ways to improve the heat map, but largely it is an APRA-directed product, and we will continue to discuss them with issues with them going forward.
Yes, okay. So I think I can conclude from your answer that Treasury has some interest in ensuring that the published product is accurate.
Absolutely, yes.
Yes. And so you're in discussions with APRA about it. What are the key areas where you think there's an opportunity to improve, or where you've advised APRA that there's an opportunity to improve?
I'm not sure if we've advised APRA of particular areas at all. However, I just note that the choice heat map does have a very large amount of data, and so data quality is an issue in that space. And in discussions with funds themselves, I think they would acknowledge that there is quality issues with the provision of data for that APRA heat map. And obviously, in the way that APRA brings that data together, there are a range of concerns, largely around getting the presentation, for example, correct.
That's a useful answer. Can I just ask what you mean by presentation?
I think there is probably a range of... I don't want to verbal myself. Is that a thing?
I'm not sure that's possible.
I'm not sure that's
Mr.
possible,
Spear,
Senator.
but
Yes.
anyway. Do your best.
I will do my best. I wouldn't want to say anything further, Senator.
Fact, which is, what have you communicated to APRA about your view for priorities for improvement?
Yeah, so
you
Senator,
said you thought that areas of presentation were at issue. I'm just trying to understand what that means.
Sorry.
Yeah, so Senator, it's somewhat difficult for my colleague, because these goes to discussions that we have with regulators that then go to forming our advice for government. And so it's a bit difficult for us to have some of those detailed conversations, because it is about our advice to government.
Ms.
So
Quinn,
the presentation issues
advice to government is not a basis for refusing to answer questions. It really isn't. So, and conversations between different publicly funded bodies is certainly not a basis to refuse to answer questions. So I'm just asking, as a question of fact, what has Treasury communicated to APRA about priorities for improvement in the heat maps? Because it's been, and the reason I'm asking is that there is a public interest in understanding how we are going to get these products to a point where they accurately reflect the choices that are available to consumers.
So if you're after exactly what we've said to APRA, then we would have to take that on notice, Senator. In general, we have discussions about the quality of the data and the presentation. Some of the presentation issues would be the same as the issues raised in the MySuper space, with different funds and different products having a different focus on and weighting on the different elements. So it's much more complex outside the MySuper product space to do comparisons, because they have a lot of different risk ratings, different history and length of time. So, for example, how do you deal with a product that's only been available for a third of the time of another product, and is it appropriate to compare them against the same time period and versus shorter time periods and things like that? How do you take account of volatility in the period of which a shorter product has been in place? There's a very long list of technical issues that funds raise with APRA in their measurement of the heat map. In terms of our discussions with APRA, it's more around what does that imply for transparency and comparability, which is what's important for consumers. And that comes down to even small things, the behavioural economics lens that you apply to what metric do you put first, and how is it going to be put on the tool, and how do you explain what different elements mean for different types of audiences. So they're the sorts of factors that are discussed.
That's very helpful, Ms. Quinn. For clarity, I was just trying to check that the presentation issues weren't about font and colour scheme.
No.
That is actually quite a helpful answer. And those are all the questions that I have for Markets Group. Thanks, Chair.
Okay. No other questions from Markets Group from your side, Senator Chisholm?
Just one follow-up there on
Sure.
to you on what Senator McAllister asked. If there is that problem that you described of funds that have only been around for a short period of time, and so therefore how do you assess the returns? A longer time frame is more appropriate. Does that not sort of leave a problem there of sort of funds kind of starting up, operating, failing in short periods of time, you know, being really high risk in short periods of time, and what is the thinking around that, around trying to capture that?
Yeah, I mean, it's an issue with the existing process, because there were some funds that weren't around for the entire period, and so they weren't assessed, was the decision. The question, though, is there a way to give indicators over a shorter period of time,
Appropriate to that
and then you
shorter
can compare. The reason why you go for a longer period of time is because of the volatility, uncertainty and the circumstances, given super is a long-lived investment. So it's always going to be an issue with comparison. It's an issue with the private sector provision. It's an issue with the tools that the government has put together. There are technical ways you can address it. The key policy question is, does it provide a misleading impression of comparability? Sometimes maybe it's better not to put information in the public domain if it's going to be misleading. But you wouldn't want to. You have to be very careful in this circumstance because it is there's a compulsory element to superannuation and there's a requirement to make sure consumers have accurate information.
So where are you sort of coming down on that to sort of, wait for a period or to create a more appropriate tool to transparently assess?
The short answer is we haven't come down on a position for these metrics. As I said, with the MySuper products, there was a decision for them not to be put in the comparison tool, but then there's a much limited number. And the complexity of these next set of products is much broader because it's open to the funds to structure them in a way that they think is suitable for their members.
Okay, thanks.
Okay, thank you. Senator McDonald, you didn't have anything for Markets Group. I don't have anything for Markets Group. So I think thank you, Ms Quinn and your team. Greatly appreciated.
Cheers.
So we might just need to have a short break whilst we change over to industry. We change of personnel. Okay. Do you need a change? So welcome everyone. Thank you, Mr. Fredericks. My apologies that we've accelerated somewhat, but thank you for being so adaptable. The committee's proceedings will now resume with the industry portfolio, beginning with the Department of Industry, Science, Energy and Resources cross-portfolio and corporate sections. The hearing will then follow the order as set out in the circulated program, though we do expect, given we've been making good time during the course of the day, that precedent will continue. The committee has set 14 April 2022 as the date by which senators are to submit written questions on notice, and 27 May 2022 as the date for the return of answers to questions taken on notice. I now welcome Senator the Honourable Jonathan Duniam. Representing the Minister for Industry and representing the Minister for Science and Technology, I also welcome the Secretary of the Department of Industry, Science, Energy and Resources, Mr. David Fredericks. And your name's highlighted in my script, Mr. Fredericks, so there you go. And officers of industry. Minister, Secretary or officers, would you like to make an opening statement?
Not for me. Me neither, thank you.
Okay, thank you. So we'll go to questions. Senator Walsh, you have the call.
Thank you very much, Chair. Thank you all for being here. I've got some questions about government procurement of rapid antigen tests. As we know, on this committee, there was a shortage of rapid antigen tests over summer with the Omicron wave. Some Australian manufacturers are on record as having approached government a lot earlier, saying that they could provide those tests if the government ordered them from those Australian companies. The government announced that it would spend $1.6 billion over 2 years towards securing access to rapid antigen tests. How much of that money will be going to Australian manufacturers of those tests?
Sorry, Senator, it's still on Moody.
Hi.
Hi, Head of Industry Growth Division.
Yep.
I just came in halfway through your question. Would you be able to repeat that for me?
I was actually ad-libbing and consolidating various bits of information with the last brain cell I have. But yes, I will. I will do that. So I was talking about the shortage of rapid antigen tests over summer. The fact that we're on record with Australian manufacturers having approached government saying we could make them here. And then government announcing it would spend $1.6 billion over 2 years, 21-22 and 22-23, towards securing access to those tests. How much of that money will be going to Australian diagnostic manufacturers?
So, Senator, that would be a question for the Department of Health. They undertake all of the procurement to do with those tests.
But it is... the manufacture of these sorts of devices is also a priority area for government and the department as well in terms of the broader manufacturing strategy. So on that basis, are you able to answer? Yeah.
So I can talk to the fact that we have one assembler in Australia who has the TGA approval to provide rapid antigen tests, and that's Innovation Scientific.
Yep.
So I would need to take that on notice as to whether or not they were, the health department was procuring tests from them.
Right.
In terms of Australian manufacturers, there are no other Australian manufacturers with TGA approval at this time. There may be Australian sponsors, and they may have secured some of that procurement, but as I said, we would need to take that question on notice, and that's really a question for the Department of Health to answer.
So the Australian manufacturers like Lumos and so on don't have TGA approval yet for their devices, and Innovation Scientific does, to your understanding.
Yes.
But you're not sure whether government, the other area of government, you're not sure where they bought the rapid antigen test from. We know that? I think we know that they were all imported, don't we?
So, Senator, if it would either be an imported test or a test assembled by Innovation Scientific, being the only Australian company the only Australian assembler or not quite a manufacturer because they bring in parts and assemble them. That would be the only possibility for a procurement from an Australian assembler. All of the others would be imported, but they may be imported by Australian companies or Australian what we call sponsors, and all of that information is on the TGA's website as to where those where the approved companies are situated.
So none would have been manufactured in Australia, but some might have been imported and assembled by Innovation Scientific.
Correct, yes.
Okay. One of the things that industry has said to me and others is that they think that it should be the role of government and this department to work with health and the TGA to sort of auspice these sorts of products in a way through the TGA, whilst of course maintaining strong independent standards. What work are you doing with the Department of Health in that area, given that medical products are a priority area for you?
So I might cover up on a few aspects to respond to your question there, Senator. So in the first instance, we're working with health on doing a lot of understanding of the supply chain, and not just the supply chain domestically but globally, so that we can understand where Australian manufacturers are situated in the broader supply chain. And then we're also working with MTP Connect, you may know, who is one of our growth centres, and working with them and Pathology Technology Australia to do some additional work to look at what that national supply chain might look like and into the future for diagnostic testing, including RATs and PCRs and those types of things. We also support as you said, the medical products through the modern manufacturing strategy, and there's been some announcements around additional funding for that. So that will, depending on meeting eligibility criteria, of course, Australian firms may have an opportunity to put in an application for some funding through that program or those programs as well. So there is quite a lot happening in that space moving forward.
Okay. You talked about medical product manufacturing being one of the priority areas for the strategy. Do you have a particular kind of... So before I ask some numbers questions, do you have a way of kind of breaking down medical manufacturing into smaller sort of component industries, or do you look at it as a whole and what's included there? So it's devices.
So I would point you probably in the first instance to the what we call the National Manufacturing Priority Roadmap.
Yeah.
That outlines the roadmap for the sector going forward, and they're the types of things that are considered under the MMI.
Okay, so...
So, Senator, just to assist,
Yep.
you made that before about the absence of Ms. Lucchetti.
Yep.
So she has the answer to that question. She's pretty close. I think she might be in the room
Yeah,
next door.
yeah,
But
we
so if
appreciate
you want to press
everyone.
on, she might be able to come back and
Yeah.
give you some more detail on that.
Yep.
There she is.
Sorry, I thought you were coming up, Ms.
I
McKinney,
think that we still
you
might
will-
be missing the right person to speak to.
Oh, that's
about
okay,
the-
that's okay.
The medical products roadmap.
Yeah, he's on his way.
I'll ask and you'll tell me whether you have the right person. So in relation to medical product manufacturing, the roadmap indicates that progress will be measured a number of ways, including the number of new jobs in medical product manufacturing. And that's one of the benchmarks of success. Are you able to give me some numbers on that, as in what was the original benchmark of jobs in the sector called medical product manufacturing at the beginning of the strategy, and what is it today?
Good evening, Senator Russ Campbell, Head of Analysis and Insights Division. So the way the strategy was put together, we had the sort of six targeted sectors. Each of the roadmaps identify a number of metrics against which we would look at success of the program, specifically in relation to program recipients. So the way that information is collected is through the guidelines process, and then the reporting and expectations of reporting from participants as the program progresses. We won't have some of that data until we get some closure reports from some of the project proponents. And then what we'll be able to do, once we have that, we'll be able to compare those figures to a counterfactual in what we call our BLADE database, which is firms of similar type which haven't received the support, and then you can actually test the success of the program intervention against the firms that did receive support.
Yeah. I think my question is just a bit more general. So you're of course talking about wanting to be able to compare those that received funding, those didn't. Did we grow more jobs here than we did here? I was actually just wondering if you have a aggregate figure for the medical manufacturing roadmap area as a whole in Australia. How many jobs at the beginning? How many jobs now?
No, we don't have a breakdown like that within the ABS data sets. So,
Right.
so we can talk about the success of a program against like comparators, but we can't talk about a baseline as such in the way you're describing.
So it's not a goal to grow the medical manufacturing industry as a whole, it's only to grow it.
No, definitely it's the case that the expectations that the program would grow, and we've discussed it probably a number of times.
Yeah.
There's an 80,000 estimate over 10 years for the sector as a result of the program. And then beyond that, you have the first pillar of the manufacturing strategy, which relates to the broader tax and labour and energy settings, which will also grow the manufacturing sector overall. So there's a targeted estimate, the 80,000 over 10 years, and then there's the broader impacts on the sector over time.
So,
Senator, just to assist on one thing on this. So
yes.
just to be clear, so your question, of course, is absolutely legitimate, and what we want, we feel obligated to be able to report back on the actual growth in jobs that's been engendered by this expenditure, which is why Mr. Campbell has made the distinction between the sort of blade data that we have, which is just basically an economic data set which will tell us essentially for each sector what the growth in the jobs numbers would have been more or less absent any government intervention. And then we want to be able to analyse above that the actual numbers, growth that occurred, and of course the difference is attributable to this funding. So we're kind of trying to hold ourselves to the accountability of additionality of jobs, which is what you're after. It's just that at the moment we don't have that data yet.
yes, I guess I am also just asking whether the total number of whether there are more people working in this industry as employees of this industry today than there were when the strategy was announced.
So I think the answer to that question is we don't have the objective data to be able to give you an answer to that yet. But we know we will be in a position to give you an answer to that question once the program is completely rolled out.
Yes, and I'm not asking about the program actually in this question and the sort of the A/B test, if you like. I'm just asking, are there more people working in medical manufacturing today than there were a couple of years ago?
And so part of the challenge, so we may well be able to get you some further data on notice in relation to the ABS definition of a narrow form of that sector. It won't relate to the roadmap because just to be clear about the roadmap too, the manufacturing strategy isn't just about the production component, and that's what actually is collected by the ABS. So you actually have jobs coming into the sector in, say, the design of the actual manufacturing product, and that won't necessarily sit within. So it's actually very hard to say for that particular roadmap boundary what exactly is the number of people, but we certainly should be able to come back to you with at least a breakdown of something which is close to what you've asked.
I mean, someone must know. It's been a while since I looked at ASIC codes and things like that, but someone must know whether there are more people working in medical manufacturing production jobs, the kind of jobs that people understand as being manufacturing jobs, today than there were a couple of years ago.
There will be a version of some numbers we can dig up for you. I can definitely get that to you.
But you don't know right now.
I don't know right now, sorry.
Under the broad strategy, we will have more questions of the type that we ask. I'm looking at Ms. Lucchetti, but I have more questions on that a bit later. So before we get to those, does anyone who's there at the moment know whether any Australian diagnostic test manufacturers have who intend to manufacture rapid antigen tests have been funded by federal government to do that?
Senator David Williamson,
thank
Deputy Secretary. Ms Lenny might be able to assist, but certainly we have a list of a number of companies in that diagnostic space who've received sort of government assistance in one way or another, so we could take you through those. It won't necessarily be exhaustive, but we certainly are aware of some. You got those?
And so just to reinforce a point that I know you've actually had a discussion about this with Ms Looney before, but just for everybody else's benefit, it's worth recalling that, you know, in many ways a lot of that funding is targeted at the next innovations in diagnostic testing. We want to use the program to drive Australia's potential diagnostic industry up the value chain. And so a lot of the work that I think Ms Looney can explain is about finding the next innovations in diagnostic testing so we can get ahead of the rest of the world in the next innovations of diagnostic testing. That's what a lot of the funding is going to. Ms Looney can set that out, but that's kind of our mission here.
So I do understand what you're saying there, and there's a lot of medical research going on at the moment, particularly in Victoria, around the development of point of care. Exactly. Testing is a really exciting area, you know, potentially huge export area for us. But that's the medical research side of it. And now I am wondering about whether you're saying that's where you're focused, as opposed to when those ideas are ready to go and be manufactured, be made here.
Yeah, so I'll let Ms Looney explain that. Yes, I think it's both too. Yeah.
But as we point out in the modern manufacturing strategy, we're really looking at the high value added areas of manufacturing. So the first thing I'll just talk about is some of the work we're doing that is looking at where that technology development is happening at the moment and what that looks like in the future for Australian industry. So the government's providing $1.5 million, as I mentioned, to MTP Connect, which is the Medical Technology and Pharmaceuticals Growth Centre, to work with Pathology Technology Australia. And what they're doing is going to undertake a rigorous examination of the diagnostic testing landscape and identify gaps and opportunities and develop an action plan for establishing end-to-end sovereign capability for diagnostic testing and an in-depth analysis of in vitro diagnostic devices such as PCR tests and RATs, and having a look at the supply chain resilience around that. We're expecting that work to kick off in April.
Okay, so that's a new hub, if you like.
That is, and we can talk about technology that is closer to commercialisation. I think it's fair to say, and I have a range of things that have been supported to bring that technology that's a little further along the development path to market. So $3 million to WA-based Avencia Systems that was funded through the Modern Manufacturing Initiative translation scheme to develop a low-cost, ultra-high throughput LAMP-based screening system for COVID-19. And this technology will provide rapid results with very high precision. There was some funding of $6.3 million to a company called GBS APAC Proprietary Limited through the Modern Manufacturing Initiative again to build a new medical device manufacturing facility to enable commercialisation of the printable organic electronic biosensor technology. There was $742,000 to WA-based Alkalizer, which I think I spoke about last time I was here, and that was funding was provided through the $30 million commercialisation fund, which the Advanced Manufacturing Growth Centre is administering on behalf of the government. And the test that they're looking at will detect COVID-19 in asymptomatic and symptomatic patients within 10 minutes. Queensland-based Ex-Amin Holdings was awarded $647,000 also through that commercialisation fund to finalise their COVID breath test, which they call ECBT, and that includes a reading device and software application and will be manufactured in Australia using a local supply chain capable of producing commercial orders.
Thank you. Can I just, I'm not sure how much more you have there, but I'm just wondering whether those sorts of products that you just ran through and those tests are approved by the TGA at the point that you fund them.
So that technology is in development, and a part of where they go next I would imagine, include working with the TGA to ensure that they have the appropriate approvals in place to be able to operate.
So I thought the argument for not supporting local rapid antigen test manufacturers here was that there weren't any tests manufactured here that had TGA approval, but we are supporting other diagnostics that don't have TGA approval.
So as we mentioned, and I think the Secretary mentioned earlier, we're looking at emerging technology in this space that's being funded to continue its development. Some of the other manufacturers are already manufacturing, therefore they don't need the same type of government. They don't need government to work with them in the same way that these developing technologies do. So they're at a point where they're manufacturing or looking to manufacture in Australia, and therefore the things that they need to do is first and foremost get TGA approval to provide their tests into the market. Secondly, if they don't have a manufacturing site that exists, they also need to get approval for the manufacturing site that we're talking about. And the other thing I might mention, Senator, as you know, there is quite a large investment happening with the mRNA facility as well that's being established in Victoria for vaccines. So there is quite a lot of government support and investment in this space.
Yeah. Yeah, but government is supporting emerging technologies to be commercialised, manufactured that in the ways you've just described that don't have TGA approval, but you didn't do that for rapid antigen tests. You know, a year or so ago, a year before they were needed, when we knew we were going to need them.
So, Senator, I will mention that when, and I think that we spoke about this.
I'm genuinely sort of not seeing the difference.
So when those companies that we talked about last time that are looking to now manufacture were at an earlier stage in their development and their commercialisation journey, they were supported earlier through some support from the Australian government through various programs. But that was before they were looking to just manufacture their product. That was while they were in this development phase to get to commercialisation. So I would say the companies that you're talking about that we spoke to were past that phase last year when we spoke to them and looking to manufacture, not in that sort of...
What they probably needed was a supply contract, which would be the Department of Health, is what you're saying.
That could be possibly useful to them, yes. But that would be obviously dependent on the needs of each individual company, so I couldn't comment specifically on what would have assisted them at that point. But it is something like a supply contract that may be useful.
Okay. I've got a bunch more questions on moving to mRNA. Do you want a bit of the call, or
Senator Chisholm? How are you? Quite happy. Senator Walsh, continue.
Rightio.
Continue.
Hoping for a little chop out there. Okay, so on the support that government is... Oh, I've lost Ms Looney. Right. That's you. Right. You're mRNA. Yeah.
Yes.
Mr Lucchetti. Okay. So... According to your portfolio budget statement, $3 million has been set aside for building the world-class onshore mRNA ecosystem. Can you tell us about that? What does that involve?
Certainly, Senator. David Lucchetti, General Manager of the Vaccine Manufacturing Branch. That particular initiative is there to support the overall government investment in Moderna. And so the recognition is that obviously with the emergence and Moderna arriving in Australia, that this is an opportunity for us to build on Australia's strong research and development capability in the RNA space. And so this provides an opportunity for the government to actually develop an ecosystem which is not just related to the research side or the production side, but it covers off things such as supply chains, skilled workforce, etc. And so the department has $3 million over this year and next year to actually work on developing up a roadmap process that will actually inform that.
So that's an internal pot of money for
Correct.
Staff.
That's right. Staff to potentially run road shows, to engage some consultants to do some research, etc.
So, Senator, that sits alongside, but that isn't the mRNA facility in Victoria, which is, I think, depicted in the budget separately.
That's correct, yeah.
Sorry, sits alongside.
So the announcement last week, the Victorian facility in Victoria, that is not this $6 million. This is a broader piece of work on an RNA ecosystem, as Mr. Lucchetti said.
Yes.
The facility is depicted elsewhere in our budget papers, which we can take you to.
Where is the mRNA facility going to be in Victoria?
So that hasn't been finalised, Senator. There are a couple of sites that are under investigation by Moderna at the moment, and they're working with the Victorian Government to actually finalise the site selection process.
Yeah. And it's not publicly known yet what the two sites are that...
Correct.
So the funding, the $3 million that you talked about, your pool of money to set up this ecosystem is... it's discontinued because over the forward estimates because it's a specific project to set this work up.
It's a singular piece of work, and we will report into government with the outcomes of that, and that'll inform sort of future decisions, Senator.
How much has the Commonwealth committed to the deal with Moderna?
So that's not for publication. You probably noticed that in the portfolio budget statement, or budget paper 2. The reason for that is it's a 10-year agreement that the government has entered into with Moderna. It's hard to be definitive about what that final cost will be because the types of things that will influence the final price will be the types of products that are manufactured at the facility, the cost of those products, the exchange rate at the time, because we'll purchase them in US dollars, and then finally the number of products to be built at the facility.
Sort of wondering what... I understand that there are things that you can't tell us about this, but what is the government's investment in terms of the project? Is it in land? Is it in plant? Is it in incentives? What is it?
It's a variety of things, Senator. It's keeping in mind that the agreement also involves the Victorian State Government, so they're providing particular incentives and support for Moderna to be located in Victoria. The Commonwealth's investment will primarily be through the purchase of vaccines, but I really couldn't provide much more detail than that at this time.
So it's a supply contract, which I assume is that is known. And
that's right. We had 3 types of agreements. One is to establish the facility. One is for pandemic vaccine supply, and the other is for non-pandemic vaccine supply.
Yep. And how long term is the supply contract? Is that known?
Not at this stage. It depends. As I said earlier, it will vary, so it depends on our needs. So the first product that will go through the facility we would expect will be the COVID-19 vaccine that Moderna currently have.
Yep.
that will be influenced by the need in Australia at that particular time. So at the moment, the expectation, and Moderna is working to having that facility operational and producing vaccines by the end of 2024. So the government, through the Department of Health, will enter into a discussion with Moderna prior to that to identify what Australia's needs will be from a vaccine perspective. So, that could be a particular number depending on, where we're up to with the pandemic.
Yep.
The other things that are influenced, other products that potentially will go through that facility is flu. Moderna's working on a flu product that they've got in clinical trials. And so once again, that will potentially be influenced by the number of doses that the Australian government might purchase.
Is there a point at which it will be known and published what the supply contracts are?
So that's really a question for the Department of Health, Senator. To date, they haven't released the costings associated with the purchase of vaccines, but you'd have to take it up with the Department of Health.
I think it's worth noting too, correct me if I'm wrong, but there are still ongoing negotiations between Moderna and the Victorian government as well. Mr Lucchetti, ongoing negotiations with Victoria and Moderna as well, and they help drive the commercial and confidentiality as well. So that at very least they'll need to get concluded before there can be consideration to that issue.
That's correct. And the other thing that Moderna is aware of or is sensitive to at the moment is this is the first agreement that they've secured outside of their two traditional manufacturing hubs in the US and in Europe. And they have a number of other agreements that they're negotiating with other countries around the world, and so they're particularly sensitive to us revealing the details of our agreement because it may influence or potentially inform those negotiations also. But speaking to Moderna, they have indicated that they understand the importance of transparency, and so they have said to us that they're prepared to, engage in discussions at the right time to release some of that information.
Yes, I thought the Victorian government had released what their contribution was.
So Mr Lucchetti.
So they've spoken broadly about that, and it relates to helping support the facility's establishment also in regard to the ongoing maintenance of the facility, the pandemic preparedness. And then there's other investments around fill and finish from the Victorian point of view. They're also providing some support, I think, to assist with the ecosystem, skilled labour, etc. But none of those things have been finalised at the moment because, as the Secretary said, that's still under discussion.
Yeah. I guess, this is obviously a matter of, significant public interest, as I think you just alluded, and Victoria's, I think, published the nature of their contribution and the quantum. This supply contract or proposed supply contracts could be in the order of, $100 million or many billions of dollars. And do we have, I assume it's the latter, but do we have some, is there anything you can tell us about that? Quantum? Nothing.
There just isn't at the moment, Senator, and we appreciate your position, we really do. It is taxpayers' money, and there's a legitimate request for transparency, and I think, as to reinforce Mr Lucchetti's point, Moderna are conscious of that. We're conscious of it. The Victorian government's conscious of it, and so we will look for opportunities to maximise transparency as an enduring process here. For the reasons Mr Lucchetti said, now's not the time for that, as arguably uncomfortable as that is, but they are good reasons, they're legitimate reasons, and as I say, we sort of will hold ourselves to account to try to pursue transparency around those numbers as and when we can.
It just seems like it advantages Moderna in its global dealings for the Australian government to not release this information. How does it advantage the Australian taxpayer to not release this information?
Well, at its heart, it advantages the Australian taxpayer, because the Australian taxpayer has just secured Moderna to be a manufacturer here for the next 10 years on a very good commercial deal. And at the moment, part of that achievement for the Australian taxpayer is is commercial and confidentiality around the deal, but on understanding that that can't be enduring.
It's a very good commercial deal, though.
For the Australian taxpayer.
Yeah. Yeah.
Yeah. I mean, we have to make value for money judgments. So at the end of the day, our responsibility is value for money, and this is value for money for the Australian taxpayer.
So there's an unknown amount of taxpayer outlay, and in terms of government assessing it as a good commercial deal for government, that's around the value add, the income, the jobs, the securing the supply chain, those. Yeah. And can you tell us? Can you tell us?
More or less, you've done a good job.
Well, can you tell us a little bit more
Mr.
about?
Lucchetti can add to the advantages.
Certainly, and Senator, I'd just reiterate, I think part of the issue about being definitive about the costing is around, this is a 10-year agreement. We don't know our vaccine needs in 2 years' time. So depending where COVID takes us, we may, if there's ever a decision that, we need a fourth or fifth, round of boosters or whatever that may be, that will influence that decision. But also, hopefully we don't see another pandemic of another type, but that will also change the nature of the ask and the agreement that we enter into with Moderna. So all of those things, influence the final cost, where Moderna is in regard to the development of their products. But what we have been doing with this is we've been looking at maximising the deal for Australia, and it's not just through a simple transactional arrangement with Moderna to purchase vaccines. It's about how do we maximise this deal, and we've looked at mRNA. It's a new developing technology. It's probably considered the next generation of technology, and so therefore, partly through the $3 million that will be invested in undertaking a road mapping exercise and providing further advice to government, we're looking to position the government in a way, and position Australia in a way that actually allows us to take advantage of the types of technology that Moderna will bring to Australia, the types of research, and we've already seen that. I think just late last week, Moderna announced that they were entering into an arrangement with the Burnet Institute, I think it was, to actually share data and share information. So it's about building those linkages and building those partnerships with Moderna also.
I've just got a few, just for housekeeping, I've just got a few more mRNA questions, and then I suspect Senator Watt will have some modern manufacturing strategy questions. Everyone is looking forward to that. Ms. Lucchetti's ready.
My friend, Mr.
No, you're after Ms. Lucchetti.
Mr. Campbell.
He's there.
He's there. He's here. And Ms. Lucchetti's here for you too.
Mr. Lucchetti, you said that the facility is expected to produce the first Moderna COVID-19 vaccination in 2024, I think.
That's right. That's the intention. Yep. Yeah, that's what Moderna's working to, and they announced that last week.
Is there a month? Was there a month in that announcement?
No, there wasn't.
It's 2024. So because you have entered into or are entering into supply contracts, you're essentially agreeing to buy local as opposed to import these vaccines. This may be a question for Ms. Looney, I'm not sure, but it's been sort of mentioned before that government can't prioritise local facilities in government procurement. So there's just a general understanding that in relation to pharmaceuticals, vaccines, that government can prioritise local content, if you like, in its procurement. Is that right?
I believe it can, and certainly my understanding with the way that we've approached the pandemic, at least for COVID vaccines, is that buying local is important because it gives us, a priority access to those vaccines. And so that's certainly one of the drivers behind the decision to locate the facility here.
Yeah.
And Senator, just to pick up a point that Mr Lucchetti made in the generality, but I'm making the specific and reinforces a point I said before. Again, the strategy here is to go after the next layer of innovation, the next big thing, and mRNA is the next big thing.
Yes.
And so in many ways we're kind of throwing the policy kitchen sink at it in order to make sure that we can drive in at the next wave of innovation in this area and make sure Australia can catch that.
Yep. Do we know how many people will be working at the facility?
So we believe the figures that we have is that 500 people will be involved in the construction of the facility.
Yeah.
And then when it enters into steady state, it'll be 150 people. But these are highly skilled jobs too.
Yes. And so 500 in
the construction phase.
In construction, setting it up, 150 people ongoing.
Yep.
And we know, so I've seen these sorts of facilities. I understand they're very high tech and that you just don't see that many people walking around the production lines and so on. But within that 150, do we have an understanding of how many of those jobs are in production?
I don't have that detail with me. I could take it on notice if you like, Senator. I can find out for
appreciated.
you.
Yeah. I think that was all the questions I had on mRNA. And I think we are now ready for you.
So modern manufacturing strategy questions. That may, I think that's our last ones for industry, I think, isn't it? There's a few for resources, but...
yes, we're ahead of time.
We are.
Everyone is happy.
Excellent. Just before we get to the usual questions about job figures and things like that, are you able to... There have been some recent sort of public statements about the amount of money that has now been committed from the modern manufacturing strategy, which I presume includes some executed agreements. So do you have a list of the executed agreements and money that's been provided for each business that's received funding under the modern manufacturing strategy?
Yeah, so Narelle Lucchetti, Head of Manufacturing Division, Senator. There has been $923.5 million committed, publicly committed, and that's what you would have seen in media statements.
Yep.
Which is roughly 213 projects, and that's valued at $3.4 billion. And it leverages about $2.48 billion in private sector investment.
Do you
want to say that again?
No, I got that. Thank you. So when you say 3.4 billion is the
project value.
Total value of the projects that have been committed.
And 923.5 million is the commitment of funds from the MMS.
That's correct.
Right. So the 3.4 billion.
MMI, let's say.
MMI.
MMS. Sorry, MMS. Sorry, MMS.
So
it's Friday.
This is bringing back a lot of memories.
It is, isn't it?
It is. So the 3.4 billion that includes funding from the proponent themselves, is it?
Yes, that's correct.
So when you say 213 projects, are there executed agreements with 213 proponents?
That's correct, Senator.
Right.
So sorry, I think that's committed, just to clarify, Senator, I think that's 213 projects where there's a public commitment. And I think executed contracts will be a different number.
I'll get you the number on the executed contracts. Yeah, sorry, 143, sorry, Senator. On my next page. There we go.
143 executed agreements.
That's right, that's correct.
But 213 projects have been committed funding.
Yeah, publicly committed, that's right.
And so there's like 70 where an agreement hasn't yet been reached.
That's correct.
Right.
Yep.
It'll obviously take far too much time to get you to go through each of those 143 agreements, but do you have information there you could table? What I suppose I'm kind of interested in is under each pillar of the MMS, so the MMI, the Supply Chain Resilience Initiative, MMF Round 2, and AMGC Commercialisation Fund. I think that's the 4 pillars. What's the number of executed? In fact, maybe to start with, are you able to tell me the number of executed agreements made for each of those 4 pillars?
Yeah, so Senator, 34 of the 34 under integration translation have been executed for round 1.
Sorry, 34?
Of 34 contracts. So there was 34 successful in integration translation round 1 and 34 have been executed, so all.
Yep. Is that, what does integrated translation fit under? Is that MMI?
MMI, that's right. Yep. 25 of the 26 under SCREE round 1.
25 of 26.
Yep, under SCREE round 1.
Supply Chain Resilience Initiative.
That's correct.
Yep.
84 of 84 under MMF3 round 2.
24 out of 24, was
Sorry,
it?
84 out of 84.
84 out of 84 for MMF round 2.
That's right.
Yep.
Now, 55 projects with a total, 55 projects under the commercialisation fund. I'll just get a confirmation of how many.
We might have to take that on notice,
Yeah,
because that's being delivered by AMGC for us.
That's
Senator,
right.
So we'll come back to you on that.
That's the lot?
That's right.
So that gives me a total, so if it's 30, gives me a total number of projects of 249, being 34 for, I'm looking at the number of projects as opposed to executed agreements here, so 34 for integrated translation, 26 for SCREE, 84 for MMF round 2 and 55 for the commercialisation fund gets me to 249, I think.
I think that's correct.
Yep.
Does that, and I'm just comparing that to the other figures.
So, yeah, the 143, Senator, doesn't include AMGC. So do you want me to run through that again?
Yeah, it's 100, I can see it's 143 executed agreements excluding the AMGC, but the total number of projects, if you throw in the AMGC, is 249, and that's different to the 213.
So let me run through the 213 for you. So what makes that up? So you've got 34 under integration translation, like I said, 11 recipients under the collaboration stream, which have recently been announced. 27 under SCREE round 1. And I'll come back to that one. I'll get my colleague to explain that to you in a moment about the 27, which were grant recipients. 86 under MMF2. And then 55 under the commercialisation fund, which gets you to that 213.
Okay. The, as I say, would you be able to table, there's no confidentiality around the name of the business, is it, if there's an executed agreement with them?
There's no, on my, I'd have to take that on notice just to check around commercial sensitivities and things like that with the businesses. Most of the businesses are out in public, out in the media.
I mean, if they're receiving public funding, surely we have a right to know who they are.
Yeah.
But if you could table for us, how many executed agreements there have been under each of those pillars and which businesses they are with.
Yep.
And if you've got figures for how much each of those businesses is receiving, that would be useful too.
Sure. I'll do
Yep.
that.
So what's the dollar value of the... So it's 143 executed agreements. What's the dollar value of those in total?
So the dollar value of those, so under integration translation round 1, 206.8 million.
Yep.
Under SCREE round 1, 29.6 million.
29.6.
Under MMF round 2, 53 million.
Yep.
Under the commercialisation fund, which is 28.4 million, which is the one being run by AMGC.
So it's about 316-ish?
Yeah, 317.8.
317.8.
Yeah.
Does that mean that the remaining projects that have been approved but we haven't got agreements for yet are worth about 600 million? Because you gave me a figure of 923.5 committed.
Yep, that's right.
That's right?
That's correct.
Okay. So there's some big ones yet to reach executed agreements.
That's
Particularly
correct.
from
They're
the collaboration
they're in
stream.
the collaboration stream.
Yeah,
Right.
the bigger one that's been announced most recently, Senator.
Yeah.
Okay. And I don't follow the detail of this too much, but all of those projects have been announced and the proponent has been announced as well?
No, so for the collaboration stream, Senator, 11 successful applicants have been announced, with a total value of 601 million under collaboration. They've only just started being announced from the 1st of March, so we're in the process of going through executing those grants. There are more to come in that space.
Okay. So I think you said it was roughly about 317 million has been committed to the businesses that with whom there's an executed agreement.
Yeah.
Yeah.
Has all of that money been provided to those businesses?
So then there's the next breakdown. So noting when we work with the businesses, Senator, we work on milestone payments.
Yep.
So of those 34 that I said for integration translation, they all will have different milestone payments factored into their contract agreements. So working through that, 83.8 million under translation and integration round 1 has been paid to business. 5 million under SCREE round 1. 19.5 million under MMF round 2 and 5.1 million under the AMGC commercialisation fund.
So it's about 113-ish
113, that's correct.
is in the hands of those businesses.
Yes, and my understanding, so for integration translation, Senator, that all payments, first milestone payments have been made.
Okay. Okay, I think that's all I need on that front, but as I say, if you could table that info, and if you're able to, table how much, for the executed agreements, how much has also been committed to each business and how much has been paid to each business.
Not a problem.
How much the collaboration stream, how much did you say has been paid out?
So the collaboration stream has only just been announced, started being announced from the 1st of March.
Yep.
So 601.2 has been publicly committed.
Yep.
We are now going through the process of working with those businesses to execute those grants.
Okay, and sorry, go.
I was just going to say, you can appreciate the collaboration stream is complex, working with multiple partners, so we're now going through that due diligence and working with those businesses.
Yep. Sorry if you've said this already, but does that mean there are not as yet any executed agreements with in the collaboration stream?
That's correct.
Okay, which also means none of that money has been paid out yet?
That's correct.
Okay, thanks. I think that's probably all I need on that. In budget estimates last year, we were told that the government was on track to commit, I think it was $72 million in executed agreements under the MMS by the 30th of June last year. Was that achieved in the end? How much was actually committed? And I guess we're probably, under the strategy as a whole.
So, Senator, just checking, so you after the number for the 30th of June 2021?
How much was committed
under
in executed agreements under the strategy as a whole?
I might have to take that on notice, Senator. So, yeah, I just might have to take that on notice.
Okay, maybe if someone can just try and work that out while we're talking. And how much was in the hands of business under the MMS by the 30th of June 2021? I think we may have previously been told something like 5.9 million.
That's correct. Yes,
Okay.
that's correct.
Okay, so if you can come back to me on how much was committed as of that date in executed agreements.
Yep, will do.
And then in October, the estimates in October last year, we were told that the government had committed to $154.1 million in executed agreements, with $44.9 million in the hands of business. Does that sound about right?
I'd have to check that, Senator.
And when we were talking about this in February, the evidence was that $292.4 million in executed agreements had been committed to, with $85.2 million in the hands of business. Does that sound right?
I'd have to double check the record, but that sounds right. But I just have a double check, particularly the one from October, just in terms of executed, publicly committed, that type of thing.
So does that mean, what I'm just trying to get to is how much has been paid out, you know, at different points of time, and so is it, assuming those figures that I've just read to you are right, does that mean that between October 2020, when the strategy was first announced, and when we last spoke on the 14th of February this year, $292.4 million in executed agreements had been committed to?
I'll just have to double check that, Senator. I'll just have to double check.
Senator, you said when last we spoke, is that?
Yeah,
as in 14th, it would have been the February estimate.
I just have to double check what I, yeah.
Okay, maybe again someone can have a look back at that.
Yeah, we'll do, Senator.
Because one of the reasons so there was an article in The Australian on the 24th of March, about a week ago, which said that the government has now committed $925.7 million, which is pretty similar to that figure you told me earlier, 923.5.
That's correct.
But we should go with 923.5.
That's the most recent figure.
That's the most recent, yeah, that's
Okay.
right.
You don't know where that 925.7 figure came from?
It just could be, I'll have to have a look at it, Senator, yeah.
Okay. So that means that as of the 24th of March last week, we got to the point of 923.5 million committed. So again, assuming that 292.4 million figure was right as of the 14th of February, there's been a substantial amount of money committed in executed agreements really over the course of about 5 or 6 weeks, between mid-February and late March.
Certainly committed, Senator, because as we said, the first 11 projects from that collaboration stream have been announced, and that's the larger sums of projects.
That's right.
Right.
So we checked the exact numbers, but I think intuitively that's
right.
the
Yeah.
right.
So basically, again, assuming that 292 million figure's right, then between the 1st of October 2020 and the 14th of February this year, the government committed 292.1 million for the strategy, which works out at an average of about $583,000 per day. And then in the 38 days between the 14th of February this year and the 24th of March this year, the government committed around about 630 million at an average of 16.6 million per day.
But Senator, I mean, in fairness, I think we've given you that explanation. It's the collaboration round is what's driven that number, and you know that's the big lick of money. So so it's kind of it's an interesting comparison.
Has there been pressure on the department from ministers to get these things committed pre-election?
Senator, there's been pressure on the department from me to get this job done because it's the right thing to do.
I'm just trying to remember when this collaboration stream was first announced, what was said about when people would receive money, or I've forgotten when the applications closed.
So applications closed on the 9th of September.
Yep.
And then we've gone through a very rigorous assessment process.
Yep.
So an independent assessment committee was appointed by the department. We appointed 40 experts. So we had a core membership and then a technical assessment where we had people who actually represented the various national manufacturing priorities and had specialist skills. So over several weeks, those groups met and many of them reviewed the 86 applications that we got. Well, when I say that, it came down to 83 applications, eligible applications. They went through and reviewed those. So it's been a very rigorous process, I would say, Senator. Due diligence has had to be undertaken, going through and looking at financial probity and things like that. Also, too, when the assessment committee went through their process, they then met with IISA, who provided strategic advice in relation to those applications. And then we also had a process where the committee wanted to, shall I say, kick the tires on some of these projects and interview some of those applicants to ask further questions.
I've been reminded that when the announcement of this strategy was first made in 2020, that the 2020-21 budget originally profiled $380,000 to be spent in this election year, but then in the additional estimate statements, it was $429 million for the election year. Why was there such a big change from when this program was first announced?
So I have a sneaking suspicion that the change in that number is actually driven by us getting the program out at a slower rate than we had originally profiled.
I think
so.
That's
I actually think it's probably money going backwards through the forward estimates
reprofile.
into that year.
What? So the original expectation was that more money would get out, say, last financial year, than ended up happening.
So we've had that discussion here. I mean, that's a public record. We've discussed that multiple times. The hard thing here, Senator, can I be really frank with you? Because, these are never easy, these programs, because, you get criticised for doing them too slowly, and then you get criticised for doing them too quickly.
I don't think I've ever been critical of getting money out the door too quickly.
I'm not saying that to you.
There's been a whole lot of funds I'd like to see spent a bit more quickly under this government.
But that's the challenge, right?
Others, though, would raise
That's
due
right.
diligence concerns.
But that's the challenge, right?
Want to make sure that the homework's done.
And it's true. It is a
entered
balance, and we do our very best to strike the right balance between all necessary due diligence, which we need to do to satisfy our responsibilities, achieve value for money and look after the interest of the taxpayer, and the balance of keeping a program moving in order to achieve our policy outcomes. So it's a balance. At the end of the day, I'm accountable for that balance, and I'm satisfied with where we've landed.
So, Minister, probably best if I put this one to you. Correct me if I misparaphrase, if that's the right word. But the original expectation when this announcement was first made talked about a very large amount of money getting out the door early, but for one reason or another, it's been held up, and it now just happens to be much, much closer to the election. Isn't it reasonable for people to look at this and interpret that the government has put the brakes on until this money can be distributed much, much closer to an election?
No, I think as Mr Fredericks, the Secretary, said, the reasonable assumption to make is this is about getting process right and making sure that the right decisions are made, and officials who assess these projects do all the necessary work. I think that's exactly what the Secretary outlined, and I think that's the reasonable assumption Australians can make about the timing and profiling of funding as it ultimately is rolled out.
It just conveniently allows the government to wander around over the next few weeks dishing out large amounts of money with big announcements.
Well, I think we've already talked through the commitments that have already been made, exciting ones, and the right process has been gone through, and taxpayers should have absolute confidence that they're getting value for money and a proper process has been gone through in getting to this outcome.
But did I hear before, with the collaboration stream, as yet no agreements have been executed?
That's correct.
Which also means that the proponents have not yet been publicly announced?
No,
so there's 11 have been announced.
The first 11 have been, Senator.
How many more are there?
There's a number more. I don't know that number. We might have to come back to you on that.
Yeah, I'd have to come back to you on that, Senator.
But there are others to come. 11 have been announced. That's the 600 odd million that we talked about earlier.
And were the dollar figures for each of the proponents announced?
Yes.
Right.
That's
I don't monitor every one of these media releases. Yeah.
We'll capture that in what we give you.
Yeah.
Senator.
But there are more to come.
There is, Senator. And also, Senator, there is still round 2 of integration translation as well, 2 of the 1.5s.
So the successful proponents have been chosen.
That's currently under assessment, going through its process.
Is it expected that that assessment will be concluded before caretaker?
It's a matter for government, Minister, Senator.
But they're still under assessment by the department at this point in time?
It's with the decision maker, which is the Minister.
Right. So a few more announcements to come, Minister, just before the election. Hopefully you'll have better luck delivering them than a lot of the other announcements that get made.
Good process and good outcomes.
Yeah, I think was for the record. Chuckle from Minister Dunningham. Okay, let's get Mr. Campbell up. Your time is here. It'd be a hell of a lot easier if you just prepared answers to the questions you know I'm going to ask before you came.
He may well have. He may well have.
No. I'm talking to Mr. Campbell because he knows exactly
he
what
may
I'm
well
going to ask.
have.
I think you should assume he has.
Well, can you table the answers to the questions you know I'm going to ask, and then we can all go home. No, there's not much time for theatre today. I'll do my shock and horror later. So, Mr. Campbell, how many additional jobs can be directly attributed to the MMS expenditure and projects so far? This gets into that issue about people have got to report back to you. I've forgotten the exact terminology.
That's exactly right, Senator. So I can give you an update on the MMF round 1, which is outside the strategy, as you know, because we do actually have some more closure reports for that, if that would assist. So for that one, we have, of the 172 projects, we have 110 that are now completed their completion reports. And of the
110 completion reports?
110 are now complete. We have 105 reports, so there's still a few more to come back from that group.
Can I just stop you there, Mr. Campbell?
Yeah.
172 there's lots of different numbers flying around. 172 projects.
For the modern manufacturing round 1.
Okay. Oh, yes, and which is not part of the modern manufacturing
that
strategy.
preceded the strategy.
Yep.
That's right.
Okay.
So we've got the closure reports for 105 of those 172 projects. And that has brought the jobs number up from that program to 1,050 jobs.
Yep. I'm probably more focused on the 1.5 billion.
Yeah.
So let's not worry about round 1 because that was outside the strategy.
That's right.
So if we stick to the modern manufacturing strategy, the 1.5 billion, how many completion reports do you have in yet?
We don't have any completion reports.
None.
Yet.
So that means that we don't have any figures on the number of jobs directly attributable to this strategy at this point in time.
That's correct.
Right. So we can't actually point to any jobs yet that have been directly created from this strategy.
We know jobs are being created from this strategy. It's just that we haven't had a report back from the proponents on where they've got to with those numbers. So that would probably be a bit more accurate description.
When do you expect to start receiving these completion reports?
So I think, I'll have to check with a colleague, but I think it was certainly within the next 6 months, we'd certainly be expecting to see 1 or 2 of them come through for some of the shorter term projects.
Right.
Yeah, I've just had that confirmed. Yes,
Okay.
an initial batch towards the end of the year, I think, Senator.
Yeah, but at this point in time, because we haven't got, you say that we know there have been jobs created, but we can't point to any jobs in the sense of a figure, a number, that have been created from this strategy.
I can't give you a report, a job report that haven't gone. That's
Yep.
right.
Okay, thank you. I think that was the same answer as last time, wasn't it?
That's right.
Because it's not until we get these completion reports.
That's right, yeah.
So I was a bit concerned to see in the labour force figures released in February this year, they highlight a further decline in manufacturing employment from 1 million people in August 2021 to 854,700 in February this year. Are you familiar with those figures, Mr Campbell?
Yeah, I can take you through some of those figures if you'd like. Yeah.
Well, I suppose probably, Minister, how do you account for the fact that manufacturing employment has continued to fall when your government released a strategy in October 2020 promising to create 80,000 additional jobs in manufacturing?
So, I mean, obviously the government's intention remains to grow that sector and the number of jobs in it. That's why we are making the commitments that we have. But I think, as Mr Campbell already indicated, he'd be happy to take you through the contributors to the result you just outlined.
So it's, before we go to Mr Campbell, so it's still the government's intention to create 80,000 additional jobs in manufacturing. It's just that over the last few months we've lost 150,000.
So Senator, I'm happy to talk to the figures because there's a range of figures in the public domain from the ABS. So I think at the last estimates I described, there was about 3/4 of positive growth throughout last calendar year before we hit the Delta surge and the lockdowns in the latter half of last year. And then that came into the Omicron phase in the December-January period. So that's certainly having an impact on the numbers that we're seeing in the last couple of quarters. One of the challenges, though, and we had a lot of discussions with the ABS around the labour force data, is that it's purely respondent-driven from surveys. There's a labour accounts survey that they recommend that you use more properly to assess the stability of particular jobs across sectors because they match it to the employing business. And when they do that, you actually have an increase in the last quarter in jobs from manufacturing, which is that's a bit more consistent with the results we're getting from the AI Group Performance Management Index, which is showing high levels of confidence and higher levels of conditions in the sector. So that in recent, particularly in March, we've just had the results come out today for that, which point to a further increase in March for the index and a strong increase in the employment index, which jumped to another 9.9 percentage points. We also have quite a large jump in job vacancy data for manufacturing. So the job vacancy data has gone up 149.8%. Compared to the pre-pandemic levels. So the sector's quite strong. The confidence has bounced back after the Delta and Omicron waves, which is more in line with the sort of level of unemployment that we're now seeing across the economy more broadly, which is, as you know, the unemployment rates recently hit 4%. So I wouldn't want to put too much weight on just one measure of the sector. When you take it as a whole, and including the labour accounts data, which showed some increase, you start to see a more consistent picture.
But Minister, I mean, the bottom line is that the labour force figures do show an ongoing decline in employment in manufacturing, down to 854,700 in February this year. Are you still confident, and can you assure Australians that the government will achieve its promise to create 80,000 additional jobs in manufacturing?
And so, noting everything Mr Campbell said, we remain committed to doing the best we can, and we've got the goal there that you've already outlined, and that's what we're committed to deliver.
So you've actually got to kind of catch up, sort of it's well above 80,000 now. If we're going to see more people employed in manufacturing than what was the case when the strategy was first released.
And look, as Mr Campbell again has already outlined, we've seen some pretty extraordinary circumstances contributing to that, but we remain committed to creating jobs, and I think all the projects we've talked about will go a long way to helping us get there.
Okay. Sorry, I probably need Ms Lucchetti back up now, but thanks, Mr Campbell. I think that's all I've got for you at this stage. At the risk of asking you things that I've already asked, let's see how we go. So just starting with the MMI collaboration stream, I think you previously gave evidence that 86 applications were received by the 9th of September last year, and 81 of those 86 were eligible.
Yep.
And sorry, I don't think I've asked you how many projects were successful.
So 11 are publicly announced so far, Senator.
But we just heard before there will be more.
That's correct.
Do you know how many more?
I'd have to take that on notice, Senator.
So they have the ones that, there are others that have been selected but not yet announced, or is it more that there have been recommendations to the Minister for more that haven't been decided on yet?
They haven't been announced yet, Senator.
So there have been, there's a number of extra projects that have been just signed off by the Minister but haven't yet been announced.
So that's correct, Senator, yes.
Okay. Could we get someone to try and work out what that figure is? I imagine that's pretty easy to find out. And that'll be it then?
For the collaboration stream?
For the collaboration stream?
That's correct, yeah.
Right. And so 11 announced so far. When do you expect that the $800 million that's been set aside for the collaboration stream to be committed in full, as in contractually committed?
So, Senator, as soon as those announcements are made, we'll work very quickly with those proponents to execute those grants. So, noting with the collaboration stream, there are multiple partners, and I know I've previously said that, but many of them will have 6 or 7 partners, so we actually have to go through and do the due diligence on each of those partners, and so it does take us a bit of time to work with those businesses. But as soon as those announcements are made, that we'll be working very quickly to execute those grants.
Mm-hmm. And then MMI translation and integration streams round 2. So applications closed on the 14th of January this year?
That's correct, yes.
And how many applications were received?
There were
432.
Thank you.
And do we know how many were successful?
That's still under assessment,
Right.
Senator.
Is that the one that you were saying is waiting with the Minister?
Yes, that's right.
So recommendations have been made and it's now up to the Minister?
Correct.
That's correct, yep.
How many have been recommended?
I'd have to take that on notice, Senator. It's the process is normally. I can probably get Ms Mulder to come up and actually talk to the process of how these are done, if that's helpful.
Yep, just briefly, if that's okay.
Joanne Mulder, General Manager of the Manufacturing Division. So look, in terms of the process, as has already been mentioned, there is an independent assessment committee which is industry-led. Those members of that committee undertake the merit assessment of the applications. From there, that advice is then provided to the Minister. And an additional step to that is also the strategic advice from industry, Innovation Science Australia.
And do you know how many have been recommended out of that 432?
I'd have to take that on notice as well.
Okay. And this, you were saying before, it's really a decision for government about when they announce them.
Correct.
And sorry, a decision has been made on these by the Minister, or
no,
has not?
A decision's not been made, but
Okay.
yes, you're correct in that when announcements are made, that's for the decision of the Minister.
Okay, thanks. Supply Chain Resilience Initiative. So round 2 closed on the 17th of January?
Correct.
And how many applications were received for that?
Sorry, just got to get
29 applications, Senator.
And how many were successful?
So once again, that's under assessment for round 2.
Does that, is it with the Minister or the Department?
That's with the Minister.
Okay. How many have been recommended there?
It's this, again, actually, I'd have to take that on notice, sorry.
Okay. But, so there's been a recommendation to the Minister and it's with the Minister?
It's been merit assessed, correct, and advice has been provided to the Minister.
It has been more than 2 months since both of those programs had applications closed. we're going to see these before the election, aren't we, Minister?
Well, the Minister will make an announcement
when he gets the most bang for it.
It's so simple. Okay.
Just in terms of funding for the modern manufacturing strategy, Mr. Fredericks, would you accept the general proposition that industry does need certainty in order to plan for the future, make investment decisions as a general proposition?
It's the highest level generality, yes.
Thank you. If you didn't,
I like that phrase. I'm going to remember that.
If you didn't accept that proposition, I was going to suggest perhaps you need to be in a different department, but that's a matter for you. Would you agree that part of that certainty is having a long-term strategic policy agenda?
So at the highest level, yes.
Correct.
To be fair on that one, that is the work of the department, so you're right.
More seriously, do you think it is consistent with that need for certainty that that it's in the interest of industry for governments to allocate funding in a timeline that allows them to plan rather than aligns with government's election timeframes?
So it's legitimate. That is a perfectly relevant factor that needs to be brought to account. It's very fair. It's not the only factor though, because the other factor is the capacity of a department like ours to make sure that we do the proper process and the due diligence that we need to do on behalf of the taxpayer as well. So as you know, Senator, you know this well, I mean, our life is a matter of striking balance, sometimes between competing priorities. As I said to you earlier, I am comfortable that the department has done its very best to strike the right balance between satisfying the necessity for certainty for industry and for business as strongly as possible, doing that at a reasonable pace in making sure that the program has momentum, but ensuring that that's done, you know, in the most rigorous possible way to ensure that we're getting value for money for the taxpayer, because that's the accountability that we bear.
I must admit, I missed this in the budget, but I understand the budget committed a further $250 million over 2 years to extend the MMI. Does that mean we've now got a $1.75 billion modern manufacturing strategy? Or have I missed? Surely you wouldn't have missed the opportunity, Minister, to talk it up like that, would you?
We should give
Getting awfully close to $2 billion.
We should give you the exact numbers.
Senator, yeah, there were a number of announcements in the budget for further funding for the strategy. Get Mr Keddy to take you through them.
Well, can we just, in the interest of time, can we just focus on the MMI? Yeah. So there was $250 million extra for over 2 years for the MMI. Did officials within the department provide the government with any advice suggesting that time frame for that extra funding, that it should be over 2 years rather than anything more long term?
So Senator, we've got to be careful. That ultimately the time frame that's been arrived at, obviously it has been determined by Cabinet in the budget context. So we can't give you evidence as to our advice in that Cabinet context.
Okay, well, put it a different way. Can you explain to me the policy rationale in extending this program for only 2 years of the forward estimates?
Well, I don't think I can answer that, in fairness, because part of me giving you evidence about what the policy rationale is to explain to you what the advice is that we've provided to government in the Cabinet context.
Does it, I mean, given the conversation we were just having about the benefits to industry of longer term certainty for planning investment decisions, that kind of relatively short-term extension of a program isn't consistent with giving industry that level of certainty, is it?
Well, the thing I'd say about that again is we're once again centred in a world of balance. I mean, of course, the point you're making is valid and it's a relevant consideration. It isn't the only consideration. In these circumstances, cabinets need to think about more than just that issue. They need to think about impact on budget as a whole. And so, as I say, I just got to be careful because I don't want to infringe cabinet in confidence, and I can't. But I think it's fair to say that, you know, these decisions aren't linear, and you're bringing cabinet, just as I've described the balance I'm trying to strike in delivery of this program, cabinet's striking balances in that outcome, and it's a matter ultimately for cabinet.
Minister, I mean, isn't the reality that this is just another example in this budget of the government providing short-term extensions of funding for programs to get it through the election? I've just come from Community Affairs where there was a whole range of programs like that in health, where people have had programs extended for 12 months, 18 months, 2 years, not for 4 years. It's all about just getting through the election, isn't it?
No.
It's just a coincidence that you only want to do it for 2 years rather than 4.
Mr Fredericks has outlined to the fullest extent he's able to, the process the department goes through, and then of course there's a cabinet process attached to that. And I'm absolutely certain that recipients or proponents of projects who are successful welcome any further announcement for further funding, and I reckon there'll be some happy people out there around the announcements made in the budget. But Mr Williamson, did you?
Senator, I should just say, Senator, that the budget, I mentioned there were other measures in the budget. This goes to just timing, because the MMI was also extended for 5 years for a regional specific round of MMI. That's over 5 years. That's 500 million over 5 years, which was also announced. There was also a third round of the MMF that you're familiar with, which is another 50 million over 4 years as well.
Okay. One of the other ones that was announced in the budget, 6.9 million over 2 years to develop manufacturing investment plans to guide government and industry investment in national manufacturing priorities. Why is it that it's only now that the government has recognised it's important to strategically invest this kind of money to guide government and industry investment in national manufacturing policies?
So we'll just get Mr Pertel to assist in it, but this is actually not the first, if you like, strategic planning component of the strategy. You'll recall upon announcement there were initial roadmaps developed in each of the manufacturing priority areas. So these manufacturing investment plans that were announced in the budget are effectively taking that work to the next level based on the experience and insights gleaned over the last 18 months and further insights from industry. But Nick, do you want to?
I think that's the high-level summary, as you recall, Senator. I think we spoke about it at the time. Over last summer, effectively, between December and March, the year before last and last year, we did that very intense roadmap process that led to those documents that have informed the MMI and other funding processes for the last 12 months, but obviously those roadmaps were never intended to be static. And just as we did with the roadmaps, we want to work with industry to do the next phase, which is these manufacturing investment plans.
Okay. And what activities will this money be used for?
So, Senator, we will set up, we're at the moment, what we've been doing this for a little while, is looking at some of the international comparisons here. You might be aware, Senator, the UK sector deals is an interesting model, not I think entirely applicable in the Australian context, but has lots of useful elements. The Canadian supercluster process is also useful lessons from Singapore. What all those things have in common, while they're all different, is a mechanism, a kind of a governance mechanism of working with industry. So initially we'll set that up for each of the 6 national manufacturing priorities. And then we'll also do research, and we'll probably need to bring in some external expertise, I would suggest. That's where some of the money will go to do kind of re-baseline analysis of the competitiveness and opportunities and challenges of each of those 6 areas. And then we would expect, as part of that industry consultation, just like with roadmaps, while we might have a core and a governance function for each of the 6, the industry consultation has to be much, much bigger than that, and we need to travel across the country, functions like that.
Okay. In the budget, the government announced $328.3 million over 5 years to further support the MMS. How much of that has been committed as yet?
Sorry, the 320. So that's all new. Sorry, that's new. So I'm with you. That's
the new funding.
That's new funding. Yes.
Which presumably puts together the 250 million for MMI plus the additional programs you went through, Mr.
Correct.
Williamson.
That's exactly right. Yes, it's MMI, MMF, and the manufacturing investment plans, and also some additional funding for the Supply Chain Resilience Initiative.
So has any of that new funding yet been committed?
No.
No.
Right.
No, Senator.
And there'll be application processes for that, as there had been previously?
You would expect so, yes.
Okay. The budget papers also state that partial funding for this measure has already been provided for by the government. Can you just point me to where and how that's happened?
Senator, I think that refers to the funding for the investment plans, which I think was provided for in MyEFO.
That's the 6.9 million
Yes.
we were just talking about?
Yes.
That's right.
Right. Was that a decision taken but not announced in MyEFO?
Yes, correct.
Right. But that's the only funding that has already been provided for by the government that you're aware of?
It is. I'll just check with my colleagues. Just 1 second, Senator. Sorry.
Oh, yes.
So,
That's right.
Senator, there was $1 million for a manufacturing workforce strategy as well.
Okay. That was also in MyFO, was it?
That's right.
Right.
Yep.
Why does, in the budget papers, the boosting the modern manufacturing strategy appears as NFP in the budget? Why is that not being spelt out in more detail?
Senator, I think I can assist on that. Whenever there are constituent elements in a measure, a budget measure, one of those constituent elements is NFP, then the measure becomes NFP, and you'll notice there's a section at page 124 that says the government will address further critical supply chain pressure, and the payment by the department are NFP due to commercial and confidence sensitivities. So that's suggesting to you that there's one element which is commercial in confidence and therefore not for publication. So the line becomes NFP. That's just a function of the budget, but that's why the actual monies that aren't NFP are unpacked in the text.
Right. So does that mean that the government intends to address further critical supply chain pressures through some form of payments to particular companies, and those details need to be kept confidential?
So I can't confirm the greater detail. What I can say is there is an element of that is effectively divisional.
Okay. That article we were talking about in the Australian a little earlier, March the 24th, about a week ago, it was foreshadowed that the budget would include a manufacturing budget package worth more than $1 billion. But in actual fact, the new funding is only $328.3 million. Is that right?
Senator, so we'll take you through the parts, but what the 300 doesn't include is the amount for regional rounds of our manufacturing strategy. That funding appears in the regional portfolios PBS.
How much is that worth?
It's 500 million for MMI and 200 million for the Supply Chain Resilience Initiative.
Right. So
700,
you put that
sorry.
with the 328,
Yeah,
and
so
that's how you
that's
get to $1 billion.
That's correct.
Right.
And Sam, just to be clear on that, so we did reflect out the PBS because it's a legitimate point you make, because the monies are in two different portfolios, but we did our best to aggregate them in the PBS so you could see the billion in there.
Great. I think we're done on manufacturing. Thank you.
Okay, who's seeking the call?
Well, we've got good news and bad news. Don't cancel your dinner plans if you've got any, or make some if you don't have any. But we've got one area we need to cover left, which is critical mineral strategy. Is that something we can?
Yeah, we can do that now.
We can do that now. And then once we've done that, we don't have any questions.
Okay, excellent. All right, we'll move straight to critical mineral strategy, if we could. So, Deputy Chair, just for the guidance of department officials, that means no other questions once we deal with the critical mineral strategy, and we'll then be adjourning until next week.
Correct.
Okay. So, just for the guidance of departmental officials, you can of course feel free to stay and watch.
So I can excuse 1.1 and 1.2. Yeah.
You can excuse everyone bar critical people to critical minerals.
Okay,
critical people for critical
Thank
minerals. The highest level of generality. I'm going to remember that.
Yeah.
I was thinking of the opposite. The lowest level of specificity.
He's going to get a He's going to get a run on that somewhere. I reckon.
That's got to be reported in the media.
It was a definitive
somewhere.
yes, though.
Hey? Highest level of generality. Love it. Thanks, Jess.
Ready to go?
Yep.
So I note that the critical mineral strategy was updated, or update was announced by the Ministry in mid-March this year, which was an update on the previous critical mineral strategy from 4 years ago. Has the department done a report on the outcomes of the 2019 critical mineral strategy?
So, Anthea Long, Head of the Critical Minerals and Major Projects Division. So, Senator, we haven't done a formal report on the outcomes of the first strategy, but we've absolutely been, I guess, looking at the focus of that strategy and how things have been changing in the sector and more broadly, and considering, I guess, how to better articulate government's objectives in this space based on kind of what we've seen, the changes in the sector, and also, I guess, in terms of the objectives more broadly in terms of international engagement with partners as well. So the strategy sets out the government's priorities in a much clearer way, I think, than the previous one. It has a very clear and explicit vision by government and 3 objectives for the sector that the government has identified to reach that vision, which is around securing stable supply, developing sovereign capability, creating regional jobs and growth. It also, I think, more clearly articulates how the government intends to go about achieving that vision. So, for example, it identifies 3 work streams. And I would say that when the strategy first came out, that was at the very outset of the creation of the Critical Minerals Facilitation Office. And the office has been now in place for a while, and so this has enabled us to better reflect the work program of the CMFO and also the work that's being done across government to support critical minerals, because it's not just the CMFO and this department. We partner with a range of other agencies to achieve the government's objectives. So in terms of those work streams, we've identified 3 key work streams. The first one is around de-risking projects. The second one is around creating an enabling environment. So, for example, that looks at things like R&D investment, enhancing standards, encouraging shared infrastructure precincts type work. And then the third one is around strengthening international partnerships, which is a big kind of facet of what the CMFO and government is doing in order to improve collaboration and really to have those partnerships to support the Australian sector and secure commercial offtake agreements.
Okay. What I was hoping to get was just some clarity as to, aside from the new initiatives that were announced at the time of the release, what else has changed or updated as part of the new strategy?
Yeah, thank you, Senator. So one key thing that I should have mentioned is that the updated strategy includes 2 new critical minerals. So we have a critical minerals list for Australia, and we have added 2 minerals to that list. So that's silicon and high purity alumina. So this reflects the increasing importance of applications such as semiconductors and electrification technologies to the global economy. So that is a key change, and that was based on a range of analysis that the CMFO has done around the importance of these minerals.
So, were those though existing initiatives that were in place before the new strategy was launched?
Sorry, when you say those initiatives, which ones are you referring to?
Well, in terms of the ones you just ran through then, like, were they in place, or are they only new now as part of the announcement? Like, were they just added to the strategy? The department were already doing them?
So in terms of the activity to de-risk, do you mean as in the work streams, like de-risking projects and creating an enabling environment? Yeah, so absolutely, that there were elements of that work that were already underway. Okay. So this is a way of, I guess, really clarifying what that work is. And there was, quite a lot of activity underway under those streams already. However, through the budget and with the release of the updated strategy, that adds some new elements to those work streams. So, for example, there's the Critical Minerals Accelerator Initiative and the R&D Centre, for example, that all add to that work stream and contribute to the objectives.
Okay, and I was just about to get on to the Virtual Critical Minerals Research and Development Centre. So how will it work? What makes it virtual, and why is it virtual rather than being based in a physical location?
Okay, thanks for the question, Senator. So the Critical Minerals Research and Development Centre is intended to drive breakthrough collaborative research and enable the critical minerals industry to overcome technical challenges in line with the Critical Minerals Strategy. So the centre is going to build on our world-leading research capabilities, and it's going to draw together the expertise from CSIRO, Geoscience Australia and ANSTO. So CSIRO will host the centre, but the partner agencies involved, including this department as well, will contribute expertise and tools and participate in the research. And each agency will have a dedicated staff that will work on the centre. So it is virtual because it is bringing together the capabilities, the skills and people from across all of those agencies that are located in different parts of Australia.
Okay. So CSIRO is the lead agency, would that be
So I
accurate?
wouldn't characterise CSIRO as the lead agency. It is collaborative amongst all of those partners. However, they will host the centre and provide some of the basic administrative functions and things like that. That's correct.
And how will that work from a governance point of view then?
So I might need to take that one on notice, Senator.
When's this likely to be up and running? Is there a time frame? Sorry.
So we're looking at getting this up and running as quickly as possible. So in announcing the centre, the government noted its initial research focus will be on the two new minerals on the critical minerals list that I spoke about beforehand. And the centre is also going to undertake a strategic body of work to understand our critical minerals vulnerabilities, opportunities and R&D gaps, and that work will start very soon, Senator, and I might need to take on notice the exact time frames, but the intention is to kick off those projects now.
Okay. So there will be governance arrangements in place, but they're not done yet, or what's the sort of process?
So my understanding is that there is governance arrangements that have been discussed and agreed between the agencies. I just need to take on notice the detail of those.
Okay. And what about its relationship with researchers in universities and industries?
So the intention of this centre is for it to be very open and collaborative and work with other researchers, universities and particularly industry as well. So I mentioned we're kicking off a number of projects now. However, later in the year, the centre will develop proposals for a second tranche of collaborative projects which will be delivered with industry. And so there will be a lot of work to consult and engage with industry on those projects. And there will be an independent advisory panel that will comprise both industry and other kind of research university experts to provide advice on the proposals and the work going forward.
Okay. So will the Virtual Research Centre conduct its own research, or will it commission others to conduct the research?
So I think it could potentially be a combination of both of those, Senator. Again, it will be drawing on the expertise of the three agencies that I mentioned, but there is absolutely potential to collaborate, to join and partner with others and commission other work.
So the budget has set aside $200 million for grants under the Critical Minerals Accelerator Initiative for the next 5 years, which is roughly $40 million a year. How many grants per year does the government anticipate will be made under the Accelerator Initiative?
So I don't have that exact figure in terms of the number of grants, Senator. I can tell you that the intention is for the grants to be up to about $30 million.
$30 million each, or?
Up to $30 million each, that's correct,
Right.
Senator.
Okay.
Yes.
And how will the grant recommendations and decisions be made?
So, in order to support the Minister who will make a decision about the successful grant recipients, there's a number of, I guess, so let me just get the details. So basically, we've set up an expert advisory panel that will provide advice to the Minister on prospective projects and the focus of the program and things like that. There will also be an assessment panel that is formed within the department that provides advice to the Minister in order to inform his decision. And there could also be additional expertise, commercial advice sought on project applications to inform that decision as well.
Is there a criteria, or?
So absolutely, yes, they're guidelines which will be very much in line with the critical minerals strategy that will specify the criteria, as you say, for that.
No, not set yet. Guidelines?
So the guidelines will need to be agreed. That's correct, Senator.
Okay. And any sense of when that will happen?
So, Senator, so the government has actually chosen to act quite quickly, and so work on an initial closed competitive round is already well advanced. So strategic, significant early to mid-stage projects have been identified, and that was done using existing industry knowledge and analysis. It was supplemented by independent expert advice, and that round is currently in train. However, following this round, the program will move to a perpetually open model and will be more flexible around the timeframes.
So hang on a sec. Announcements are going to be made and grants are going to be given before the guidelines are in place.
So sorry, the guidelines for that closed round are in place. Right. However, the guidelines for the program ongoing in terms of that perpetually open phase are yet to be agreed.
Right. Okay. So you've already received applications for the Accelerator initiative under the previous model? Is that what you?
So under a closed round, a closed competitive round, we have received applications.
Yeah.
That's correct.
Okay. And how will those be assessed?
So they will be assessed in line with the process that I outlined previously. So there is an independent expert panel that have looked at those applications and provided advice. Similarly, we have an internal assessment committee that provides advice to the Minister and some commercial independent advice also.
And we're expecting those to be announced soon?
So currently that's with the Minister for decision.
Oh, there's a bit of that going on, isn't there, at the moment?
I'm sure recipients will be very happy when they get the good news.
Very, very busy, all that work that's gone on across the department over the last couple of months before the election.
Oh, and a lot longer too. I commend them for that.
Well, it
very
actually
good work.
hasn't been a lot longer because we've actually had evidence at multiple estimates that you haven't been at in your defence,
If
Minister.
you'd have heard
including the
previous
hiring
evidence,
of,
you'd,
including the hiring of
know that
expensive
they've been working hard
consultants
for the last 3
to be
years.
doing the assessment and some of these things as well. Finally, the Critical Minerals Facility is able to provide up to $2 billion of loans. Is the facility time limited?
I don't believe it. So, well,
Is
sorry.
that the facility, is that the DFAT
That's
facility?
correct.
Yeah, so Senator, that's over in DFAT with Austrade, the big facility from the FFO.
So it's Export Finance Australia.
Oh,
Yeah, sorry, EFA, yeah.
Yeah.
Thank you.
Thanks. Thanks,
Okay,
Chair.
thank you, Senator Chisholm. There being no further questions at this time, the committee's consideration of the 2022-23 budget estimates will suspend until Wednesday, 6 April 2022. I thank Assistant Minister Duniam for joining us at this hearing, and officers of the Department of Industry, Science, Energy and Resources portfolio. Mr. Fredericks, you were helpful to the highest level.
Thank you.
Who have given evidence to the committee today. Thank you also to Hansard Broadcasting and the committee secretariat. I declare the hearing adjourned.
Thank you for that, Chair.
Thanks, Chair.